Good morning and welcome to Traders Corner's Labor Day special event. My name is Anthony Chapman and it's a privilege to be your host today. Thank you for joining us. Settle in and get ready to hear some of the greatest trading minds in the trading industry. With an upcoming presidential election, the ongoing Israel-Hamas conflict, and possible interest rate cuts on the horizon, post-Labor Day of 2024 promises to create some great trading opportunities. On our panel today, we handpicked the industry's top trading experts to join us. They have agreed to share their most consistent and profitable trading strategies with us in a free online educational forum. Today's show is packed with great information and discounted labor special offers, so let's get started. Our first presenter is a favorite of mine. He's been a trader and trading educator for over 4 decades. He has over 1 million views with his YouTube videos, 4-minute drills for traders. He is a former commodity specialist for Payne Weber and has managed large trading accounts as a commodity trading advisor. Here to present their money, their money, your profit. The pros and cons of prop trading is Mr. Norman Hallett of the Disciplined Trader. Welcome back to Traders Corner, Norman.
Thank you, Anthony. Yes, their money, not ours. We don't want to risk our money.
Yeah.
You could, but why do it when you can do prop trading? Hey, thank you, Anthony. Let's get this party started. I promise I won't say anymore. My name is Norman Hallett. I'm a professional trader, and I help traders collect long-term income with prop trading. That's me in a, actually, that was almost a decade ago. I look exactly the same. This was a event that actually my company put on down in Miami. But just so you get an idea of who I am and what I like to do and how I help traders collect long-term income with prop trading. And Their Money, Your Profit is a site that I've just obtained in order to help you to collect money on a long-term basis. So let's go through some of the pros and cons of prop trading. I'm going to just get started because this is kind of a 1-hour kind of a presentation that I'm going to do for you in 45 minutes. Look, know that futures trading, which most prop trading is involved in, is risky and can result in substantial loss. Only risk capital should be considered, and further, past performance is not indicative of future results. After 4 decades, I can say this in my sleep. Although I'm awake right now. I went to the University of Cincinnati, that's McMillan Hall. Studied as an engineer until mechanics. Took me 3 times, three times taking that course to get a C, and I was a straight A student most of the time. I said, you know, this is not going to be for me. I added up all of my credits and left with degrees in mathematics. But in the meantime, that's a work-study school, so I was that's why I went to it. You go for a quarter and work for a quarter. It was on quarters and not semesters. I was in the restaurant. I was a waiter. Actually, by the time I graduated, I was an assistant manager, and then I was opening prom and wine restaurants. Opened one in Dallas, Texas, and I realized that after a while that it was food that wasn't making the money. It was the alcohol. So I was kind of bought out by a firm called American Events Corporation, where I was hired to put together the Park Avenue nightclubs. It was supposed to be the competition for Studio 54. Never really reached that status. I was only with them about 1.5 years. You can't be in that high-end disco type business very long and keep your mind. But it was, you know, they had everything. They had the dance floor and the dry ice in the basement was coming up, and it was fun and dandy. But again, it's a limited thing. I said to myself, hey, I can't do this any longer. Let's go ahead and use my math degree. So I did. My brother was a crazy fan of a guy named Harry Brown, the first gold bug, and so I wound up driving to San Francisco. Within about 1.5 years in the business, I was running an office of 60 traders who were responsible for, most of these were option traders at the time, and they were responsible. This is kind of what the office looked like. This is not an exact picture, but it's the only one that I could find. I think I took a Polaroid of my real office back then, but I can't put that up here. In any event, this is I was in charge of 62 traders, and it was really all about them doing well for their clients. And they had their own trading plans, and when they were in the bottom of the tote board as far as their performance is concerned, I brought them in to my office, and almost to the person. I was going to say to the man. We did have 2 women out of the 62. To the person, to the trader, the issue was complication. There were too many hurdles to jump in these trading plans. Too many. They couldn't get their trades off. And when they did, they were chasing them. It was just, so I'd have that red pen out, and it was all about simplifying their trading plans. I was hired then I was with this firm about 7 or 8 years, almost 8 years. And then I was bought out again by Payne Weber, who had me as a commodity trading advisor. But even that job involved not only trading millions for my clients, but it also involved selling them. And I just didn't like the whole sales thing. And I only spent about 1.5 years with them. In any event, that's in 2000, I formed what I call the Disciplined Trader. And the Disciplined Trader concentrated on the mental and emotional capabilities of traders, which is really the missing piece. So when I put together a trading plan, from my experience in that picture that I showed you right there, I always make sure that I'm being influenced by what traders, the breakdown that traders have when they can't control themselves. So I try to build discipline in the trading plan. Anyway, I've written several books over my career on trading plans. I think this one is still available on Amazon, How to Design and Construct Effective Trading Plan. I've had books written about me. You know, I'm the first one presenting today, and when I do presentations for traders for the trading expos and so on, they always put me on first because, as you can see, I'm kind of an up guy, and I believe you have to have positive expectation when you trade. And boy, this whole thing about prop trading, which I entered about 2 years ago now, I just couldn't believe that you can earn 90% of the profit that you generate from somebody else's money. Why do they do that? Because 90% of the traders that tried prop trading struggle with it. Same reasons they struggle with their own trading. So I'm going to show you how not to struggle and be in that top 10% where you can trade someone else's money and receive 90% of the profit. These are, again, the Disciplined Trader, Their Money, Your Profit, my recent love in this prop trading field, and that's what I want to help you with today. So today we're going to cover how prop trading is different than retail trading, what you do on your own with your own money, why traders use their current using their current trading plan is not working for prop trading, and the changes you need to make. And really the reason current trading plans that retail traders try to use is it's not efficient enough to prevent the drawdowns. When you trade somebody else's money, the parameters that they give you is a tight drawdown range. And when you don't have a lot of chance to take drawdowns, when that distance is a shallow distance, you really have to change what you're doing. I'm going to give you some tips before this is over. So whether you're new to prop trading or you're struggling right now with prop trading, or you're doing well and you want to do better, stick with me because I think the tips I'm going to give you are going to help you. Now the math, I'm also going to show you some of the math in this without really, hopefully not confusing you, that may make prop trading a logical choice for you. So if you're ready to go, let's get going. I won't be able to take questions here because of the brief time that I have to present, but at the end, I'll give you a link where you can find me. And after this presentation, I'll be, you can go to that kind of lower right-hand corner. You've seen it on a lot of the chat, and I'll man that chat myself, so we can talk there if you want, okay? So first thing I want to ask you is how much money did it cost you last year to trade? In other words, the money that you lost while you were trading, the cost of your platform, and the data feed. I want you to keep that number in your head. So, you know, if you lost $5,000 last year and it cost you, between your trading platform and the data feed, you know, it cost you $100 a month, or, you know, it's another $1,000, so you lost, you know, $6,000. Just get that number in your head, because I want you to compare that with the small costs, the monthly fees that I'm going to show you to trade someone else's money. So again, the data, and just as a note, the data feed and the platform are given to you free in prop trading, besides trading their money. So this is a prop trading. I commissioned somebody to look at the top prop trading firms out there. The winners were Apex and Top Step. I advise that you do either one of those if you decide to do this. But the proposition here, the categories that I asked them, that I asked the person that I hired to make this study for me, the criteria, the two top criteria: how long have they been in business? Because this is a relatively new thing in its expanded form, the whole prop trading idea. And two, are they paying out more and more every month? And Top Step and Apex were the top. If you want a copy of this report, just email me at admin@thedisciplinedtrader.com, and no obligation, I will go ahead and I will send you, I'll email you this so that you can actually read it. But let's zoom in on the winner, which was Apex, in my view. I did start with Top Step, which is a good firm. I passed there and did well with them, but now I have all my accounts with Apex. But if you look at these stats, and these were actually from last week, and they were even greater than it. But look, the average monthly compensation since January 2020, so the last 19 to 20 months, has been $13 million average that they pay out to winning traders. 13 million, a little over 13 million is the average every month for the last 19, 20 months. But look at this. This is the total compensation for the last 90 days. So they've been paying out $27 to $28 million. They've been paying out $28 million a month for the last 90 days, and yet the average is 40% of that, so to speak. So what I'm trying to tell you is that they are exploding with the money that they're paying out to winning traders. Since their inception, or close to their inception in 2022, they've paid out over $250,000. So you want to be on this train, I believe, and I want to show you exactly what I've done, what I've helped others do, and to create, to collect consistent income long term. So I want to also give you this link, thedisciplinedtrader.com/Apex. I've negotiated with Apex to give you the best advertised or unadvertised price. They'll advertise a price on their site, but sometimes, especially in the beginning of an offer or the end of an offer, sometimes they'll do it early and late, and I've been able to sneak in sometimes with people using my link to their best offer, advertised or unadvertised. So you can write that down also if you'd like, thedisciplinedtrader.com/Apex. Here is the zoom in of that chart. Just want to show, let's look closely at the $50,000. A good place to start, even though each one of these categories you can test for. There's two stages. You got to test for it in an evaluation stage, and then when you pass that, then you're funded. You're in the funded phase. Okay, so you can test for 25,000, 50,000, all the way. I've been testing for the 250s lately. I've already got 750s and a few 150s, and I'm testing for 250s right now. But that's for another discussion. Start with one. Start seeing money get into your bank account, and then go on from there. If you haven't started, the $50,000 account, I think, is the best way to go, because they only want you to, all you got to do is make $3,000 before you have a drawdown of $2,500. Okay, so let's concentrate on these two, on this nut. 3,000. So you've got to make the 50,000, 53,000. Once you do that, you're funded with a real $50,000 to trade, of which you're going to get 90% of the profit that you make. So 25. When I say 2,500, I think it's important to understand that they measure that drawdown from open trade equity, With that, so let's say you went ahead and you decided that you started trading, and you took on 2 contracts of the NASDAQ or whatever, and let's say you made $1,000. You were making $1,000 in. Let's say you take 1 contract of the NASDAQ. Your first trade, now that you've got the $50,000 evaluation account, so you put on the 1 contract of NASDAQ, and it's up $1,000, but you don't take the profit. You let it come back. you have a stop break even, and you break even. You still have your 50,000, but they count that 1,000 that you didn't take against you. And so instead of 2,500, now that floor is only 1,500. Okay, in the beginning, before you took that trade, you had a full 50,000. You could go down to 47.5. Now that you didn't take that $1,000, now you can only go down to 48.5. Now, so here is my first piece of advice to you, whether I never see you again or not. If you're going to prop trade, I think you should strongly consider always putting on 2 contracts and treating one as a scalp. In my example, if I put on 2 contracts of the NASDAQ and each one of them had $1,000 profit, and I took one, I treated one as a scalp, and then let that other one come down and stop me, and I stopped out, which you wouldn't want to do anyway. You'd want to prevent that. But in my example, you grab the 1,000 from one, and then you let the other one come down. You still have $50,000 in the account, but the fact that you took $1,000, okay, is measured against the 1,000 that you didn't take, and now you still have a $2,500 floor. I hope I didn't go too fast about that, but it's important to understand that when you prop trade, you need to be very cognizant of that red line, what I call it, that floor. So always having, and I've never been a scalper before this. All those people that you saw, there may have been 5 or 6 scalpers in that whole, out of the 63, but I've never been a scalper. I always like to get into a trade and then defend my profit, which I do with that second position. But the idea is that in prop trading, you want to maintain your distance from that red line. Why? Because the closer you get to the red line, the more your emotions come in. Again, very, very important. This is how I guide my people. Let's go through some of the math real quickly. So in the evaluation stage, they talk about $167 a month. There has not been one day this year. There hasn't been one day this year where I'm looking at the clock here. So I guess I'm 15 minutes into it. There hasn't been one day this year where, let's see, 10:30, 11:15. Okay, there hasn't been one day this year where they've charged 167. It's always been 70% off, 80% off, or 90% off. Right now it's 80% off. So it's never a monthly charge. While you're evaluating, while you're looking to make the $3,000 on your $50,000 simulated account, evaluation account, you're going to pay 80. You're going to pay 80% of this. So 80% of 67 is about 30. Call it $34 a month. You probably won't need more than a month or two, even a new trader, to make $3,000 on $50,000. But let's say you needed a couple of months. Okay, so let's look at the math let's look at the current case of 80%. So again, this is what the monthly fees look like at 70, 80, 90% off. So you're not paying 167, you're paying this. So let's look at the 34, okay? Now also, there's what they call a reset fee. If you hit that red line, you can pay $80 to reset that account, and now you're back to 50, you start again. So here's where they make their money. They're making their money on these small fees, and when you reset an account, after you bust out the account, you can reset it and start again. Okay, right now, that reset fee is only $40. So again, they look like they are very small fees, but when you have 85 or 90% of traders just paying these fees and not going further because they don't pay attention to the techniques that it takes to stay away from that red line, they're making plenty of money. Don't worry about the fact. Now, why do they give 90%? Why don't they give 50 or 80? Because they want me and you to be as happy as you possibly can to draw more people in so that they get their 90% of the people paying them the fees, because they know that most people, no matter what they do, they go back to their old habits. I want to help you change that, okay? So let's say it takes you 2 months to make $3,000 on your 50,000, and let's say you have 2 resets. So you paid, I'm sorry, this is the wrong, it's actually $184, I think. Yeah, it's $184. This is the wrong. So if it took you 2 months at $34 and 2 resets, $184. Sorry, Hey, I'm the math major. Don't correct me, but you can go. My wife said, you always want to be right. And you know, whenever we have I've been married 43 years, so we don't have many, you know, we learn how to get through any, we don't let anything escalate. And when it gets to the point where it escalates, my wife says to me, she says, you're right. And that ends everything. And so I say that, we say that to each other all the time. You're right. You're right. Anyway, I'm right. It's 184. Okay, so I just want to show you how small the fees are, but impress on you that you don't want to even be paying these. You know, once you pass, okay, once you pay the $184, if it took you this long to do it and you needed 2 resets, you now have a funded account. So what does that mean? There's only one charge actually in the funded accounts, and that's either when you pass, you immediately get an email that asks you to make a choice. And that choice is either pay me $80, either pay us Apex $80 a month for the lifetime of your account, where you're getting 90% of the profit you make. In fact, they pay 100% of the first 25,000 you make on each of your accounts. But let's just say 90 for the idea is that you're only paying $80 a month. Or if you really have confidence in that you'll be trading long term, you pay $140 one time, okay, and then there's never another fee. They're giving you Ninja Trader. They're giving you, but you may be able to use your own. They're giving you the data feed. Once you pay the 140, that is it. I'm not paying anything else, and neither will you, as you're profiting and getting 90% of your profit. Okay, so let's see what that looks like. I hope you're with me here and you can sense my excitement about this. I mean, when I first did this, is this real? Could this be true? And you know, I doubted it the whole time, but I went through it, and when I requested the first time I requested 1,000, then 2,000, and when it hit the first one that hit my account, I called my bank. I said, is this money real? Yeah, it's real. And it's been real ever since. So again, 244, that number is 284. So with this, it's $284 if it took you 2 months and 2 resets and now you have $50,000 to trade. Okay. Now the truth is that I suggest that you trade the $50,000 as if it's a $25,000 account as far as your position sizing is concerned. Because again, you don't want to get anywhere near that red line, because that's where you screw up. That's where your emotions come in. We'll talk about more than that, more about that if you come with me. In any event, let's take a look at the minimum balance requested. Let's say you're trading. Now you have a funded account. You need to build that account to 52,600. Once you build, I don't know why they picked that number. There are reasons. Once you build it to 52,600, of course, that red line 2,500 is at 50,100. Okay. Once you pass this number, okay, let's say you're in the 2 weeks, and you can request money every 2 weeks in the way I described. So let's say you reach 52,600. You can go ahead and take your minimum of 500 and a maximum of 2,000. Okay, you can withdraw. Now that's got a star next to it. I'm going to explain why in a second. But you can take out anywhere from $500 to $2,000. So let's say you take out 500. That's going to leave you at 52,1. That red line is still at 50,001. So instead of 2,500, now because you've taken money out, the 500, now that red line is 2,000 away. I don't suggest that you do that. I say you build this up maybe to 54, 55, then take 500. You still, because incidentally, in this phase, that red line doesn't move, 50,100. So I'm just saying, I know I'm giving you numbers and I'm not showing you the numbers, but just let me make it clear that that the more you don't take money out, the more you can build this up. Because if you can build this account, and you should be able to 60, 70,000, you can take, even if you don't trade that month, there's no obligation to trade. Every couple of weeks, every 2 weeks, the 1st and the 15th, you can request money. You take out the money, okay? And so that's what you do here. And the thing is that if you build it out to 60 or 70,000, you can take out $2,000, not worry about being next to that red line, because that red line is still at 50,100. Also, I want to say that the asterisk is this, that at $50,000, I'm sorry, I say you can only take out $2,000. Once you request money from them 3 months in a row, not 3 pay periods in a row, but let's say the 1st of August, the 1st of September, the 1st of October. Once you take out, all of a sudden, there's no limit on how much you take out. So you build this to 70,000. You want to take a trip to Europe, buy a couple of first class tickets, take out $10,000, because now you only have, now instead of 70, you have 60, but the line is still at 50,100. So it really gets better and better as you do it. So I wanted to show you that. And how much can you take out? This is what I just told you. You can take out as much as $2,000 twice a month. Again, but that limit is dropped. Okay, so enough about that. I think once I want to get you going, I want to get you qualified, and then I want to get you to pass. Then I want to get you to pass that 52,600 on your way to requesting money. But I like the 50,000 because it's easy to jump that hurdle. And I want money in your account as quickly as possible. That makes it all real for you. This is, and I've seen this from the people I coach, once they get their first check, then it all becomes real, and they really, that confidence accelerates their earnings. So I do want to just mention that they allow you to have as many accounts, as up to 20 different accounts. You can have 20 $50,000 accounts. You can have 10 $50,000 accounts and 10 $250,000 accounts if you want. That's for another discussion. But when we talk about long term, you want to get a few of these accounts in there. But they have something called trade copy. I mean, how do you manage 10 $50,000 accounts? Well, a trade copy, you can just say, I want to put this trade, this 5 micro Nasdaqs in an account, and boom, and you can, with one click, you put them in all the accounts. A lot of the people that are making 100,000 a month, and there are many of them, do it this way. They have several 50 and mostly $50,000 accounts. Some of them have 20 of them, and they put in the same trade. They make one trade at $300, $3,000. There are a few of them like I like to do, and that's have different the same position when I get a trigger, but different intensity. And maybe I'll put three micros in one and 6 micros in the other 5 accounts. So that kind of thing. And then you can have different trades in different accounts. There's many ways to do it. Diversification. We can go through this when we're working together, but let's get you to the 50,000. Let's get you to pass and get you funded. Let's get that money in your account, and then we can talk about other things. Okay, so here's the 3 keys to prop trading success. I just want to give these to you, and then I want to make you an offer to work with me one-on-one with me. Okay, a frequent, reliable trigger. You need, and I mentioned before that I'm very much into the mental part. This is where most people screw up. So if you have a reliable trigger to me is a trigger that gives you a pop, something that once you put it on, that it will pop in your direction enough to take a scalp, okay? That's the reliable part. The frequent part is that this trigger occurs at least a few times in your trading session within, a couple of few hours of trading, so that you know, and if you only trade an hour a day, like many of my people, you truncate the time. You look at a 2-minute candle chart instead of a 5 or 10-minute candle chart. So I can teach you how to do that to get your frequent. But you want a frequent trigger, because that frequent trigger combats any fear that you have of that you won't be patient. Listen, if you're sitting, you want to make money, you want to be in the trade, but when you're not getting a signal, you start to stretch your rules so that you can get in and get some action. Listen, I'm a person that does like the action, but you need to do it in a responsible way. And to do that, you need a frequent, reliable trigger, okay? And that's true, especially in prop trading. You need a scalping element. I've described why, and so I want to emphasize it here with these 3 words. And then you want profit preservation on runs. So I always put on, and I advise you to always put on at least 2 contracts when you enter a trade. And if you put on 5 contracts, because that trigger occurs in a situation where it's very, very advantageous and increases your possibility of a run, then you want to scalp the first one, because you never know, and you want to take that scalp and pad your distance from the red line. And then when and with the other position, you want, I call it a runner, but you don't want that $1,000 in my example to come all the way back to break even. That's a mistake people make. They put in their stop and they say, well, either I'm going to make a lot of money or my stop's going to be hit. No, you've made money, you've got open trade equity, defend it. So at a certain point, as your profit extends, you want to preserve that. So frequent, reliable trigger, a scalping element, and a profit present, and you want to preserve that profit on runs. Okay, I just took this from today's trading. I always take, whenever I make these presentations, I don't cherry pick. This is today's action. Now I had to, because this is an early, this is 1 o'clock in the morning, and maybe if you're in India or China, and there are plenty of people that I work with people all around the world, but this is a loaded gun simple trading plan trigger. This is one of the triggers that we use. And I can't get into what it is. This is a golden moving average. And I'm not going to give you the people pay and they commit to me for their success to make this happen. So I'm not going to give you the details except for to show you a frequent trigger. This is a frequent trigger, and one would have taken it. Okay. Now I say I don't want to breach this moving average on a closing basis. So when I look at a trigger, this extension bar helps me to determine what kind of scalp I want to take. I would have taken that scalp right around here. So you would have taken your scalp here, moved your stop, which we originally had here, to break even to the top of the trigger. And now you're riding this. Look at this move. Beautiful. Until we got another trigger. It's a reverse of this. It's not as dramatic. So the scalp would be on a much shorter basis. You would have taken your scalp here, right? And then you would have been stopped out of your second position. So here we had a nice scalp winner and a nice runner winner. Here we had a scalp winner and a break even on the second position. And as we continue, the next trigger is here, of which we would have had a scalp right around here. Our stop is here, and you can see another winner. And and right here is where we would have been stopped out of the second position. So now we have 3 scalp winners and 1 runner winner. Here's a losing trade. This is a trigger that didn't work, never ran, never popped, never a losing trade. Okay, you're going to have them, but look at this is about the percentage. You're going to get about 67%. This is a very long-term study for the pop, and so this is really perfect. It's actually a little bit better than perfect. Here's another trigger that you would have gotten your scalp, and so it's important to have scalps when you're dealing with prop trading. Okay, 1, 2, 3, 4 scalps, 5 scalps, and a nice big runner, okay, and 1 loser. I would have had a tremendous morning, and so would you have. Even if you woke up at 7 o'clock, like I started 7 o'clock, you would have had the loser and the winner, and you would have been on your way. Here's another one. You don't see it, but it worked out really well. In any event, I just want to show you what a frequent, reliable trigger is and how well it works. This is an RSI. We use it for position sizing. I can teach you how to do that. Okay. Now, the prop trading firms will fund you for 50, 100, as I mentioned. I showed you all. This is what it looks like when you start, when you pass and they send you a certificate. It's kind of fun. I mentioned passing with Top Step 2 and earning some money. But here's what it looks like. I was in the restaurant business. This is the first one that I took out in May of last year. I think I asked them for $1,000. And this is, I hang this just like we used to hang the first dollar that we made in the restaurant business on the wall. I have this hanging on my wall, but each time you take out money, they give you another certificate. Anyway, it's just kind of fun to show you. Anyway, but here's my offer for passing the prop valuation and getting funded. Okay, the loaded gun simple trading plan. I know I'm going fast, but I just want to impress on you that this is what I'm about right now, helping traders collect long-term income through prop trading. Okay, loaded gun simple trading plan. I give you the core loaded gun plan. It all fits on 1 sheet of paper. Okay, there are 2 videos. Between the 2 of them, they're not even an hour and a half. All the rules fit on 1 sheet of paper. Simple. The videos even have a bunch of chart demonstrations after I give you all of the simple rules, okay? Then I give you what I call the nuances. Again, this is the mental and emotional part that most traders will ignore or say, I can do it if I have a good system. No, you need to recognize the fact that we are human, and that because if you look back at your own struggles in trading, it's usually that one trade, that one situation, that one day where you jumped off your plan. These nuances are optional. And there are 7 of them right now. I'm testing two others right now, but there's 7. I don't think they're 10 and 15-minute videos. Each one gives you a technique on how to It's an optional, and I'm not saying this is not a discretion, this is a rules-based thing, but you can apply this rule before you start trading and then run with this rule. But the rule is based on who you are as an individual. Let me give you an example. If you're a person that has an issue with patience, and you want to be in a trade as much as you can, then there's a nuance that will help you to be in more trades, that you don't have to wait around and do the wrong thing as you're getting bored, okay? And there are ways to stay in trades, and so there are all kinds of nuances to approach your individual needs and recognizing those needs as a human being trader. I hope I said that right. Okay, and then we have these monthly get-togethers where at the end of every month, the last Wednesday of the month, we all get together and we talk about our successes, we talk about our experiences and our recordings. We should have had it today, or I'm sorry, yesterday, but with the holidays, we're going to have it next week. For those that wondered what happened. In any event, we have it every last Wednesday of the month. We all get together, share our experiences. It's all recorded. If you can't make it, you get the recording. And listen, you always have email access to me. So, if you have any questions, you missed the meeting, not a problem. Well, we all have the one. I'm going to show you this bonus right here because this is important. It's a bonus that I give you with the course, okay? With the simple course, it's a unlimited one-on-one coaching. You can meet with me as many times for 90 days. 90 days. We purchase the Loaded Gun Simple Trading Plan, and you'll get an email with a calendar link where you'll be able to schedule a personalized one-on-one walkthrough with me, and I will proceed to learn about your trading background, just like I did with those 60+ people, and advise you how to get a quick start on your new purchase. Now, as you perfect your running of the plan, I'm going to be there if you need me with as many one-on-one coaching sessions as you need to pass your evaluation and beyond, okay? And I will be there every step of the way with you. And one note here, if you purchase today at the special price, because the price of Loaded Gun is going up, when you have a trading plan that works and you have all the testimonials that we have, the value increases, and the investment that you make is a reflection of that value. Right now, it's a certain, I'm going to show you what the investment is, but it's going up. So if you're thinking about this, if you've seen me before, don't wait, do it now. But I do want to say that this 90 days starts with our first meeting. So if you're taking a vacation the next 2 weeks, go ahead and purchase, look at some of the videos, start to get familiar on your own time, get back from your vacation, look some more, maybe on October 1st, whatever your timetable is, then schedule your first meeting with you. Go to the calendars. We'll have our first one-on-one meeting. That's when the 90 days start. So don't think if you buy now, I have so many things, I'm going to be gone for a month. I'm really only going to have 60 days. No, the 90 days start with our first meeting. And the truth is, most traders only need 1 or 2 meetings with me. Some of the newer traders more, and that's fine. Whatever you need, I am here for you. My intention is to get you to develop a consistent, long-term collection of income for yourself through prop trading. Okay, so let me go on with my offer to you. Again, the Loaded Gun Simple Trading Plan is plus the one-on-one coaching. And the fact that you have my back has made all the difference. I know I've only met you twice, but that's all I needed to understand your process. It's a whole new world for me now. Ronaldo was a relatively new trader. He only needed 2 sessions with me. It is a simple trading plan. We get a little bit more into it along the way. Once you start making money, I can show you how to even do better with it. But I want you to get started. I don't want you to fear. I don't want you to say, I have to learn this before I get started. You can learn all of what I have to teach you in a very short period of time. Once you start with the income in your account, then let's go and do some of the refining together. So Ronaldo, terrific guy from LA. Here is Mike, who said, I passed the Apex 100 evaluation in 4 days using Loaded Gun. Mostly scalping, but a few runners brought it home. He was originally a scalper. I wasn't, so it was big for him. I still have a few trading days to finish, but I made $6,000 in 4 days this week. Great trading plan. Thank you so much. Mike is an experienced trader that was struggling. Now he's a part-time trader from Atlanta. But I love Sandra because she was a trader with experience, and really has the talent. I know, and most of the traders I bump into that commit to me, they have the talent, but they just can't realize it. I'm making some progress now, and I really credit your guidance and your voice in my head. I now have 3 funded accounts. She has more now. With Apex, requested my first small payouts from 2 of the accounts. She requested the 500 as I advised her, and now she's from Yakima, Washington. And finally, what I want to show you today is just, there's plenty on the offer page, more that you can see, but Ken is a more aggressive guy. He said, please share this with my wife, that since funding my first Apex $50,000 account last Thursday, he's got 5 more 2 days later, this Tuesday. Only took him 2 days. And on those 10 funded accounts, he made a profit of over $21,000 of real money on the NASDAQ. God bless. So richly, God has so richly blessed me. I included this particular one because I think because of this last line, I think you got to be thankful for the opportunity. Whether you're, an atheist or, but you got to thank that. You got to thank the higher power, and of course, thank yourself for doing the work and making it all happen. Okay. So a second bonus, I want to set it up. I want to set it all up for you. It's a data feed, and it can be confusing. I'm going to have somebody jump into your computer. Okay, I'm going to connect you with my young genius who'll jump into your computer. He'll set up NinjaTrader if you don't have it already. He'll set up the data feed. All you have to do is start trading. Okay, and Roger K, who I charge $150, but I'm including it here for this particular service. His cursor darted back and forth without explanation. Anyway, he ended up feeling, Roger, who paid the money, $150, he thought he got a bargain. And so I'm including this for you. I don't want anything stopping you from doing this, because this is, it sounds like a dream, and it is for many. I know, I just cannot, I'm flabbergasted by the opportunity. All right, here's the anniversary special. My anniversary special, let's call it also the special for you here. Loaded Gun Simple Trading Plan, the core nuances, the monthly get-togethers, the 2 bonuses, okay, of the coaching, one-on-one, unlimited number of hands-on setup. But my personal guarantee, I'm confident that you're following my Loaded Gun Simple Trading Plan will result in your getting funded by your firm, so that you can risk their money and not yours, and then receive 90% of the profit you generate. Just share your trading experience with me, that you followed the simple rules and it didn't work for you. Show me it didn't work for you, and I will refund your money plus $500 for your time. I've never had to do this. I don't expect to have to do this, because you can never show me that it doesn't work if you follow the rules, and they're simple rules. But this is my ironclad guarantee. Okay, so here's my offer to you: the Loaded Gun Simple Trading Plan, which is offered on the site right now for the quality right here that you're getting, the value that you're getting, an extremely reasonable $24.97. You get the core, the nuances, the monthly meetings, the unlimited one-on-one coaching for 90 days, the done-for-you setup where you don't have to worry about it, a total value of $5,247. Right now, we're offering it for $24.97. Again, this is going up, but for this Labor Day special, and it's early Labor Day special, I'm taking off 50%. $1,247 is your investment to work with me and get this dream come true for you. It can be a dream come true. Listen, you've got to put in the work, so to speak, but I have made it very palatable for you. It's a simple trading plan, and I will be with you all the way, okay? Their money, yourprofit.com. Use this coupon code. It's good for today. Early LD, okay? Labor Day, early LD. That's the coupon code. If you have questions, go to this site, and I will be on the chat in about 2 minutes after I end this, in about a minute. A minute and a half. So if you've got any questions, I'll be on that chat. Let's work together and let's get you going with this. Why risk your own money when you can make 90% of their money, okay? But because of the calendar limitations, because I'm offering the unlimited one-on-one, I can only take on 5 traders at a time when I have room. Right now I have room for 5 traders, so the first 5 get this deal. If you are the 6th, you will see something come up, and it'll be a waiting list kind of thing. And so maybe next month, the month after, I can help you with that. But right now, whenever we have an opening, but don't worry about that. Get in quickly, and let's start working on it now. You can watch the videos over Labor Day and then a week later, 2 weeks later, you can make your first 90 visit with me. That lasts 90 days. Okay, that is my offer to you. I'm so glad that you spent your valuable time with me, because really, in trading as in life, time is valuable. So I hope I get to work with you. Again, it's my intention, it's my calling right now to get struggling traders to collect consistent profit from this prop trading. So thank you again. Thank you, Anthony, for having me. I hope I didn't talk too slowly, Anthony.
Thanks, Norman.
Okay.
We do got some questions too in the chat box.
Okay, can you read them to me?
Yeah, let's take a look really quick here. 140 lifetime for the next 20 years, for example. Not sure what they mean by that.
Once you pay it once, you can trade as much as you want forever, and you'll never have another fee that they request from you, except for the round term fees.
This is from Edward. Minimum number of trades in a month for each account? Question mark.
No, in fact, there are several of the $50,000 accounts. As I'm experimenting and working on it, I haven't traded them for almost 2 months, and they're qualified. They're qualified. No, there's no rush to. I mean, if in the evaluation stage, you're paying those small fees every month, but in the funded phase, no. Once you pay the 140, that's it. You can sit on that for 6 months and go to a desert island and come back and start trading it again. So there's no minimum trading.
And Namra asks, do evaluations have a lifetime fee?
Evaluations don't have a lifetime fee, but don't worry about it, because like I said, it's only $34 a month and $40 to reset. So again, I think if you're too worried about that, it's a fair question, but I think you got to listen. Traders in general have to think big. You have to learn how to think big. You have to learn how to defend and think big at the same time. And that's a kind of a juxtapositioning that most professional traders that all professional traders learn to do, and that you're going to have to do. They seem to fly in the face of each other, but understand that that's important.
Okay. And can you have a copier program?
Apex, there's plenty of copier programs out there. I'm right in the middle of testing them right now. They all seem to be about the same, and their copier program, of which they have specials on it, I think it's $150 for their copier program at Apex. It's good enough. They're always trying to improve it and whatever, but don't worry about this. I think try anyone that you see and see for yourself.
One more question. If you have 5 funded accounts, do you just pay the 140 lifetime once?
No, you pay it for each of those accounts. It's an excellent question. Now you're having the opportunity to pay to be trading $50,000 5 times. So you know how to save money? Just test for a $250,000 account, and then you can pay your lifetime once and have $250,000 to trade. You won't be as diversified, maybe, but so another good question. Thank you.
What are the fees per round turn? Also, can you trade stocks or just futures?
Just futures, and the round turn. It's interesting because I can't get, and don't hold this against me, I don't even look at it. They change a little bit, but it's about $1.50 a side. About $1.50 a side, maybe $2. But you see, I don't care, because I know that, I know that that's not an issue when you're, if you're taking a scalp of $100 and you let the other one run for $300. Whether I'm paying $1.50, and I'm not criticizing you with that, but don't worry about that. That's in the past for you. Don't worry about that. There's no difference. Now, if you're somebody that takes on, 10 micros, that may have an issue. But even then, I think you're going to wind up seeing that it's not. You're talking about $150 a side is what my last time I looked.
All right, last question. How many trades do you typically take in a normal trading session or day?
How many trades? I'm going to interpret that figure as how many triggers, how many times does that trigger occur? I like to trade from 7 o'clock to 12 o'clock Monday, Wednesday, and Friday, and I do a whole lecture on the importance of minimizing the shorter time frame that you have to trade, and that's a pretty long time frame, 5 or 6 hours. The more focused you are on running your trading plan correctly. Too much trading time, you start to dishevel. So the question in my 4 or 5 hours in a 5-minute chart, chart, I'll usually get 4 or 5 signals in that 4 or 5 hour period. And I use a 5-minute. If I have a trader that only trades for 90 minutes a day before he goes out, and he's a sales manager, he only trades for 90 minutes. I suggest that he uses his 2-minute candle chart so that he can get his frequent reliable triggers more frequently, because it's a shorter term chart. So I can teach you how to expand and contract time frames and so on. Very easy to do, not a problem.
Well, thank you, Norman. Congratulations on your success as a prop trader. Great information, and your presentation was certainly enlightening. It's always great to have you on Traders Corner. Over 1 million views on YouTube, ladies and gentlemen. That was Mr. Norman Hallett of thedisciplinetrader.com. That's thedisciplinetrader.com. And Norm, if there's any special offers or anything, if you could put those in the chat box as well.
Well, this one here is the offer. Their money, yourprofit.com, and just use the code EARLY D. Very good.
Okay, thank you so much. We really appreciate it, Norman.
Thanks for having me.
You're welcome. Thanks for being here. We're off to a great start, and I want to keep the ball rolling with our next presenter, who is widely recognized as the world's most disciplined option trader. He has been actively trading options for more than 23 years and has published daily insights for his trading trainer program participants every single night, 5 days a week since 2002. Ladies and gentlemen, here to present a proven comprehensive option strategy to escape the trading pitfalls is Mr. AJ Brown of Trading Trainer. Welcome back to Traders Corner, AJ.
Oh, thank you for having me. And just a quick note, if you guys, Norman is fantastic. He's been around since Hammer was a hatchet. I mean, that guy with the Discipline Trader and now with the new Loaded Gun program, you have got to give Norman a look.
For sure. Thank you
Love
so much,
that
AJ.
guy. Love that guy. Okay. Hey, a proven comprehensive option trader. Yeah, they call me the most disciplined option trader. I actually think behind my back, they call me the laziest option trader. I like to think of myself as the most efficient option trader. Listen, in the 90s, I looked at my lifestyle and I was like, you know what? I can't be a day trader. I got too much going on. At that time, I had a pretty important job at Hewlett Packard, and I wasn't going to be able to do, intraday trading unless I had some sort of, somebody doing it for me. So I had to think outside that box. And so I'm going to be talking to you about how I got to those conclusions. I'm going to be showing you a lot of trades. In fact, why don't I also do this? Because I like to be up close and, with you guys. You can minimize my screen and you can move the screen I'm sharing so it's nice and big, but I like to look at you guys right in the eye. So with that said, let's come on over here and go through a couple of facts. First of all, a lot of uncertainty going on. There's this crazy election going on. There's skirmishes all over the world. What's happening in the markets, if you play it right, it can set you up for months, if not years to come. And the key is understanding that despite what the talking heads have been saying all these times, they're like, oh my gosh, today this much money was destroyed in the markets, or this many people lost their money. Money isn't created or destroyed in the markets. It simply changes hands. So the key is being on the correct side of that equation, right? So first thing I always like to ask is what would be most ideal for you? Because I can tweak my presentation today. Are you here to learn how to invest for low risk and high return? I call that learning how to fish, be self-reliant. Are you here to learn how to invest and have seasoned investors look over your shoulder and review your investments before you make them? I call that learning how to fish, but have expert fishermen right there to help. Or are you trying to just follow behind a seasoned investor and do what they're doing? I call that fishing alongside expert fishermen and doing what they do. Which one is that? Or it could be something else. So if you don't mind, put into the Q&A area or into the chat area A, B, C, or D, and that way I'll be able to tune the presentation. And as I'm waiting for those answers to come, I do want you to take a look at this particular chart. A couple things I'd like you to notice here. First of all, this is not a linear graph from left to right, is it? It's compounding, right? It's growing parabolically or exponentially. I like you to notice that this is the zero line, right? It's hard to see because it wasn't labeled well on this graph, but that's the zero line. And so we've got a range low and a range high. And the range low stays below the zero line just over here between 1 and 2. Range high stays above and it goes up exponentially. I'm going to revisit this graph, but I wanted to introduce it to you because it's kind of the basis of the whole options trading strategy that I'll be sharing with you today. So let's get moving. First of all, I reversed engineered what it would take to double my portfolio. And so the scoop is I know a lot of folks are always talking about doing these trades that double quickly, quintuple, whatever. But I focus on earning 6% on my money every month. That's the number I shoot for. You know, if I get better, great. I aim for the moon. I might get to the stars, but 6% is where I'm at. And if you do that, then through even simple, not even compounding, but simple compounding every month, your investment more than doubles every year. So if you start with $1,000, a lot of people in my program come with about, $1,000, $2,000 in their trading account. After 12 months, it's more than 2,000, right? And after 2 years, it's more than 4,000. 5 years, they're at 33,000, just like short of that. And in 10 years, they're a bona fide millionaire. Now, mind you, when I was a kid in the 1970s, yeah, I'm 51 years old. When I was a kid in the 1970s, a millionaire, you'd see that on Chips or you'd hear about it on Three's Company, and you'd be like, $1 million, that's like out of the world. But the scoop is these days, everybody's a millionaire. The key is how do you get to being a 10 millionaire? So the other thing I like about this whole thought process, because this is what I did, right? I started trading in the late 90s. I actually didn't have much success until 2001, and I learned that trial and error is the worst way to go about learning. The best thing to do is to do guided discovery, follow somebody else's footstep who not only is as successful as you want to be and is doing what you want to be, but can also teach, right? That's one of the big things I learned. I've hired coaches that obviously they'd show me their portfolios. I knew how successful they were, but they couldn't convey their information to me. God bless them, but they weren't teachers, and you need to be able to learn. If you want a shortcut from being, a 5-year process to a 6-month process on how to be self-reliant in your investing and trading, guided discovery, trial and error. Although it's a thorough way to learn, it's also expensive and takes a long time. So one of the other things I like is, right, if you grow your portfolio to $100,000, right now, the median income for a salaried position that's working 40 to 60 hours per week, right? The median income in the United States is $87,000. Now, of course, if you're on the blue or the red, one of those coasts, right? The left or the right coast, that's a lot more. But over the whole it's 87. But if you grow your portfolio to $100,000 and you're generating, focusing on that 6%, you're going to generate more than $101,000 per year. That's way more than the median income. And if you're efficient, if you're an end of day trader like I am, that's not 50 to 60 hours per week, 40 to 60 hours per week. That's, the scoop is, and you're going to think I'm crazy being 51 years old, and I just shaved, so I look like I have a baby face. I'm looking in the camera, but the scoop is I have a toddler. She's going to be 3 years old. She was born on October 31st, so she's going to be 3 years old this Halloween. And I like to spend my whole day with her, right? We hang out at the pool, we go and do all sorts of activities. I don't know what I'm going to do when she starts preschool this year with my time, but the scoop is when she's asleep, she goes to bed about 7:30 to 8. I have some time with my wife, and then at 10 p.m. is when I sit down, I evaluate my watch list, I see what signals have come, and then I program my automatic bot traders for the next day. And then I'm not doing any that's what the whole efficiency thing is all about, and that's the type of trading I do. So what am I talking about today? I'm talking about something called selling theta decay optimized option premium. Holy moly, that was a lot of word salad. But the scoop is I'm profiting on time passing by, and so are all the people in my program. So first of all, I like to make sure you've been paying attention. I've been talking at like Mach 5. What minimum returns must we make monthly on our portfolio to more than double our money annually? What was it that I said? I just want to make sure you're paying attention. Is it 0.5%, 1.5%, 5%, 6%, 10%? Do you guys remember? Type it into the Q&A. Okay. Seeing a couple of different answers, and if you didn't pick 6%, fine, write that down in your notes or take your electronic notes now. The answer is 6. There's no trouble with wrong answers because I'm going to wind up giving you the right answer anyway. But if you do participate, you'll get the most out of today's presentation. So what about this? I'm talking about equity options here, indexes, ETFs, stocks. Aren't they risky? Well, the scoop is, unless you're trading some sort of derivative, you can make money pretty much, the old adage, buy low, sell high, buy the thing and then hope it goes up in price. If you're a little bit elegant, especially with the equities, and you know how you have a margin account and you know how to short, you could also make money if it goes down, right? But the scoop with options is you can make money in all three directions if things go sideways. In fact, watching the markets, I'm just throwing my charting software up there right now for you to see. We just entered into this sideways choppy and I forecasted this on my YouTube show. My YouTube show has been going for 2 years now. You can look us up at Trading Trainer on YouTube every Friday morning at 11 a.m. Eastern. I think that is 8 a.m. Pacific time. We have our YouTube show, plus you could watch the replays. We've been going for 2 years. I've been forecasting this sideways choppy market since about May. And so we're in it. And so you need to know how to make money when the markets go sideways. A lot of the directional traders are finding themselves, with mixed signals now, having to trade faster, having to be present all the time in front of the computer instead of living life. That's not my idea of fun. The other thing that options can do is make money when you're trading sideways. And also options can make money when there's fear versus confidence in the market. In other words, with stocks, equities, ETFs, bubblegum cards, antique cars, there's really one or two ways you can make money. With options, the last time the mathematicians looked at all the permutations, 27 different patterns you can make money on. And so that's why I chose options, is because I want to be able to trade whatever the market throws my way. I don't want to have to work on timing signals and have to be, if you're doing Forex, for instance, you're up in the middle of the night. That's not my idea of the type of investor I want to be. I'm more about the destination than the journey. Okay, so a lot of people are saying, okay, you've piqued my interest. Can you explain this option? I've heard about it, but don't really know. Well, again, with the geek speak, financial instrument, it's a derivative like a future. They're typically bought and sold to hedge risk. But the scoop is what we're doing is we're selling their premium to generate income, really reliable income. Options expire, monthly options expire every third Friday of the month. Weekly options expire every Friday. So every third Friday of the month is like payday for me, right? When those options expire and I get to keep all the gains that I've made for the previous month. So how do we sell this premium? We focus on 4 simple transactions. Please write these down. We're writing covered calls, right? We're writing covered puts, and take a note on this one. This is flipping the covered call upside down, and I don't have as much time as I'd like to be able to really cover, covered puts as well as I'd like to today. So please do me a favor, and if this piques your interest, this presentation, please at least go on to Google and go through the process of learning how to write covered puts, because in the, I would say at least in the next 12 months, if not for the rest of your trading career, covered puts are going to be a critical part of your, toolbox of trading strategies. I also like to write covered calls against leaps. I call it supercharging my covered call writing. So instead of a stock, I'm going to write it on a leveraged option. And for you option experts out there, you nerds like me, we call those a variation or a part, a subset of bull call diagonal debit spreads. One of my favorite. And also, we like the corollary writing covered puts against leaps. So that's supercharging your covered put writing, the bear put diagonal debit spread. So those 4 transactions are what we focus on, legging into them specifically. And I also want you to put like some marks next to the first one, the third, and the fourth. Covered calls, the bull call diagonal debit spreads, and the bear put diagonal debit spreads, because those can be done in your cash accounts, AKA even your retirement accounts, right? I do a lot of these for the tax benefits in my traditional, my Roth IRAs. Even in Canada, you can do those in your RRSPs. So keep that in mind. You only need a cash account. Now, this guy over here requires a margin account, but what's really nice is that if you don't have a margin account and you just have the cash account, that bear put diagonal debit spread can usually done and get the same, react to the same patterns in the markets and get the same effect, and that's a cash trade. So just wanted to make sure you put some notes next to those 3. So first of all, I keep talking about this thing called option premium. A lot of people call it the time value of an option. I hate that name. That's simply because there's a lot more into it than the time value. The academic term is extrinsic value, and that's in contrast to an option's intrinsic value. If you really want to nerd out, I call it in the money value and premium value. And when you take any of those option prices that are up on the board going up and down, realize that there's a component of in the money or intrinsic value added to a component of premium or time value or extrinsic value, right? And what we're doing is we're selling that premium value component. So take, for example, I pulled these when I was preparing this presentation, which was Tuesday night after the market closed. I put together these slides. AT&T closed at $19.65 per share. So if we bought some AT&T and then sold these September $20 calls right away, we would get 21 cents back. So that reduces the price, right? It acts as a discount on the stock price for us, right? It also creates for us an instant dividend. Options are sold in lots of 100. So if we get 21 cents a share, 100 shares, we get immediately a $21 instant dividend. Now, it's not a dividend like a company give out on their stock, but we do get that $21 kickback to us. And what's nice is that acts as an expiring coupon, right? Because as we get closer to September 20th, the value of that goes to 0. In fact, on September 20th, the premium value of that is 0. That's one of the things, a lot of people say you can't get away from death and taxes. Well, there's a third one for us option traders, and that is on the expiration date of options, their extrinsic value is always 0. That no matter what's happening ahead of that, it always goes to 0. And so that's what we're playing off, that time ticking. Okay, let's run through these scenarios. So what happens if AT&T, if it closes above $20 on September 20th? So we paid $19.65. We get $20 for getting exercised, and realize September 20th is less than a month away. It's about, about 20, 21 days from now. We get our 35 cents profit there. We also got to collect the 21 cents discount for selling that call up front. We get 56 cents a share profit. That's 2.9% for that transaction for the next 20 days. Now, what if AT&T is flat? That means it goes sideways. It's sideways choppy maybe. And this is actually my ideal case because I keep AT&T, or I bought AT&T. I got the 21-cent discount. I got to keep the 21 cents. I got my 1.1% ROI for the month, and I'm going to do it again and again and again. In fact, my program participants and I, on average, do this 5 times before we're either exercised or stopped out. So we just keep collecting the premiums without having to buy the stock, or in the case of covered puts, shorting the stock again. So it's kind of awesome. Now, a lot of people are saying, well, can it go against you? The cool thing is yeah, I buy 19.65 per share for AT&T. I get my 21-cent discount. That lowers my break-even price to 19.45, and you can see there's like a half penny. I actually got that call for 20.5 cents. So you can see my math might look off by a penny, but really there's a hay penny playing around in there. So the scoop is there's actually a profit buffer. Now, in about 5 minutes, I'm going to give you an additional strategy in order to reduce your risk on reward even further. But just know built into these strategies is a bit of a profit buffer, right? Because I have to get, AT&T needs to drop all the way below 19.45 a share before it's even in the red. So let me show you actually a real world example. That was just something that we used end of day prices, but this was Ford. And so on January 29th, I bought 900 shares of Ford stock. And then on February 16th, all these green rows are me selling premium. So February 16th, I sold premium for 23 cents. The yellow rows aren't actually me doing anything. This is on the 3rd Friday of the month, and it's where the option expires worthless. That just happens automatically. So the only activities, we talk about being an efficient trader, I did some trading on February 19th, April 9th, April 26th, June 3rd, July 9th, about once a month until I finally got exercised on July 19th. I just kept selling premium, collecting 20 cents, 80 cents, 35, 45, 26 cents. I wound up getting exercised at $13. I walked away after all of this time, get this, with 30.4% ROI on my buy. I mean, that's pretty awesome. And not only that, check this out. I'm back in, right? I just bought stock on August 13th. I bought, this time the price is down on Ford. If you guys haven't been paying attention, they're pulling back on their EV. I actually bought a Ford Lightning truck. It's out there in my home office driveway. But I got it at a big discount because people aren't really adopting EVs like they thought they would. And I've already sold my premium. So we're waiting for September 20th to see what happens. But I got 37 cents off of that Ford stock. And a lot of my program participants followed me in this trade. So it's kind of exciting. All right, that's a covered call. So let's make sure we're all on the same page. Again, I like to quiz kind of comprehension. And there's more than one answer here. So what do you think? What does investing by selling premium create? An investment, an instant dividend? Does it give us a discount on the security? Does it act as a profit buffer? Does it act like an expiring coupon? What do you think? A, B, C, D, answer all that apply. Go ahead, type it into the Q&A. Steven's got it right. He just typed it in. Yep. Yep. All of them. So again, just jot that down in your notes. It's all of those things. It acts like an expiring coupon. Like when people like the Boy Scouts come to your door. The Scouts come to your door. I don't think they're Boy or Girl Scouts anymore. Scouts come to your door these days and they sell those book of coupons. The people who put their coupons in there are hoping that you never use them because then, they get to keep that money, right? You get it? That's what we're doing here. Okay. Now the questions are going to start getting harder, and I'm going to start asking you before I present the concept. How can we lower our investment, increase our returns, and even convert a margin trade into a cash trade? Should we sell farther out in time options? Should we replace the security with options trading at parity? Should we give up and buy mutual funds, or is what I'm talking about not possible? What do you think? So what we're going to do is we're going to replace the security with options trading at parity. We don't want to, a lot of people think that it's number A, right? Sell out in time options. Actually, as you go farther out in time, you know, increasing the amount of time that you have on that option, like instead of the September option, you might be thinking, well, why don't we just sell the October? The amount of premium you get for that extra 30 days is just a little bit higher. It's probably better, in fact, it is better to sell the September and then in September sell the October. You'll get almost, you know, more than twice the amount that if you sell the October now. So A isn't the answer. It's actually we want to sell the underlying, replace the underlying with an option trading at parity. So you might be saying, what is this option trading at parity? So options, when they're at the money, that's when their premium is the most. But when we go deep enough in the money with the option, it creates a whole different being, right? And we target less than 5% in the money value, less than 5% intrinsic value. In other words, that was a lot of word salad. Let's break it down. The deeper in the money we go, the more that the option acts like the stock. It moves dollar for dollar. Like for instance, if stock goes up $1, so does this deep in the money option. It also goes down the dollar, but it's at a much cheaper price, right? And you might say, okay, you're using the substitute options. Options have an expiration date. How far out should we go? Well, what you don't want to have happen is you don't want to have this substitute option expire while you're continuing to collect the incomes, because then that would ruin your whole income stream. And I said that we kind of are at that 5 month. That's about as long as the bell curve. But it also, we have quite a few that go 6 or 4 months, even 7. In fact, a lot of us have options that go out 8 months. After 8 months, it's more of a rare case. So we kind of go back and say we need to go far enough out in time so that we get all of those potentials for selling premium. So we say go at least 8 months out. You might want to write that down. And we typically use the leap options if we can, because those have more liquidity, right? People can buy and sell them easier. So let's go through that AT&T option. Now, AT&T has a very liquid options chain. There's lots of people trading options. It's one of those big ones. So it turns out the April 2025 option, more than 8 months out, it's going for $9.70, less than half the price of the stock. That's the $10 call, and you can see it's almost 100% in the money value, right? There's very little premium left over in that. And that's what we're trying to do. It's often called the poor man's covered call, right? So if we do that same example, but we use this substitute back month option, we pay $9.70, we still get that 21-cent instant dividend back. Go through the 3 scenarios. What happens if it's above $20? Well, we paid $9.70. Now, you'll notice we only get $10 back, and that's because now that we're using that substitute option, we get the difference between the 2 strike prices. So that's why when we get exercised out, you get the difference between the 2. That's why it's called a spread, right? So I get $10. I've made 30 cents profit. Don't forget I got the 21 cents profit up front. So now I'm up to 5.3% ROI. That's much better than doing it on the stock, right? But what about the more, the situation I like best, which is if we're flat. Here's where we keep the 21 cents. We made 2.2% ROI so far. We're going to do it again and again and again. And of course, there's always the scenario of the profit buffer. This thing has to go all the way down below $9.50 for us even to be in the red. That's our profit buffer. So let me show you actually One more example. This is actually on AT&T. So that's ironic, but this is the real trade we did on AT&T. Same thing, but we used a substitute option. And you can see I paid $6.05. This was back in November of 2023, December 10th, January 8th, February 2nd, March 22nd, June 5th, we got exercised out. I wound up walking away after about 6-7 months with a 56% ROI on buy. I mean, guys, this is real life trading here. Okay. Want to remind you that we're focusing on the 6% per month. Last piece of the puzzle, how can we drastically reduce our risk on return? Should we sell half as much option premium? Should we sell farther out in time options? Should we collar the investment by marrying a protective option, or is what we're talking not even possible? This is where I'm going to show you how we can boost the risk on reward with just a couple of extra steps. Yep. Collar the investment by marrying a protective option. So remember I showed you this graph up front? This is this last live trade, and this is like a textbook trade, guys. It actually went more than 8 months, but I want to focus on a couple things. First of all, I bought some Pan American stock, and then I bought 600 shares. Then I sold my premium, but then I bought a protective put, right? Look at what happened. And I did that on exactly the same day. I did them right after each other. So I do 2 transactions, sell the premium and buy the protection, right? You need the protection. That protective option protects you passively instead of actively. You don't have to use stop loss orders against the stock going against the whole trade. The premium expired worthless. And then here's the cool part. We rolled out of the protective option. And because of the way we purchase it, we rolled out at a profit rather than a loss. A lot of times when you hear about people using protective options, they do it at a cost to the overall position. But because we're applying the protective option only when we need it, which is when we sell the premium, right? When you sell the premium, that's when you're under the obligation to perform. That's when you need the protection. Because we're buying the protective option when we sell the premium, we get it at a discount. And then when we roll out of it, we actually now, not only do we get the protection from September until September 24th, almost a whole month of protection, but then it actually adds. So we made $1.76 on selling the premium, and we made $1.15 on rolling out of the protection. It becomes like the frosting on the cake, a second source of income every month, and it really boosts the ROI of the position. We did it again. Look, $1.47. Then we bought the protection at 301, sold it when we didn't need it anymore at 362. So we made $1.47 on the premium and another 61 cents. That's the second month. And we just kept doing rinsing and repeating, rinse and repeating. But the other cool part is notice the protective put is at a strike price of $34. That means it protects us if the symbol goes below $34. Notice what happened shortly after the first month. Our cost basis is below $34. So what does it mean when your break-even price is below where you're insuring the position? It means that you now have a risk-free position. You're guaranteed profit even if the position goes against you. A lot of people ask me about my win-loss ratio, but because I'm trading the clock passing by, I just need the clock to go a little bit, and all of a sudden it doesn't matter whether the position goes against me or goes for me because I'm guaranteed profit. Take a look here. This is a graph of that position, right? So here's my break-even price. This is the number of months along the x-axis right here. And so shortly after the first month, the position became risk-free. If we go the average time that our positions last 5 months, I mean, if the position goes for me, I get 65% ROI. If it goes against me, I still get 50% ROI, right? So whether I get stopped out or whether I get exercised, I don't care. I don't care if the underlying position directionally goes against me or for me. I'm still going to walk away with a lot of profits once the clock has hit a certain place on the timer, right? And this is, I put a line right here to show you exactly where it crosses the zero. Between, after you sell the first set of premium, it's all good. You just keep, rolling out of the trade, and you do 1 or 2 transaction days a month and you're good to go. It's kind of cool. Okay, so what do we have? We're going to wrap this up. What do we have when our cost basis, our break-even price, is less than our protective bailout price? Risk-free investment, losing trade, too much complexity, or maybe we're smoking the crack pipe. Unless you were living during the 80s, you probably don't know what that means. A pipe dream. Yeah. It's a risk-free investment. Okay. Here are the 3 steps. We're going to buy, or again, we didn't get a chance to cover the covered put scenario, but that's a whole thing. You need to go research that. We're going to buy or short an underlying security, or we're going to buy a substitute option trading at parity. Then we're going to sell a near-term at-the-money option for its premium value. We're going to get that instant dividend and create that profit buffer. And we're going to collard with a married option that is 3 to 6 months out in time, and that's going to protect our investment. And we're just going to roll in and out of that protective option every time we need protection. And sideways choppy is our friend. We leg into these positions. If you're doing the covered call, you want to buy on the low, sell your premium, buy your protection on the high, let the premium expire, and then sell back your put option, and then rinse and repeat, rinse and repeat. We actually have a screener as part of our program that finds these sideways choppy, and we have a whole bunch of indicators for all your different charting packages to tell you, and you don't have to be perfect, right? You can miss this by a day or two. Again, I trade end of day, set up my bot for the next day, and then I'm not even in the trading session, right? If you're doing the covered put, I know you didn't cover this, but you start on the top. So you short your underlying, or you buy your back month put option, you sell your premium, the premium expires worthless, you roll out of your protective call option, rinse and repeat, rinse and repeat, rinse and repeat. So last but not least, how would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, around your passions, your projects, have support whenever you need it? Because isn't that what it's all about? It's about saving time and creating clarity and getting results, right? Like I said, I'm very destination driven. I'm not all about the journey. I just want that ATM every 3rd Friday of the month, or if you're trading weekly options, every Friday. So would it be okay if I take a couple of moments just to tell you a little bit about my materials, my training, and tools to see if they are right for you? Great. It's for someone who doesn't want to pay for data subscriptions, wants everything in one place, doesn't want to miss opportunities, wants to spend more time doing other things, doesn't want to do this alone, wants step-by-step instructions. This is for someone who wants to get consistent and reliable results. That's what my program participants are all about, right? I'm going to skip that testimonial because I got about 2 minutes. Basically, if you take a look over here, we've got all kind. I'm going to show you our portfolio. I mean, not our portfolio, but the website you get access to. We've got all of these different things. We've got a learning center with all these replays. We've got our premium selling downloads. That's your indicators. We've got the actual weekly workshops. We've got our trading questions. Trading questions is where you actually send in your trades for review, right? We review your trades. How long does it take to pick this up? Usually about a week or 2, right? But we like to sit aside with you for 6 months. And the reason is because I'd like to spend 6 months reviewing your trades. Send them to me before you do them, right? And also come to my weekly workshops or watch the replays, because we pick the best trade of the week and then work it out for you. And a lot of people just take that trade and run with it, right? They leverage with pride, which is what it's all about. So you get video tutorials on how to get started, monthly live classes and their replays. That's the lecture series. Screeners, all the planning tools and the indicators that we give you to download that you can have for life. Weekly live workshops and their replays. The trade review. Gosh, what's that all worth? Also, I have a double your money back guarantee. So again, 6 months. I think you'll pick it up in 1 or 2 weeks. But the scoop is I want to be with you for 6 months. I want to be making sure you're getting the success, right? I want you to send me your trade reviews. I want you to come to the workshops, watch the replays, do those trades, get it rolling. If by the end of the 6 months you're not turning a profit and you're doing, following it, not only will I give you the amount that you invested in our program, I'll double it because that's how sure I am that you'll have success. Also, I'm going to let you meet with one of my coaches. We have a whole coaching program, but that's another thing. But I'm going to give you one session with them so you can talk about where you are right now and where you want to be, especially at the end of the 6 months. And they've been there. They'll help you chart a path from point A to point B that's fast, right? So what's that? The double your money back guarantee added to all that stuff and the bonus strategy session, what it's worth to you. Because if you go on my website, tradingtrainer.com, you'll see that we sell this 6-month program for $597. It's a flat fee. We're not going to ask you for any more money. There's no other charges. And because we're here at Traders Corner, we're going to take $100 off. And it's only for this weekend, this Labor Day weekend. We're selling it for $497. And just to you guys, here's how you do it. You go to option investing, option singular, optioninvesting.org/Traders Corner. And I got it right here. I'm going to pull it up, and then that's the end of my presentation. I got it right here because I do want to make sure that they made it. There's a promo code. You have to put this in. Otherwise, you won't get the $100 off. You can see it says $597. Let me just test to make sure the programmers did it right last night. It's 100, capital T, capital I, capital S, capital C. That's Delta, Indigo, Sierra, Charlie. Apply. Whew. Sometimes it doesn't work, guys. Sometimes my programmers don't get my memo. Okay, so there it is, $497. You'll be able to take advantage of that all through the weekend. Guys, thank you for your time. Traders Corner, thank you. Have a good rest of your multi-speaker event. They're fantastic.
Thank you, AJ. We really appreciate it. Ladies and gentlemen, that information was from the world's most disciplined options trader, Mr. AJ Brown of Trading Trainer. We have placed this special offer in the chat box. It's right there showing on the screen there, optioninvesting.org/Traders Corner. And he has your promo code there as well. So thank you so much. And don't forget to go to AJ's website. That is www.tradingtrainer.com. That's tradingtrainer.com. AJ, thank you for making such a generous offer for our audience today. We wish you a happy Labor Day weekend and hope you'll come back and see us on Traders Corner.
Absolutely. You guys are the bomb.
Thank you. We appreciate it. Our next presenter is a research associate at bigtrends.com, which provides investors with specific real-time stock and option strategies and investment education. Big Trends has been featured on CNBC, Fox News, Bloomberg, and a variety of other outlets, including the Wall Street Journal, Barron's, Forbes, Investors Business Daily, and USA Today. Ladies and gentlemen, here to present how to combine high win rate and high reward with low-priced options is Mr. Dylan Pittman of Big Trends. Welcome to Traders Corner, Dylan.
Thank you, Anthony. Thank you for the warm introduction. Just making sure if everybody can hear me today before we get started, if you could just drop in that you can hear me, where you're tuning in from, anything like that, before we proceed with today's presentation. So, before we actually jump into things, I'm very excited to be talking about the newest strategy that we released at Big Trends. Okay, so, for several years, I've been working alongside Price Headley, and the research team at Big Trends talking to different subscribers, about their trading preferences, what exactly they're looking for. And something that keeps coming up over and over again for the last several years is number one, I want to have a high win rate, and number two, whenever I win, I want to make sure that it's not, a 20% winner or a 10% winner, but I want to find those 100, 200, even 500% winners. Okay, and at the same time, doing so with low-priced options. Okay, so for several years, finding that balance between high win rate and high reward was quite a challenge. It felt like you'd have to sacrifice the win rate to get the higher reward, or you'd have to sacrifice the reward for that high win rate. Well, after a lot of testing, after a lot of work over the last several years, like I said, I'm very excited to talk about this strategy. We just released it to the public, and we're going to be talking about our 333 option strategy, where yes, it is how to combine a high win rate and high reward strategy using low priced options. In fact, simply just buying or selling calls or puts. Okay, so if you do have questions from today's presentation, you can always reach out to me, Dylan@bigtrends.com, that email down there below. So we're going to go ahead and get started here, but as a reminder, the information provided in today's presentation is based on our proprietary research and is intended for illustrative purposes only and should not be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the bigtrends.com homepage for more information. So we have a lot to dive through today. We can see just the list of things we're going to be talking about. It's how to combine a high reward and a high win rate strategy with weekly options. We're going to be looking at numerous chart examples, both winners, both losers. We're going to see what these real trades look like. And then while we're doing this, I'm going to reveal a large part of the strategy. We're going to cover the entirety, the foundation of the strategy, how we're able to, again, combine high win rate and high reward into one product. So we're going to kick things off really quickly with just one quick winning trade, and then we're actually going to break down how the strategy works, looking for that high win rate and high reward. So this is a recent trade back at the beginning of June. If you remember, Apple went on and did that AI conference, and really they started breaking down the logistics of how they're going to start incorporating AI into the Apple products. Well, that 2-day period, whenever they did that, we saw the stock absolutely ripping to the upside. Well, this strategy actually caught this trade. It actually caught it before that news conference. It actually caught the entirety of the move, where on the second third of the position, or I should say on the final third of the position, these contracts were closed out for just under 934%. Okay, so I see there's a lot of words on the screen right now. You can see that we entered 4 contracts, closed 3 at 50%, closed the remaining contract several days later for that one large winner at 933% for a grand total of $2,400 in profits. Now this is based on a daily chart. Now, like I said, we are going to break down the strategy, go through exactly what we're looking for, the parameters, the criteria for this. But just to note, this is based on daily timeframes only. We're entering these trades in the final 30 minutes to 45 minutes of the trading day. We want to make sure that we are getting proper signals on the daily time frame. So we will be entering there at the end of the day. And these profits, every profit calculation you see today is based on allocating but not exceeding $1,000 per trade. Okay, you could trade much larger than this if you wanted. Of course, we are going to be focused on trading liquid options. So liquidity is never going to be an issue. We just want to make sure that, for profit calculations throughout today's presentation, it is based on $1,000 per trade. So what we're actually talking about in the strategy itself, the average holding period is less than a week. In fact, we put on trades last week. We ended up closing out eBay yesterday. We entered Apple last Thursday. We'll be closing out Apple today. So it is exactly 5 days on these winning trades. So the strategy itself, we are combining price action patterns. We're going to be looking at gap scenarios. We want to see consecutive gaps, but also we want to see that price is breaking through an X number of period high. So it's essentially a breakout with consecutive gaps prior to that breakout. Well, combining it with next week expiration options, number one, gives us the ability to sit and be patient in the trade, but it also gives us the leverage for whenever one of these trades does end up, ripping to the upside like we saw on Apple. It does give us that ability to hit those 900% winners. Okay, we have several examples historically. We'll talk about a few of those today, but this strategy is designed to have a lot of frequency. Okay, we're talking about, it says up to 10 new trades per month. Since we've went live with this, actually sending these trades out to our subscribers, may need to bump that number up to actually about 12 new trades in a month. The strategy is consistently spitting out new trades. In fact, a new trade could be setting up today. So whenever we're talking about win rates, okay, for some of the products we have at Big Trends that are high reward products, they are historically profitable. Of course, past performance is no guarantee of future results, but you can have a historically profitable strategy with a win rate of, give or take, 35 to 40%. As long as those winners are much larger than the losers, well, then it absolutely can be profitable. Now, we have some high win rate strategies that are designed to be high win rate. Those strategies can achieve that 70 to even 75% win rate, but the profits are smaller than losses. So as long as that win rate stays high, then it can still generate a profit. That's how we've been essentially developing these strategies for several years. Until, like I said at the beginning of this presentation, it has been myself, our client care team, working with subscribers and knowing exactly what the subscribers at Big Trends have been wanting. They don't want to pick and choose anymore. They want both high win rate and high reward with low priced options. So I'm going to break down actually how we are able to synthetically create a high win rate and still leave the ability for that high reward. So this strategy itself is looking at stocks with a positive 10-year profit factor. If you don't know anything about Big Trends, if you've never heard myself, Price Headley, or Chris Sayre speak, the Big Trends, what we pride ourselves on is being data driven. It means every single trade alert that we send out to subscribers has to pass not just the system parameters, we also have to check over the last, not just 2 years, not just 5 years, but over the last 10 years, is this specific system or these specific parameters creating a historical edge on any given security? If a trade's coming out in Apple today, well, we have to make sure over the last 10 years, does this system have a historical edge? These trades are entered Monday through Thursday, assuming that it has a positive 10-year profit factor. They're entered again in that final hour of the trading day. There can be up to 4 new trades open at once. And after 5 days, after 5 trading days, I should say, those trades will be exited at 1:30 p.m. Eastern time. In fact, there's a trade that's being closed here in about an hour on Apple that our current subscribers are in. Looks like Apple is actually still pushing the market higher. It's up about 2.5%. We'll be closing out the remaining portion of those contracts for nearly 200% at this point. So again, after entering, 5 days later, we'll be closing those out at a time stop. Okay, at a time stop. We're not putting on break even or anything like that. I'll actually talk about that here in just a moment. So why should you even care about this strategy? I'm not here to waste your time. I want to talk about what this strategy has done historically before we really dive into these trades and show you how this is actually working. So like I said, this strategy is called 333 options. Okay, now, like I said, the allocation size can be, well, it's entirely dependent on you. So you may trade much larger than this, you may trade smaller than this, but just since 2023 until now, we're talking about a strategy that's up just under 193% based on a 5K trading account. Now this strategy is, like I said, using weekly options to capture major momentum moves. We're going to see that whenever we look at these charts. We're looking for a lot of this momentum, and it's going to be foreshadowed by consecutive gaps. Just over $9,600 in profits from 2023 until today. Of course, past performance is no guarantee of future results. So I've hinted at gaps. We want to see consecutive gaps in a certain direction to give us our bias. So if we see consecutive gap ups in the market, and let's say we're talking about Apple, if we see consecutive gap ups in a specific direction, well, we know something's happening behind the scenes. Okay, we hear all the time about the dark pools or these block orders that are happening. Sometimes they could even happen after hours. Okay, whenever stuff is happening after hours, all right, maybe during the Euro markets, during the Asian markets, Okay, that'll absolutely move the markets overnight. So whenever we start to see these large institutions moving the markets for consecutive overnight sessions, well, we know that something is brewing underneath the surface, that there are buyers jumping to get in. In fact, sellers are not winning these battles overnight. So why would we want to favor the sellers? Okay, whenever we see consecutive gap ups, all right, that's whenever we start to paying real close attention to those buyers and the institutions, especially whenever those buyers are starting to buy at new prices. Okay, whenever we start to see that price is trading above a new high or trading below a new low for the short trades, well, that's whenever we can really start to understand what the purpose is in this buying. Whenever we see buyers buying at new highs, well, number one, we know that these buyers, these institutions are starting to find value at that new area. Okay, whenever we start to see this, whenever we see simple moving averages for the put trades only, but that positive historical profit factor paired with all the parameters that are mentioned so far, well, that's whenever we're going to start looking for that new trade. Okay, now the exact settings are proprietary for our price channel that we're using. I'm going to show you again the foundation of the price action that we'll be focused on today. In fact, at the end of this presentation, I'll actually show you how you can get the settings to our price channel, also referred to as Donchian channels. So these new trades can come out Monday through Thursday, meaning a new trade could come out today, but they won't come out tomorrow because we are using a 5-day time stop, which would mean if we entered a trade, for instance, tomorrow on Friday, well, we'd be holding that into the following week's expiration. And we don't want to hold these positions into expiration day. We want to avoid, number one, risk of assignment, but also number two, holding an option that is expiring that day is about the most volatile time that option contracts could be open. So we want to avoid any of those scenarios, and we're going to be looking at options that are priced at less than $3.33. I'm going to break down why we have this. It seems like a random number, $3.33. I'll break that down here in just a moment, but again, using next week's options for that leverage, but at the same time still providing that stability to allow the system to work. Okay, and I'll actually go back. Apologies for that. And this is a set it and forget it strategy. You would be simply able to just place a limit order to get out of the position or a stop at the same time, which means you don't have to be glued to the trading screens the entire day. Okay, it's a set it and forget it strategy. So like I mentioned, okay, $3.33 seemed like a random choice for the max amount of premium we'll pay for any option contract. So if you allocated $1,000 per trade, again, that's what we're using for every single example, it allows for you to buy 3 contracts. Okay, 3 contracts at $3.33, that's $999 in premium that we would be entered into a position trading 3 contracts, which is important because we plan to sell 2/3 of our position at the first target level. That first target level is going to be 50%. So the way that this math works is, let's say that you bought 3 contracts at $3, or let's say, in actual US dollars, they are $300. So $900 is invested if you bought 3 contracts at $3. Well, if you sold 2/3 or 2 contracts at 50%, which would be $4.50, then 450 times 2, which is $900, goes back into your trading account. Now remember, $900 was invested. Now that means that taking 2/3 off, or 66%, or 2 of those 3 contracts off at 50% makes the trade risk-free and allows for unlimited upside on the final third of the trade. Remember, call options do theoretically have unlimited upside on those trades, on call options. Okay, so we want to give ourselves the opportunity to let those winners run, but managing risk in such a way that, even if we hit that 50% target and it comes all the way back, in fact, let's say it expires worthless, we are at worst at break even. Okay, so I think this is important to talk about. At Big Trends, we have some strategies that do sell half the position at 100%. If you sell half the position at 100%, you do get your capital back that was initially invested. The issue is with these types of trades is it's harder to hit 100% than it is to hit 50%, right? It makes total sense. So this is a way that we can synthetically increase our win rate, okay? Especially pairing it with trading next week expiration options. What we can do is we can set that target much lower than 100%. We can set it right there at 50%. It doesn't take much to hit 50%. We want to make sure we get that capital back and we give the remaining contracts room to run. Okay, this strategy really captures the essence of cut your losers quickly, let your winners run. Okay, so we're going to talk about a lot of these different trades. Again, we have some open trades right now, but here's an example of a trade that was closed yesterday. Now the second, or I should say the final third of the trade was closed yesterday, and it's on eBay. So the first thing I want you to notice is consecutive gap ups. Okay, we see consecutive gap ups here. That should be right there. But we see consecutive gap ups here on eBay. Now they're not anything crazy. We're not seeing 3% gap ups overnight. We just need to see some gap up above night, or sorry, gap ups overnight. And then we want to see that price is breaking our price channel. Again, whenever we see price is breaking that new price channel or where a previous high was, we know that buyers are starting to find value where they didn't previously find value. Okay, so whenever we see all of this, that leads us to enter into a new trade. And since we're seeing gap ups, we see a new high being taken out. We'll be trading the following week's expiration. We can see here that we traded some essentially at the money to in the money options. These option contracts are for the most part going to be at the monies. We'll look at several examples, but the next day after entering this trade, getting in 9 contracts there at $1.10, so that's $990 invested, getting out the next day at our 50% target. So that means we're closing 2/3 or 66% of those contracts. Close 6 contracts out at $1.65 or 50%. So now we have the entirety of our risk back. Okay, the entirety of our risk is back on this trade, meaning that if eBay ended up, let's say, falling even further, if these options were at 5 pennies, we would still at least be at a break-even trade. Well, of course, eBay didn't move in our favor yesterday. We used that 5-day time stop, no stop after we hit that first 50% target. We just let that 5-day time stop work for us. We ended up closing it out, those final 3 contracts at negative 52%. Okay, it's not exactly what we wanted, but these will happen. Ended up being $156 in profits on the entirety of the trade. Like I said, these trades will happen. They'll hit that 50% target. They may not run for us anymore. That's totally okay. We want to give ourselves the ability to hit those larger winners. Now, like I've kind of alluded to, we are in an open position on Apple. We entered that trade last Thursday. On Friday, last Friday, it hit that 50% target almost immediately off the open. Well, if you wanted to put on a break-even stop, of course you could have. On that Apple trade, if you put on a break-even stop, you would have been stopped at some point this week. In fact, yesterday, you would have been stopped at break-even. Well, today, as I'm talking right now, it looks like Apple is up just over 2.5%, and that option contract is up actually just about 200%. So since we're into these same week options, these options can get volatile. They can go to break even. They could go to negative 50, negative 70% rather quickly. But what we want to also keep in mind is they can, as quickly as they can go negative 50, they can go to plus 50. They can go to plus 200. Okay, like I said, Apple, those contracts were down at during this week. We don't want to be premature. We don't want to be quick to close these out. We want to give them a chance to run. Like I said, here in about an hour, those trades will be closed down, hopefully right there around 200% on Apple. So let's look at a few more other recent trades. Again, if you do have questions, feel free to drop them in the chat box. I'll go through questions here in just a moment. It looks like Theo asked, is this a daily chart? It is a daily chart, Theo. Okay, so here's an example on Philip Morris. Now here's an example where we can actually see that Philip Morris continued to run to the upside. Well, we do see consecutive gap ups here. Okay, this is the close. All right, a gap up there, and then we get another gap up there. So we are seeing, in fact, 3 consecutive gap ups whenever we even include that trade. Okay, now it doesn't look overly bullish, right? It doesn't look overly bullish. We're looking to get in before the crowd, all right, before the FOMO buyers. We don't want the FOMO buyers to beat us. In fact, the FOMO buyers, all right, are the ones who usually lead that rest of the move. We want to see that final gap up where we are breaking above a new high. We want to find new buyers buying above what had previously been seen as value. Okay, new value is being placed, new equilibrium here on price on supply and demand as price is breaking a new high on Philip Morris. Well, here we entered 12 contracts at 80 cents. Okay, well, selling 8 contracts at 50%, may be able to do the quick math, but that's 75% of the contracts. Actually, I'm wrong on that. Excuse me. But selling 50% there, 8 of those 12 contracts gets our risk back. Holding those 4 remaining contracts, letting the winner run. Philip Morris continued to run to the upside, closing those out at 325% or booking $1,360 in profits. Remember, the general rule of thinking for these types of trades is selling half of your position at 100%. Okay, of course, that works. You get your capital back. But it's a lot easier to hit a 50% target than it is a 100% target. Okay, we saw it again on eBay. Remember, eBay did not hit 100% at all, but it was able to hit that 50% target where we could get our capital back and let the trade run. Okay, so here, of course, Philip Morris would have wound up hitting 100%, but we want to get that capital back as soon as possible and be on the lookout for new trades and continuing to go through new trade opportunities. Here's another example on Apple. All right, we see more consecutive gap ups, right? Again, they can be subtle. These gap ups can be subtle. We just want to see consecutive gap ups break above a new high, and that's whenever the game is on. Okay, 3 contracts, quick math there, selling 66% at that 50% target just 2 days later on that final push. Now think, if you had that break-even stop on very next day, odds are that's coming awfully close to break even. In fact, I'd almost be certain that that option, these 227.5 calls, would have hit and break even trading those July monthly expiration options. Okay, we don't want to do that. Okay, we want to put a long leash on these winning trades. We want to let the winners run. Okay, remember, this is the essence of cutting losers quickly, letting winners run. Okay, not taking a premature stop out there. Okay, letting Apple breathe. Next day, a gap up. Finally, day 5 at our time stop, we get that final push higher. New highs there on Apple, where the remaining contract was sold at $7.80 for 140%. We're booking $785 in profits on that one trade. So those were all call trades, but this strategy has seen success with trades, of course, to the downside. Okay, here's an example on Wells Fargo. It doesn't have to be one of those large tech names to hit those large winning trades. We can see here that we actually got a gap down that exceeded that 50% target, ended up hitting 86%, trading 10 contracts here of Wells Fargo. Okay, getting in 15 contracts in total, selling 2/3 or 10 contracts there at $1.21, just a little bit above that 50% target on that gap down. Okay, now notice we got a wick there that created a new low. Okay, for the system that we created, a wick is still considered a new low. Okay, so we still call that a trade. Okay, it's still a valid setup. We don't need it to close below it. We just want to see that new lows were printed. Okay, consecutive gap downs there. Again, on Wells Fargo, it's the same system, just inverse. All right, the remaining 5 contracts sold at that time stop. There it's 75 1/3% for $805 in profits. Okay, this strategy, like I said, it's very exciting time at Big Trends. This is the first strategy we've released that does play into that both high win rate and high reward methodology. No longer do you have to sacrifice one or the other to get it. And this is a great example. Okay, taking 2/3 of the trade off at 50% makes the trade risk-free. And we saw it on eBay. Of course, that trade that was closed out yesterday. You can see it again here on AMD, selling half at 50%, the remaining third, selling 2/3 at 50%, the remaining third going for a loss. Okay, we get that move against us on AMD, still coming out with a profit. Okay, selling 2/3 of the position at 50% gets our risk capital back, and everything else is just a cherry on top. Okay, not much of a cherry there on AMD, but still a decent winner nonetheless. They're at $240 in profits. But if we can't take off exactly 2/3, which happens frequently, then we will round up. So here's an example where, in this case, trading Microsoft, trading $1,000 per trade, well, it would have gotten you 4 contracts at $2.50 a piece. Okay, $2.50 times 4, of course, $1,000. Now, we have to round up. Okay, if we only sold half or 2 contracts at that 50% target, it wouldn't have gotten us that risk back. So we have to round up. So in these cases, we are taking off 3/4 or 75% of these contracts off at 50%. We got that move the very next day. Again, these 50% targets are why this strategy has had a historically high win rate. Okay, 50% targets on next week expiration options, considering the gamma boost that comes with these types of options. At least 50% targets, we don't need any significant moves in our favor to hit those types of targets. A few days later, Microsoft just, kind of consolidating until they wash out some profit taking possibly going on there. Microsoft ended up going against us. That final contract was closed essentially worthless. Okay, 10 pennies on a Microsoft contract. That was a pretty sharp move against us. It's a 96% loss on the final third of the position. But because we sold 2/3, in fact, in this case, 3/4 of that position at 50%, ended up being a $135 profit trading those gap ups. Not every trade is going to be a winner. Like I said, the strategy has historically had a high win rate, but there will be losing trades. Here on Bank of America, we see those consecutive gap ups. We see that price is breaking into new highs, breaking above that price channel. And then 3 days later, Bank of America just couldn't get going. Buyers kind of dropping the ball there, where those contracts trading the 43 calls ended up getting stopped out at actually beyond a full stop out there at just about 52 and 2/3%. Ended up being a $520 loss there, trading those Bank of America July monthly 43 calls. Okay, losses are going to happen. Okay, but allowing that final piece of a winning trade to run without a stop loss and without a final profit target is really what sets this strategy apart. And it's really what has led to such a, at least in my opinion, a phenomenal historical return. Theo asking to use any indicator. Theo, you'll notice on the screen that those are price channels, also referred to as Donchian channels. It is essentially price action based indicator. Okay, so this approach without a stop loss, without a profit target, led to this large winner on Wells Fargo. Now remember, we started today's presentation looking at that Apple winner that ended up hitting 900%, but here on Wells Fargo, this one not too shabby there, just over 720%. Okay, so let me ask you, when you're trading, at what point in a winning trade do you close the position for your own trading? Okay, is it up? If it's up 100%, if it's up 300%, are you swinging for the fences and looking for 1,000%? Okay, well, using a systematic approach is what has allowed us, number one, to know historically where the edge is, but is also what has led to a strong performance. Okay, think about the psychology of, cutting your losers too quickly every time. Okay, that's one of the trading fears from Mark Douglas. Okay, he talks about one of the trading fears is leaving money on the table. Okay, we don't want that to happen. We want to give ourselves the ability to hit these large winners, but doing it responsibly by selling 2/3 of the position at 50%. Okay, so we want to hit these 500, 700, 900% winners, right? All traders are looking for that next large winning trade, but we want to make sure that we're doing it responsibly, and doing it responsibly by how? Well, getting our risk capital back as soon as possible. Here on Wells Fargo, we see consecutive gap ups. Okay, even though these are two red bars, okay, we are seeing consecutive gap ups. All right, we want to get in before the crowd. That's exactly what happened here. We got that final push, Theo. We see that it's breaking above that price channel. See that there's new highs being made here in Wells Fargo. You know that buyers are buying now above what would previously had been considered value. This is new value now. Those 45.5 calls that we got in at 59 cents, 16 contracts at 59 cents, or allocating 1,000 per trade, selling 11 contracts here, okay, just above at 2/3 of the position, selling it at 50.85% the very next day. Remember, a 50% target is easier to hit than a 100% target. We want to get that capital back quickly. Okay, so once we get that capital back quickly, it gives us, in fact, it doesn't just gives us, but it affords us the patience to sit through this little consolidation day. Actually, a little push higher. Probably didn't do too much to the option premium until the day before our exit. We saw that final push. Wells Fargo on one final gap up, really just going parabolic here on this short-term daily chart, where Wells Fargo really taking that move from about 45 to 50 in just 5 trading sessions, where the final 5 contracts were closed out at $4.85. You know, essentially all intrinsic value at that point, but closing that final piece out there at 722%. This trade booked $2,460 in profits in just 5 trading sessions. Okay, we've seen these types of trades time and time again. Like I said, there's a trade open right now on Apple. Assuming that it holds in for these last, give or take, 45 minutes, it's going to be a nice winner that's going to be added to the 333 options alert service. Okay, so again, combining all of these winning trades, winning and losing trades without compounding, has resulted to a 192.6% return from 2023 until today, based on that same allocation method we've been looking at all day, based on a 5K trading account. Just over $9,600 in profits from 2023 until today. Of course, past performance is no guarantee of future results. Okay, so what we're doing today is we're giving you an opportunity to add this subscription to your trading arsenal. Okay, so stick with me. We actually have something that's never before seen. Like I said, we just made this trading strategy public just a couple weeks ago. And in that time, it has quickly grown in popularity around the big trends community for good reason. Okay, this is the first strategy that we have launched that has a high win rate and historically has had a high reward trading low dollar options. Okay, remember, these options are always going to be priced less than $3.33. So the retail price for 3 months of these trade alerts with the 333 options settings and rule sheet, which is going to be the PDF document that breaks down the entirety of the strategy. Okay, if you all asked about the settings for those price channels, well, whenever you sign up today, you would have access to the settings and rule sheet. It's going to give you the actual indicator length that we're using for those price channels. It also comes with the exact parameters that we use for both buy and sell orders for both longs and shorts, everything you need to know in a PDF document. You also have access to Price Headley's weekly video updates. These are posted Monday nights at 6 p.m. Eastern time. Where Price Headley, if you don't know who he is, he's been trading for over 30 years. He started Big Trends back in 1999. Big Trends will be celebrating its 25th year anniversary here in just a couple of months. But Price Headley, of course, started all of this. He's in the Traders Hall of Fame. Price Headley will go back and recap all of the trades taken from the prior week, outline exact reasons why we got in and why we got out of those trades. And last, certainly not least, one-on-one email contact with Price. I mentioned our founder and CEO, myself as one of his analysts, or any of the members of the analyst team via a dedicated email address. Now, all of this is included with today's offer, and this is going to be available until midnight, but the retail price is $591. Okay, 3 months at the $197 monthly retail list price, of course, times 3, $591. We'd all be in agreement that's a justified price considering not just what that long-term performance has been since 2023, not even what the recent performance has been, not just because of that Apple trade that we're booking today for a nice winner, but even just what one of these trades has done. Okay, I think we'd all be in agreement that is a justified price. Well, today, for Traders Corner, all right, what we're doing today is we are discounting it substantially. Okay, 3 months of these trade alerts with those 3 trading resources, not at the retail price of $591. In fact, today it is $177. Okay, $177 for 3 months of these trade alerts. You just need to go to the link members.bigtrends.com/special to get what's quickly becoming the most popular strategy at Big Trends. Okay, combining both high reward and high win rates with low priced options. And yes, Theo, I saw your question. It is simply buying calls or buying puts. There are no spreads of any kind. Essentially, if you have tier 1 option approval, you could start making these trades as soon as today. Okay, so simply buying calls and buying puts using price action patterns, finding where those new institutions are finding where fair value is. That's what we're looking for. We're looking to let these winners run and cut the losers quickly. It's the essence, really what the textbooks are telling us to do, right? Cut your losers quickly, let your winners run. Today, 3 months of these trade alerts for $177 whenever you go to the link members.bigtrends.com/special. Again, it's an incredible value. We've already agreed that $591 for 3 months. It's a great price considering what one trade has done, but whenever we consider that today until midnight anyways, it's $177. Well, just one trade alone like this Apple trade, this is what we started off with, the first trade we looked at. Large winning trade here. Large winning trade here. Of course, we've seen numerous trades of this size in the past. Like I said, that Apple trade that will be closing this afternoon should be at minimum a 150 to a 200% winner. This trade alone booking $2,400 in profits. Again, you can get trades like these. In fact, a new trade could be setting up for today, could be coming out this afternoon. And you want to make sure that you get that new trade. You just need to go to the link members.bigtrends.com/special. Okay, again, the long-term performance from 2023 until today, just over 192% return. Of course, past performance is no guarantee of future results. All right, so Armando asking the question, what happens after 3 months? Armando's is a great question. We do this, I'll go ahead and say this, that for today's special package, we will make sure that we will grandfather you in at this rate. So whenever these 3 months are up, it's not an automatic renewal, nothing like that. We'll make sure to send you an email saying that you can add on an additional 3 months, or you could add on more time if you'd like, but we'll make sure that you get in at this grandfathered rate at $177 for 3 months if you decide you want to stay for another 3 months. Okay, these trades, high momentum trades. We're looking for those gaps. We're looking for new buyers, those institutions buying above previous highs. Again, your link today for 3 months of these trades, members.bigtrends.com/special. Okay, so once you sign up, you'll receive a couple of emails. First one being a welcome email. It's going to break down exactly what you purchased. It's going to tell you where you'll find access to all those resources, where you'll receive these trade alerts, everything that you'll need to know to start trading today. You'll also receive a purchase receipt. And like I mentioned, a new trade could be setting up for this afternoon. So for those of you all getting signed up right now, looks like several people already getting signed up right now. Those of you all signed up, just be on the lookout. Could be a new trade here, I guess in just under a few hours. Okay, so I'm going to wrap it up for you all. Looks like my time is about up. Again, if you have questions, feel free to reach out to me, Dylan@bigtrends.com. Again, sign up for 3 months of 333 options. You just need to go to the link, members.bigtrends.com/special. Okay, so thank you all for tuning in. Thank you to Anthony for hosting this. I look forward to speaking to you all soon. Thanks.
Thank you, Dylan. Very exciting strategy, high win rate and high reward. With low priced options, having very little risk for the potential big reward makes sense. Ladies and gentlemen, if you are interested in receiving real-time stock and option strategies and education to profit from significant market trends, then Mr. Dylan Pittman of Big Trends has an exciting solution for you. Dylan has put his link up on his slides there. And you can always find Dylan at www.bigtrends.com. Thanks again, Dylan. It's always a pleasure having you on Traders Corner. Enjoy your Labor Day weekend.
Thank you, Anthony. You too.
Thank you. Ladies and gentlemen, we have a great lineup today, and our next presenter is no exception. He is a professional fund manager and trader, boasting over 37 years in the finance industry. His journey began early, obtaining securities licenses at 19, leading to a tenure at Fidelity Investments. He then founded and led various hedge funds, mutual funds, and investment advisory firms. His insights have been featured on CNBC, and he's been a guest on CBS's The Educated Investor. Ladies and gentlemen, here to present Silent Giants, Time Strategies for Low Volatility Earnings is Mr. Jeff Beamer of EWO Trader. Welcome to Traders Corner, Jeff. Jeff, I think you might be on mute.
Okay, how about that? We
You're
get that
good.
taken care of?
Yeah,
Awesome. How are you today?
good, thank you.
Good. Can you see my screen all right?
Yes, looks great. And maybe the audience could also tell us that.
Just let me know when we're good to go and we can move forward.
Yeah, I think we're good. You're good.
All right. Well, welcome everybody. Thanks for having me today. My name is Jeffrey Beamer, and we're going to talk about something that we call silent giants, and specifically targeting the earnings events of these big companies and what to expect from these big mature companies that have been around for a long time. So let's get into it. I have a little legal disclaimer that you can pause at any time to review on your own, but we'll hold that there for just a second. And then I will introduce kind of what we're going to talk about today. So we're going to discuss the trading strategy that is ideal for this situation, and then we'll talk about identifying how we find these stocks that we don't think, or these companies that aren't going to have big earnings, and you know their stock just isn't going to move very much. There's a couple things to understand about volatility, and then creating the best options strategy for this. So we are trading options around these alerts, and it's with a strategy that's been around for a long time. There's not going to be anything new here, but it's the strategy itself that is what we're going to be focused on, or the system. Okay, so let's get started. Once again, my name is Jeffrey Beamer. I've been a professional trader for over 35 years. I have been the founder or general partner of multiple hedge funds and mutual funds. I'm the past president of the Texas chapter of the Security Traders Association, past chairman of the Chartered Market Technicians Association, and I've been very active in the industry, even through today, for most of my career. All right, so my specialty is in the option space, and with what we call delta neutral strategies. So let's go over the system, okay? This is pretty simple, all right? So there's a multi-step process. It involves really 3 steps, and we're gonna go through that right now, setting up these trades around earnings, okay? So earnings are a popular target for many option traders. We've had several announcements, in fact, this week on pretty big companies and you know, and how they're doing, okay? Many traders struggle because, you know, they either are buy and hold investors and the stock doesn't go their way, or they've chosen the wrong strategy to trade around a stock that's really volatile, and then their strategy doesn't work out. We're going to talk about that and address that. And then I'm going to show you how to seek an edge without having to pick a direction, okay? We'll target stocks that are unlikely to move through their earnings announcements, okay? So let's jump into it here. And how do we identify these stocks? Okay, we call these quiet stocks. And one way to do it is just by looking at a chart. All right, you can identify a stock that just doesn't move by looking at a chart. And you can see here, we're using in this example, this is Dentsply. Okay, the symbol is X-ray. And for quite a while, over a year, as a matter of fact, this stock traded in a $15 range, just gently moving up and down, up and down. Well, when we zero in on the earnings events for this particular stock, you can see that there is a little bit of volatility, but not much. In fact, this this second earnings announcement here, you see the gap in the stock, but that gap is only about $2, okay, on at the time on a $35 stock. All right, not very big. And so each time we go through these earnings, you can see that there's very little movement in the stock as those earnings announcements come out. So this would be a good candidate for this type of strategy. And we'll talk about a phenomena here in just a moment that occurs around every earnings announcement like clockwork. And it makes this a fantastic opportunity for option traders. All right, so let's talk about identifying these quiet trade candidates. First, what you want to do is create a list. Okay, start by building a list of stocks with upcoming earnings announcements. That's pretty simple these days. Okay, there's lots of opportunities to do it. Beginning with your trading platform. Okay, many software programs offer this information free of charge on who has earnings coming up soon. All right, for us, we go through that list, and of all the stocks, you remember there are many stocks that have options traded on them, but not all of them. So we focus on those stocks that trade options. All right. This is also available if it's not on your broker's platform. It's available from Google Finance, from Yahoo, from CNBC. There's all sorts of providers that can get you this information of what stock has earnings coming up this week, next week, the following week, the week after that. Okay, it's just a constant cycle. All right, so this is really the first step. Now, another resource example is this is off of Reddit. Okay, this is a popular publisher called Wall Street Bets, and you'll notice here how they sample their earnings. If you look at the bottom left of this screen, you'll see there most anticipated by market cap and options volume. Okay, so this is one that helps find big companies with earnings coming up and that they have some pretty decent option volumes associated with it. Okay, so when this snapshot was taken back in June, okay, we see that we had Carnival Cruise Lines, FedEx, General Mills, Levi's, Nike, McCormick's. You know, we have a variety of companies that are well-known names, okay, and the earnings, whether they're before market open or after market close, okay. So another good resource that's, you know, free of charge that you can find earnings, companies that are going to have earnings coming up and which day those earnings are. All right. So you create a list and you either enter that list on your software program or on a piece of paper, and you kind of keep track of it. And then you begin to analyze that list. And one way to do this is pretty easy, little time consuming, but pretty easy. It's just using a chart to analyze price reactions to past earnings. All right. So here you can see this one is a chart of, well, NVIDIA. And guess who had earnings just today? We're going to talk about that in just a moment. NVIDIA. And you can see here that the first earnings event, okay, there was a big gap, okay, of, wow, that's a big, huge gap. And then you can identify each and every earnings cycle plus future earnings, okay, for a company and just see how the stock has performed. If a stock, for our strategy, if a stock, gaps, every other earnings cycle, well, I don't know that that's going to be a good candidate for us because we want consistently quiet stocks through their earnings events. That's who we're going to target. And I'll show you how we're going to target them in just a second. Now, you can also use indicators such as Bollinger Bands or average true range to help assess price reactions, okay? Each of these have their benefits and their drawbacks, okay? But it helps determine a volatility for a stock, and you can analyze that going through the actual earnings event, all right? So here, you can see here we have both those indicators on this particular chart, and you can kind of see that through these earnings cycles, you know, the widening and the compression of the Bollinger Bands and the movement of the average true range. And you might be able to pick up on some indications of, hey, this stock usually does X through earnings, or this stock usually does Y through earnings, okay? So we help use these charts to help judge how the stock has reacted, and we use these indicators for both. And both of these are good ways to look at short-term volatility around specific events. Now, the type of volatility I'm talking about here is called statistical or historical volatility. Okay, that type of volatility is volatility that you can see. It's from a chart, and you can look at it, you know, on a daily basis, on an hourly basis, on a minute basis, on a weekly basis, you know, whatever time frame. But we use, of course, daily charts here. Now, you can cut the amount of time by using professional tools. I use a earnings effects scanner as one of my scanners to do the work that would normally take me days or weeks to do. It kind of takes all the earnings events and compresses them into an easy to read number and kind of gives us a pattern of what that stock does through these earnings events. And this is what I use, just one of the scanners that I use in the publication service that we provide that focuses on earnings events around these quiet stocks, okay? And these are companies that you're very familiar with, okay? So we do use professional tools like anybody does, like a plumber does, like a carpenter does. They all use their tools of the trade, and we are no different. So let's talk a little bit more about volatility and how it affects these trades. Now, what you're looking at here, don't mind all the squiggly numbers or the lines. Focus on the red line for just a moment. And what we're going to talk about here is something called implied volatility. And this is one of the components of how options are priced, all right? And you'll notice here, if you focus on the red line, what that red line represents is the average implied volatility of all options that expire in the next 7 to 30 days, okay? So very near term, very short term. And if you notice, which is pretty clear, that every time right around an earnings event, we get what's called an implied volatility rush, and that is where the red line spikes up, and then we get a implied volatility crush, where that implied volatility, once that announcement comes out, boom, they take that high implied volatility, they take it out of the options, and the options will lose value, okay? And this is a phenomena that occurs every earnings cycle on every stock, okay? Now you can see here that the red line is higher, okay? You can see here twice, it's over the 80 level, all right? Now, one thing to note, this scale goes from 0 to 100, and it is a reading on itself, meaning you can't, this is an example of Zoom, okay? And you can't compare Zoom to Apple, or Apple's implied volatility to Google's, or Google's implied volatility to Bank of America. Okay, it doesn't work that way. It's looking at its own implied volatility over either a 1 year or a 2 year period, and where does the current volatility rank, okay, amongst that data. All right, so here you can see once it gets above that 80 level, that's could be telling us something. And then we have two earnings announcements where it barely got to one, it got to about 75, and then the last one here on the far right, didn't even get to 70. Does that tell us something? Well, what I know is that in all cases, we have this implied volatility rush where the options get more expensive. And then after the announcement comes out, that implied volatility gets taken away and those prices drop like a rock. All right. And it happens very quickly. All right. So let's take a look at this and what type of strategy we would use. Now, when you learn about trading options, you want to buy low implied volatility options, meaning options that have low implied volatility. Back on that graph, we want to buy it when implied volatility is low. That's when we want to be buyers. And we want to be sellers. And again, there are some exceptions, but most of the time, 90% of the time, we want to be sellers of high implied volatility. All right, we want to bring in that because that's what generates the most premium when we sell an option and bring in that premium. And there is a strategy that helps us do this while at the same time helps us manage our risk in the trade. Because as we all should know, selling an option naked is not a good idea. All right, never a good idea. So we would do a process called spreading. All right, and we're going to talk just a second about that right here. All right, so the strategy is called, the tool essentially that I use for this is called an iron condor. This is a strategy that's been around since virtually options were created. All right, so nothing new here, but this strategy, if you're not familiar with it, is a strategy that combines two vertical spreads combined together. Okay, you're going to sell a put spread, so that would be buying or selling the bull put credit spread, and then you're going to sell a call spread, and that is the bear call credit spread. And when you sell these at the same time, you get a credit for the put side and you get a credit for the call side, and you get to combine them together. But what's interesting here is that you only have one margin, okay? Only one margin, not two. I'll show you this in just a second. So the two credit spreads create a larger credit than one. The goal is to generate income through the premiums received while minimizing risk through the purchased options. That's our hedge. Those we call those kind of the tail, or these options are just, their only function is to protect the risk in the trade. All right, they're not to make money. They are strictly to control the margin in the trade. So this trade makes money when the underlying assets remains within a certain price range until expiration, or we take the trade off. And this strategy does incur a loss if the asset moves outside of the trading range, or the break-evens of the trade. And there are two break-evens. There's a higher and lower, and I'm going to show you that to you right now. All right, so we use option modeling to help visualize the risk in the trade, okay? And so this is going to be kind of the beginning of it. This would be a long put, what a long put looks like. Okay, you buy a put, you have the right to sell at a certain strike price. Here it's $40, and you make money to the downside. Well, when you spread this off by buying a put, or excuse me, by selling the put, okay, so you bought the long put at 40 and you sell the higher strike at 45. Now what happens is you generate a credit in this scenario, okay? And now I have an obligation since I sold that put. All right, now that is a spread. In this case, it's a $5 wide spread. Okay, I bought the 40s, I sold the 45s, that's $5 wide. That is my risk in the trade minus my credit that I received for this. All right, so in this example, if I received $1 for that spread, my risk would be $5 minus the 1, so max risk would be $4. And now with that information, I can establish where my break even is on the low side on this particular trade, and it's at $44. Okay, so I want the stock to stay above $44 in this example. Okay, and that's where I would get to keep my dollar. All right, now on the call side, kind of the same thing, but in reverse. All right, you have a short call. that you sell, and that brings in the premium. And then you have the long call that is a debit, and that takes away some of that premium, but its sole purpose is kind of insurance and to protect the trade. So same scenario here is if I got $1 for this, my max risk is still $4, okay? And now I can establish what my upper break even is. That upper break even is $51 in this example. So I would want the stock to stay somewhere between that 44 level and the 51 level through expiration, or through at least the earnings event, all right, when that happens. So when you combine these two together, this is kind of what it looks like, okay? You have the put spread, you have the call spread, you combine those together and you get what's called the iron condor. Now, the cool thing is you get to take those credits and combine them together, and guess what happens to your risk? It now drops from $4 to $3 because your max profit is $2 minus your 5, and that leaves you with 3. And my break evens now are between $43 and $52 on this particular example, and that is where I want the stock to stay through the earnings event, okay? And this is pretty interesting because there's a couple things happening here that I'll talk about in just a second. So the best setup for these types of trades is generally 15 to 45 days to expiration in general, if you're going to trade an iron condor, okay? Between 15 and 45 days. Implied volatility is medium to high. You want it on the more expensive side. You know, I told you that the scale is 0 to 100. I break it up into thirds. So 1 to 30, or 0 to 33, and then 33 to 66, and 66 then up to 99, really. And so you want it in that middle third or the upper third, typically, okay? We want statistical volatility to be relatively low, meaning through those earnings events, we don't see much movement. The stock can move, but just not a lot. You know, we don't want it, you know, gapping 20% is kind of what the thing is. We want it can gap like maybe 3% or 4% or something like that, but you know, we don't want it gapping double digits usually and running away from us. Typically, when you do this sort of thing, the net delta represents, look at it as shares of stock. A delta of 1 is 1 share of stock. A delta of 20 is 20 shares of stock. Okay, and this is selling these two spreads, combining together, usually put your delta close to 0. All right, so nothing really moves, and that's what's called delta neutral trading. All right, and all we're trying to do with this strategy and this system is keep that credit, okay? Generate income every time we put one of these trades on through an earnings event, okay? There's another Greek that we do pay attention to, and that's gamma, but this is less important at the setup and more important later in the trade, okay? If the stock starts running near your break evens, then gamma and delta come into play, but most of the time they don't happen. Now, this is what it looks like on your broker's page, or most brokers' pages, when you have an option chain up, and you can literally point and click on your trade with many brokers on the option chain to create your trade. Okay, so in this example, the 56 calls were you could buy them for 12 cents, and then the 52 calls you could sell that for $1.08. Okay, and on the put side, you could buy the 44 strike puts for 12 cents, and then sell the 48s in this example for $1.08. Okay, and so when we combine those together, okay, you get that iron condor. So strike placement is key, with the objection of being that the stock price at expiration ends up between the two middle strikes. Okay, so you know, if you sell the 40 puts and sell the 60 calls, then you have a $20 range for that stock to move around, is this in this example. If you sell the 40 strike puts and then sell the 45 strike calls, well, then you have a $5 range, and you know, that's pretty tight. All right, so we like to kind of gauge, okay, what percentage do we think this stock is going to move, and then can we bring in premium just outside that range? That's kind of how this works. The effects of time decay will help, meaning you can put this trade on a week or two before earnings, but I like to combine it with that implied volatility rush. I like to be at the top of that range, okay? And the effect of implied volatility really is the biggest contributor to profit, as IV crush occurs right after the earnings announcement, and that option premium drops like a rock. I mean, it happens fast. It's pretty amazing. All right, so here are some current trade examples. Now, everything I just showed you, I do through a service called Ewo Trader Delta Neutral Income Portfolio, okay, DNI, Delta Neutral Income, and it's designed just to generate income on a regular, consistent basis, and we use this strategy around earnings, just as I'm showing you here, okay? So let's go from last month, okay? This was trade ID 1213. This was Microsoft. Okay, they had earnings. This snapshot was taken on July 26th. They had earnings on July 30th after market close. So I'm not looking at holding on to this for very long. Literally, I had 1 week in the trade and only 4 days until the earnings announcement. Okay, remember, I'm trying to get that implied volatility where it's really expensive. And you can see here, so what you're looking at is the chart on the left and what we call a risk graph on the right. And this is how we model the trades. The light blue line that is horizontal up near the top, this is the upper break even, and the light blue line that is horizontal below all the stock price, that is the lower break even. And then as we go from right to left to right, you can see where the red, the blue, the green line is, and as long as it stays between that black line, which represents at expiration, we are golden. So where we focus is this dark blue line. You'll notice that dark blue line, which is representing current price. At the time we put on this trade, you can see that it's right in the middle. Okay, we've centered this stock around. We got earnings coming up in just a couple of days. So we put on this trade that went out, trade ID 1213 on the 26th of July. The credit was $1.17. Okay, now this is, you're looking at that maybe going, $117, maybe that's not very much. Well, remember, this is based upon a portfolio of $10,000. All right, just that, just $10,000. So if we're successful, that could be a 1.17% return on portfolio in just 4 days, okay, in 4 to 7 days. All right, now we don't typically do these one at a time. All right, so we're stacking these on different stocks, on different names, going through earnings, and this is where that income comes in. So if you were to annualize that number, $117 in 7 days, and you were to annualize that number, a lot of people would consider you a professional trader. All right, so let's see how this thing turns out. So what we did was we had the earnings event came out, and you can see the green triangle there, and then we decided, because there wasn't much movement in the stock, it did exactly what we wanted to do. I held on to this for 3 more days going into expiration. You'll notice all the colored lines are gone, and all I have is that black, this black box with right angles. And the blue line, as you can see, it jumps right through there into the profit side on the right-hand side. And you can see here that we took the trade off on the 2nd of August, actually didn't even take it off. I put the alert out to let all legs expire worthless, which is what we want, because by letting them expire worthless, we don't incur any costs, we don't incur any commissions. Doesn't happen all the time, but many times during that month it happens, and this is like a payday, okay? So it was let it expire, everything expired at 0, and we got to keep that $117 profit, which generated a 1.17% return on portfolio. Now, when I talk about us stacking this, now this was on Microsoft, okay? Big, well-known name. don't expect a big move through earnings. The stock can move. Trust me, you can see the stock moving here. It had a high just in the little bit of chart. We can see it had a high of 469 and then was trading down here at about 405 or 403. Okay, and that's just in about 3 weeks. Well, remember, we're not holding on to this trade for about 3 weeks. Okay, we are holding on to it just through that earnings event. All right, that is what we're trying to do. So take a look at this. Then just a few days later, we have trade ID 1214, an iron condor on Amazon, another big name. That's why we call these silent giants. What are they going to do? Well, these are big, mature companies. They're mature in their business cycles. And while they may have a lot of volatility, you can see here on Amazon, look just in the chart part that you can see here, it went from a low of 167 to a high of, about $200. Okay, from 167 to $200 over a couple of month period. So this stock has a little bit of statistical volatility. It can really move. And then it went from $200 down to where we placed this trade was around $183. So it went from 200 down to 183. That's a pretty big move in about 2 weeks. So why on earth would I put a sideways strategy on a stock that moves like that? Well, as you can see here, if you can, I know there's a lot on this chart, but I can tell you here, earnings were in 3 days. They were on August 1st. Okay, that's, this month. Okay, after market close for Amazon, and we're looking for the stock to just remain quiet. Okay, and the alert went out. This is alert ID 1214. The alert went out on the 29th of July. It was for a 69 cent credit, but we did this 2 times, okay, which would generate a credit of $138. Okay, so again, that 69 cents is per spread. On the Microsoft trade, that $1.17 was per spread. So if you did 10 of those spreads, that would have been on Microsoft, that would have been about what, $1,170. Okay, $1,100. If you did 20 of them, then it is obviously $2,200 or $2,300 and change. Okay, it's all about, so if you're trading with a $75,000 account, you can do a few more of these. Okay, these are just based upon that hypothetical $10,000 trading account. So if you're trading with $125,000, no problem. If you're trading with $1 million, no problem. Why? Because these are giant companies with hundreds, if not thousands, of options contracts traded either in open interest or in volume on a daily basis. All right. So these are big companies, high liquidity, easy to get in and out, and that is some of the names that we're trading. Okay. Now in this case, we traded 2 times. Okay, because my debit on the trade was about, if I remember correctly, that 69 cents, because of the width of the strikes was only $2.50 wide. Okay, so my max risk was $2.50 minus the credit. So I think that was about $1.81 if my memory serves me correctly. And so we did that 2 times, and it made that margin then about 368 or 300 and somewhere around there, $367, which is, to risk to portfolio, 3.6%. Not bad, not anything to lose sleep over. Okay, and we were looking to credit with that $138. So we go into expiration and look at this. Okay, Amazon dropped over 9% on earnings, and look closely there. It actually tested the lower break even of the trade. But there is this phenomena that occurs on many stocks that gap like this. They will actually they will have this scary candle or scary bar through part of the day, and then it will reverse and they will come back up. But take a look at this. This happened on the day these options expired. So when the stock rallied back up, guess what we were able to do? We were able to stick with that trade, and we let it expire worthless and kept the entire $1.38 in credit. Okay, so you add those two together, the Microsoft and the Amazon. Okay, and now you're looking at about 2.5% return on your portfolio in a week. And again, did we do more of these? Absolutely, we did more of these. We do these on a regular basis. Okay, just today, as an example, we have a trade alert out on Campbell's Soup, and if you look at a chart, CPB is the symbol. You will see that Campbell's just didn't move very much. Okay, through that earnings event is exactly what we wanted to do. Yet another profitable trade, more income into the portfolio, etc. Now, I told you about NVIDIA. NVIDIA is a big, scary stock, but guess what? Guess what? NVIDIA moved. Okay, remember, it went through a stock split. After the stock split, it's still well, right now it's $120 stock. Okay, $120 stock, and at that 120 level, it's down 3%, 3.8% on their earnings event today. Just 3.8% on that big scary stock, NVIDIA, which is on the tip of the tongue for most traders and investors, and has been now for a couple of years, and has been wildly successful. But I'm just focused on those earnings events and those announcements, and what does this stock do through that earnings event? Okay, and NVIDIA, guess what? They're one of those quiet stocks that typically will move less than my benchmark for that. Okay, and I've done this for a long time. My benchmark for that is 10%. Okay, and NVIDIA was right at that 10% number, and guess what? It only moved 3% today. Okay, the market makers were looking at a 10% move, and it moved less. Okay, so an iron condor would have been exactly perfect for this type of thing. All right, now I went over a lot here in a very short period of time. If you got all the information, great. If you didn't, then I have something for you, whether you did or you didn't. And it's always good to review things and review strategies. And a lot of people don't know that, hey, iron condors, I've traded iron condors before and I didn't have much luck with them. And there can be a variety of reasons for that. Maybe you traded on a highly volatile stock, or maybe you traded it during low implied volatility times. Here, we're just doing the opposite. We're focused on quiet stocks during an earnings cycle that generates higher implied volatility and taking advantage of the IV crush. All right, so here is the gift that I have for you. There's your profit. I have an ebook that you can download. It's a digital download. It's available at evotrader.com/condor. All right, and you can review the strategy and see the process. We're very open about it and how we do it. Okay, if you want to reach out to us, you can call us at 312-637-2249. That is our office in Chicago. All right, and then we can reach out to us through support at evotrader.com. All right, and that really is it, talking about silent giants. And you would not believe the stocks that act very quiet through their earnings. You would be surprised. Like NVIDIA, I was actually kind of surprised when they started showing up on my quiet list. It was very, very interesting. So with that, that is it for this session of Silent Giants. And if you have any questions or comments, just let us know through the phone number or support there. And that is it for today.
Thank you, Jeff, for that great information. That is a very unique strategy to pull some money out of the market, and it's still earnings season. So ladies and gentlemen, if you want to learn more and receive actionable trade alerts from a professional fund manager and 37-year veteran, Mr. Jeff Beamer of EWO Trades has a solution for you. We placed his Labor Day special offer in the chat box. Thanks again, Jeff, for joining us today on Traders Corner.
You're very welcome. I was glad to be here. Thank you.
Thank you. I just wanted to pause for a second and thank everyone in attendance today. We have over 1,000 traders from all over the world participating in our event. And on behalf of Traders Corner, I wanted to say thank you for joining us today for this Investors Summit. Ladies and gentlemen, you'll want to listen very carefully to our next presenter. He is a professional trader, registered investment advisor, and commodity trading advisor. He speaks on option strategies at many seminars around the world. He is perhaps best known as the author of Options as a Strategic Investment, the best-selling work on stock and index option strategies, which he has sold over 1 million copies and is often referred to as the Bible of options trading. He is regularly quoted in publications such as the Wall Street Journal, Barron's Technical Analysis of Stocks and Commodities, Data Broadcasting's Exchange Magazine, Futures Magazine, TheStreet.com, and Active Trader Magazine. Ladies and gentlemen, here to present McMillan's Market Outlook, what option indicators are saying now. It's always an honor to introduce Mr. Lawrence McMillan of McMillan Analysis Corporation. Welcome back to Traders Corner, Larry.
Oh, thanks, Anthony. You hear me all right?
Yeah, I can hear you.
Okay. All right. Well, let's get started. We're right on time, I think. Oh, we're actually a few minutes early. Well, wow. Okay. So we're going to spend some time talking about our market indicators here. Just a quick bit of background on our company. I started it as a derivatives research firm after running a prop desk on Wall Street for a while. And we were looking for high-end clients, data, recommendations, etc. The recommendations were pretty successful. So in 2008, after some nice calls in that time, we moved into money management at the request of some of the clients. So we're both registered as a CTA on the future side and an RIA on the stock side. We also have a certain amount of option education, webinars like this, and also our mentoring. So I'm going to come back to this later, but I do want to point out that the PDFs of this webinar are available at this website. And by PDFs, I mean one is in color and one is in grayscale in case you want to print it out and not soak up all the color ink in your printer. I'll come back to the offers later. So these are the basic 4 things that I look at, although we'll take a look at a couple of other things as well. But the S&P chart is, of course, very important. That indicates really what the market is doing. If the other indicators are not in line with that, too bad, because that is what the market is. Then we'll talk about put-call ratios. We'll take a look at broad market as well as individual stocks and futures. Market breadth, we have a couple of ways of looking at that, an option-oriented way on that as well. And then some volatility considerations, VIX and the VIX derivatives. So a very important rule is oversold does not mean buy. We don't really have anything that's oversold right now, but when a market is collapsing badly, it can be oversold for quite some time before it turns. This rule is a little bit more apropos now. Overbought does not mean sell. So we've already had some overbought indicators in this strong rally that's happened since August 5th, but those are not sell signals yet, at least in those particular areas, breadth being one, for example. So we wait for the overbought condition to abate and for an actual sell signal to occur, not just jumping in front of an overbought market, because overbought markets can continue to go higher for quite some time. So this is just a 2-year chart of the S&P. We can kind of get a handle on some of the general things. First of all, the top of the market in 2022, before we started into this bear market right here, was about 4,800. And that was an important level. As we re-challenged that level, it had a little trouble getting through last December. Then this year we broke on through, and now we've, of course, made new highs several times since then. So a bull market's in force, connecting the October low of 2022, the October bear market low, and the October correction low of 2023. You can see that this trend line is well below current levels, so we've exceeded that by a great deal as well. And that wavy line in there is the 200-day moving average. We've exceeded that by a great deal as well too. So in some ways, this chart is showing us that the market is overbought, but this morning, or I guess we're afternoon now, we're right back here at this level, 56.45 or so, looking to perhaps break on through to new all-time highs. Just a quick recap of some of these, the size of the moves. The bear market was a 27% decline, so that's a real bear market. That's about right. This October decline in 2023 was a 10% correction, which is typical in a bull market that launched this big rally. Now we just had a 9% correction that came and went very quickly. In fact, in some ways, historically quick. VIX, which moves opposite to the market, VIX went from 17 to 65 to 17 in 2 weeks. We've never seen anything like that in the history of VIX. We've seen, 2 months, but not 2 weeks. So I don't know what's exactly causing that, except for the fact that it just seems like a lot of traders are acting with the same game plan all the time. So the moves are quite large and quite, swift. I don't think it really has anything to do with 0-day expiration options. So this is just the same chart zoomed in. It's a 1-year chart to show you a couple of things, and you couldn't quite see that clearly. First of all, there's a gap right in this chart. The gap is filled down here at 54.70, I believe that is. And I don't think that's all that significant, but this is right here where I had this red line, 53.70. That had been an area there. We gapped over it. When we broke it the first time, we went straight down and then coming back right up through it again. But I think it still represents an area that people are looking at as kind of a bailout area. So as long as we're above 53.70, this chart is neutral to bullish. And despite the fact that in the last 2 weeks, we've been contained in this little green box here, and we still are even today with the market up strongly. But I think once we break out of that, it's just consolidating that big move that we had. Once we break out of that, I think we'll get a pretty strong move in either direction. If we break out on the downside, we probably will test 53.70. If we break out on the upside, we're going to go, well into new high territory. So that just sort of repeats the things I said. Close above 56.70 would be a new all-time high. So that's why I have that on the upside and 53.70 on the downside. And anything in between is just sort of trading range, kind of a wide trading range, but the market moves pretty swiftly these days. So we do another thing with the S&P chart is that we draw modified Bollinger Bands on it. Now, when John Bollinger invented Bollinger Bands, he defined a realized volatility as the standard deviation of closing prices, which seems reasonable, but that's not what the math guys use. So Black-Scholes and other mathematicians use the standard deviation of daily percentage price changes. And that gives you a slightly different number. Since we're in the option business and our modeling has to have realized volatility and the implied volatility line up the same way, we need to stick to that definition. So we use that definition of realized volatility to draw Bollinger Bands. And when the market moves outside of plus or minus 4 standard deviations, 4 sigma band, and then moves back inside, we get a signal. So here's the current chart. Let's just look at the most recent signal here in early August, just a couple of weeks ago. We move down, this is the minus 4 sigma band right there. And this is the minus 3 sigma band. So you can see we moved below 4 sigma and then back above 3 sigma, and that was the buy signal. So that's the buy signal right there. We're still on that buy signal. And our target for these is the upper +4 standard deviation band, which right now is at about 57.50. Now we have rolled this position up, so taking some profits out of it, but we're still long based on that buy signal. There was a good sell signal right before that. Now the ones marked in blue are unsuccessful signals. So you can see here we moved outside, and then inside we had just a tiny move, and then we went back up and stopped ourselves out. So this trading system we follow in the Option Strategist newsletter, and we have them for a long time. And it has a very successful track record. We put some other constraints on it just to get rid of some of the whipsaws, but these are the actual signals that we traded in the last year or so. Now, that last buy signal was August 12th. And I didn't mention the stop out. If we were to fall back below the -4 standard deviation band, that would stop out the trade and set up a new one. Anyway, you can calculate these bands on anything, any futures, any contract, any stock, any index. And so we have a service, a rather inexpensive subscription service that will send you daily where the setups are on these buy and sells from these. So it looks like this. There's a chart. This goes through TradingView. If you look at the chart, you can see this is the chart of the S&P, similar to what I just showed you. So here's that buy signal that we just saw on August 12th, the decent sell signal part of that, the sell signal part of that didn't really work all that well, etc. So all the same ones are marked on the chart, and they appear in real time as you're trading this. But here's another one now, Wells Fargo. You can see that Wells Fargo dropped down below the -4 standard deviation band. This is -4 right there, and that's -3 right inside it, and then moved back inside -3, and that gave us a buy signal. So we're long Wells Fargo calls based on this. So we trade this in our newsletters, as well as, you know, you can subscribe to it and trade it on your own if you want. All right, let's move on to put call ratios. So put call ratios were invented as an indicator by Marty Zweig back in the 1950s when he was getting the data from the ads that were placed on every Sunday in Barron's by the 6 or 8 put and call dealers that existed at the time. And he began to realize, let's just go to this, he began to realize that when there was a lot of put buying going on, the market went up, not down. And when there's a lot of call buying going on, the market went down. So it's a contrary indicator. I'm going to back up one slide. So in a broader sense, we use the equity only put call ratio, that's all stock options that trade, to predict the broad market, being SPX. So we'll get more specific about that in a minute. But the the difficult part is deciding what is too much and what are we measuring and how do we get rid of noise, etc. There's always going to be noise. Not every signal is going to be a winner, but it works like this. Let's say at the end of the day in IBM, we sum up the volume of all the puts that traded in IBM. Separately, we sum up the volume of all the calls, and that's the put call ratio. So when Marty designed it this way, he puts in the numerator of the fraction. So when there's heavy put buying, the fraction increases in value, the ratio goes up. But when is there likely to be heavy put buying? Well, that's when the stock is going down. So the ratio and the stock move in opposite directions. The same thing with calls. If there's heavy call buying, that's the denominator of the fraction. If the denominator of a fraction increases, the ratio, the fraction decreases. So heavy call buying makes the ratio go down. But when are you likely to have heavy call buying? Well, that's when the stock's going up. So we keep a moving average of these because they're kind of a noisy data set. We use a 21-day average just in case there's something to Fibonacci. And we get the put call ratio chart. Now we post over 1,650 put call ratio charts on our website every day in a section called the Strategy Zone, which is a subscription section, but it's again relatively inexpensive. But the theory is that you need to see the stock chart as well as the put-call ratio chart to make decent decisions here. So this is a theoretical one. Let's say the stock is declining. So as the stock is going down, people are buying puts. They're forcing the put-call ratio higher. So, the public is right during the trend. Now we eventually get over here though, and the put-call ratio rolls over. That forms a local maximum. So a local maximum on the put-call ratio is a buy signal for the stock. So now the stock starts to go up. Move over to the left side, stock's still going up. As the stock is going up, the put-call ratio is going down. People are buying calls on the way up, so forces the ratio lower. Eventually, though, you get to a point where the put-call ratio bottoms out and forms a local minimum, and that is a sell signal for the stock. So that's the theory. When you look at charts, and I'm going to show you a few charts here coming up, you'll see that we look for this theory, this pattern to be repeated. And the more often it's repeated, the better I feel about using that particular stock as a trading vehicle. Sometimes arbitrage or other things can distort the ratio, in which case you would not want to be in that trade. So here's not the current chart, but a chart of the S&P 500 on top, and the equity only put call ratio on the bottom. That's all stock options that trade. So you can see the inverse symmetry that exists most of the time, and that's why we use the equity only put call ratio to predict the broad market. So here's the current chart, and most recently here, I'll talk a little bit in more detail about it shortly, but we had a local maximum, so that's a buy signal. And prior to that, we had a local minimum in July. Kind of fooled around for a minute before it really got going in August, but that was a sell signal. And you can see the other ones on the chart. They're all pretty good, except for this one right here at the beginning of the year. The ratio bottom, it looked like a sell signal, but that wasn't. The market just went straight up. I mean, you could say that small caps went down, but that's kind of cheating. Anyway, it was quickly negated by this buy signal that came along there. So the absolute level doesn't really mean anything to me. This was a very high level here, and these are all these low sells are coming from relatively low levels. But this buy right here is just as good as anyone, and of course this one is very strong right there, and it wasn't extremely high on its chart. So that's the regular, what I call standard put call ratio based on the volume of stock options. Now, as the computers came along, we were able to calculate another kind of put call ratio called the weighted or dollar weighted put call ratio. And here, what we do at the end of the day, I calculate the dollar volume for the option by taking its closing price times the option volume that traded in that option that day. Now you could do that on a tick by tick basis. That's an expensive data set. It wasn't giving it, we tried it, it wasn't giving us any better results than doing it this way. So at the end of the day, we do that calculation, let's say for every option in IBM, then we sum up all the dollar volumes of the puts. Separately, we sum up the dollar volume of the calls, divide the two, and that's your put call ratio, your dollar weighted put call ratio, or often just called the weighted put call ratio. And now we're measuring the dollars being spent on bearish opinion versus the dollars being spent on bullish opinion. In my way of thinking, this is a much better statistic. So here's the current weighted chart going back 1 year. Again, remember that we were talking about using all stock options to trade here to make this chart. Now the signals occur more or less in the same place, not quite every time. Last fall, this buy signal right here was perfectly timed. If you go back and look at the chart of the other one, that signal was early. In any case, we had the local maximum here that gave us a buy signal. Previously, we had after kind of just going sideways for a while, finally broke up and got a sell signal there in mid to late July. So again, pretty good signals, caught a lot of market move with all of them except the one marked there in blue. Now, I will say, if you were a subscriber, you know that this last time the signals did not confirm right away. We have a put call. We have a computer program that looks at these sort of like a chess tree. Looks extends out in the future 10 days or so. It can estimate. Of course, it knows what's coming off the 21-day moving average, and it can sort of estimate what's coming on by assuming the put call ratios aren't going to change a whole lot from day to day. But so usually within like a day or two of the peak forming, we'll get a confirmed thing from the computer that that peak was forming. In this particular case, it took several days. So this time, these last two buy signals, this one right here, and then the one on the other chart, were really kind of late coming in. So as I say here, they're late to the party. We had other indicators that had turned bullish, of course, but in any case, they're now on buy signals. They're dropping, and those buy signals are going to be in force until at some future point they'll form a local minimum, start to move higher, and that would be a sell signal. But for right now, they're on buy signals. Now, what do we buy when we get these? Either McMillan volatility band buy signal or the equity only put call ratio buy signal. We trade SPY options based on these broad market indicators like this, and I try to buy an in the money option because what we're doing here is trying to predict where the underlying is going, and so I don't want to buy an option that's going to lose money even if I'm right on the underlying. The way to prevent that is to buy an option with a relatively high delta. So the delta just measures how fast the option moves with respect to the stock price. So you could have an option with a delta of 0, meaning it doesn't move at all when the stock goes up a point. Or you could, on the other hand, have an option that moves exactly with the stock. You don't really need that, but you'd like to have something that's got a modestly high delta. So specifically, we buy 1 or 2 strikes in the money, and on our short-term trades, we're looking to have be in a call that has a delta of 70 or higher, or if we're trading puts, minus 70. And if we're going on a little bit longer term, like put call ratio, maybe we're looking at 3 to 6 months, we're still going to buy at least an at the money option, which still has a decently high delta. So if the underlying moves in my favor, I'm going to be making money with these options. And so that's my point. We're typically, as I said, 1 to 2 points strikes in the money with a SPY option. Now, TV, they seem to spread a lot of their trades. In fact, pretty much all their trades. I don't quite know why. That's really not the way that a professional option trader trades. But what I mean by spread is if you have a buy signal, you buy a call at this strike, and then you also sell a call at this higher strike. So all is well and good, you're making money until you get to the higher strike, at which point the call you sold lops off your profit potential permanently, and you can't make anything more on the upside there. Now, that's devastatingly bad for your option position if the stock really takes off. Earlier this year, cocoa went up 80 points at $1,000 a point, $80,000. But if you had spread, you would have probably, not gotten 70,000 of those $80,000. So there is a time to spread, and that's when the options are expensive. And even though VIX has come down a lot, it's still modestly expensive, especially in the longer term contracts. So when they say that they spread, they usually will say, well, the risk is less. That's a completely false statement. Your broker will ask you to put up 100% of the risk in both a call purchase or the purchase of that spread, which is called a bull spread. So you're risking 100% in either case. So your risk is not less. Now your dollar risk is less. Here, this would be the call purchase here. This is the spread purchase here. You can see the call keeps on making money. The spread stops making money at a certain point above the higher strike. So, if that's what's really concerning you, then only buy 4 calls instead of 5 spreads or something like that. But the risk is 100% in both trades. So even if you do spread, there's some things you can do to mitigate the negative aspects of the spread. And by that, I mean the stock goes up through your top strike and you're cut off. So first of all, widen the difference in the two strikes as much as you can. As volatility increases, that would be as VIX increases in terms of SPY options. And then number two, roll if the short strike is hit. I'll show you an example. So right now, talking about widening the difference, I'm not spreading any options that expire earlier than October 18th. But if you're talking about October 18th and later, they start to get more expensive, and they're actually quite a bit more expensive right after the election. So I'll show you some examples of that when we talk about VIX futures. But essentially, I want to spread currently, if I'm doing a SPY spread, October 18th expiration or later, I will spread it 20 points wide. But if I'm doing a put spread, I'm going to spread it 40 points wide because out of the money calls are much cheaper than out of the money puts on SPY and all the other indices. So that's how you widen the strikes. Now, as far as rolling when the strike is hit, what I mean is this. Suppose, today S&P's or SPY's around 560. So let's say you're buying a September 560 call, selling a September 580 call, and that's all good. And then it trades all up and it hits your 580 up here. Well, okay, at that point, your position really can't make much more money. Yeah, it can make a little bit more money, but it can't make a lot more money. So what I'm suggesting that you do at that point is sell that spread that you bought previously, take the profit, and now if spreading is still what you want to do, roll both strikes up 20 points and establish a new spread. So you can keep doing this repeatedly. You keep taking partial profits out of the position. You keep raising your strikes, so your risk, if there's a reversal to the downside, is less, and it just works out pretty well that way. You won't make as much money as if you just bought a call and held it, of course, but we're making the assumption here that you decided to spread initially. For puts, it works like this. If I'm doing a put spread 40 points wide, then I would buy the 560 put, sell the 520 put, and then if it dropped to 520, I would roll the whole spread down 40 points on each side. All right, let's look at some individual put call ratio charts. And we use a little bit different approach here. Here, I'm not trading every local maximum, local minimum. I'm trading only the extreme ones. So this is Chipotle. And you can see that most recently, it got up to a very high, in fact, the highest on this chart, a very high extreme before forming the local maximum. And that was a buy signal. So we'll launch Chipotle calls right now. It hasn't really responded all that well. And the put call ratio has fallen a lot as that has happened, but it's still going down. So we stay in these as long as the put call ratio is on the buy signal, which means it has not yet formed a local minimum. Eventually, though, it is going to come down here and form a local minimum. So at that point, it would either have to start using a tight trailing stop on my long calls here, or just get out. Back a year ago, Chipotle had never been as high as it is now. So these levels right here, if we look back 600 trading days, those were high levels. So those were extremes on the chart. They were buy signals. The second one, of course, being the very good buy signal. Now, this is Cooper Industries. We bought in this about a month ago. Cooper, we got lucky. Cooper today reported earnings, and it just jumped like $10 higher. But, again, the buy signal, you can see that we're quite clearly the local maximum here, and the one about a year ago was a good one. That's what I said. We like to see some history on the chart where previous signals did well, and figuring that that's an indication that this current signal might do well. It's not a guarantee, but it's just an indication. AMD, Advanced Micro, of course, they're in the chip business, the AI chip business, as is NVIDIA. We seem to get better signals from AMD, so I used that one to trade this space. The last signal there was a buy signal in mid-August, a couple of weeks ago. It's still on that buy signal. A.O. Smith, this is a brand new one. We just bought calls on this. You can see that a year ago there was a buy signal at about this same level. And by the way, this level is about 170, which means that $170 are being spent on puts for every $100 being spent on calls. So it's a pretty pessimistic attitude. And remember, this being a contrary indicator, when there's heavy pessimism, of course, that's when we want to do something bullish. And we wait for the local maximum and we buy. So here we had a local maximum and long. So long calls on AOS. Now we can use this with futures too. So the bottom chart here is drawn using the cotton futures options that trade on the well, it used to be the New York Merc. I'm not sure what it is. It's part of that whole Continental Exchange now. In any case, the put-call ratio chart there is drawn using the options that trade there. Now, this was at, back then a year ago or 8 months ago, that was a local high, but there's been a bear market in cotton. It's fallen all year, and the put buyers have been extreme, pushing eventually up here to where we have these two peaks, kind of a double buy signal, and it's broken its downtrend. I don't really have a ruler here, but it's broken its downtrend, and that was enough for me. So we're long cotton calls. Now, there is no ETF that simulates cotton, so you must, if you're going to trade these, you must actually have a futures account and trade the futures options that trade on the Continental Exchange, on the ICE. So, but sometimes, here's one, this is 10-year note futures. We just took a position in this as well. Again, these, the put-call ratio chart at the bottom here is drawn using the 10-year note options that trade on the Chicago Merc. But you can trade an ETF. There's IEF. It has fairly decent option open interest, and it simulates, it's an ETF that simulates the movement in 10-year treasury notes. So in this case, you could trade the options on the Merc, which are the actual options on the TY futures, or you could trade options on this ETF. So we made our recommendation for this one in terms of IEF, I'm sorry. And so we're long puts, since this is a sell signal. All right, so let's move on to the next topic, which is market breadth. We can do a couple of things with breadth. One is you can just keep a running total of advances minus declines, cumulative total. And number two, you can calculate an oscillator. We do the oscillator. We do both, actually, but our oscillator value is 90% of yesterday's oscillator value plus 10% of the difference between today's advances minus declines. Now, there's a sort of a catch here. Everyone, of course, can use New York Stock Exchange data to determine advances and declines, but a lot of things that trade there are not stocks. And when interest rates are important, as they have been in the last few months, you can get some distortions there. So we're looking, well, there's a number of years ago now, but we're looking for a stocks only data set. And it turns out we had a great one right in front of us, and that's all stocks that have listed options trading on them. So we keep both sets of data. We publish the stocks only information in our daily newsletters as well as our weekly option strategies newsletter. And this is the oscillator going back really 11 years. And the green areas are when it's oversold, and the red areas are when it's overbought. And then up top, the pink line is the SPX itself. So for, from the beginning down here at 2013, for, most of the time for the next 9 years, it was a bull market. Yes, we did have a very nasty sell-off in December of 2018 and in the pandemic, but most of the time it was a bullish market. But you can see what happened when we got an actual bear market, that bear market that went down 27%. And actually kind of encompassed that too. We started to get a lot more oversold conditions. In any case, oversold does not mean buy. Most recently, when the market sold off there at the beginning of August, we got oversold, and then it popped back out and stopped being oversold here, and that's the buy signal that took place. So then from there, we got into a very overbought situation, and we've corrected from that a little, but we're still in overbought territory. So when I said overbought does not mean sell, we are still long based. These oscillators are still on buy signals. They won't stop being on buy signals until that red line falls back below plus 200. Plus 200 just sort of an arbitrary number, but that's the level at which we consider it not to be overbought anymore. So just kind of repeat, the oversold conditions persisted through August 8th, then it reversed out of oversold. That gave us a buy signal. Recently, we've also noticed that the New York Stock Exchange breadth has been much better than stocks only breadth. So when the market got into that big sell-off there at the beginning of August, the two oscillators spread quite a bit apart. And when that happens, we follow the oscillator differential. And when it gets very extreme, in other words, more than 300 points, we get a very short-term buy signal when it moves back within 250 points, which it did. And so we had a 1 week, this is a 1 week signal. So we had that 1 week trade there. It was a pretty good trade. It doesn't come up all that often, but sometimes, when we get extremely oversold and then start to come back from that oversold condition, this is a very short-term buy signal that trades in there. Just one more thing about breadth. I mentioned you could keep a cumulative total. Well, the one that we like best is cumulative volume breadth in the stocks only data set. So we do the volume of advancing issues minus the volume of declining issues, and then keep a cumulative total. In early July, when SPX was making a new all-time high almost every day for 10 straight days, so was cumulative volume breadth. So there was no negative divergence. They were on the same page. And so when the market started to fall off, there was no negative divergence. However, not every bear market starts with a negative divergence. In any case, to bring it up to date, we just had another new all-time high by cumulative volume breadth last Friday, and the market's strong today. We'll see if it get another one today, but that would augur quite well for indicating that SPX is going to go to the new all-time high. It certainly seems like it is, but who knows? You can't really count things until they happen. We also follow new highs and new lows in all three of those data sets, but we use the New York Stock Exchange data set for the signals that we have. So this set of data over here is New York Stock Exchange. This one in here is stocks only, and then this one over here is NASDAQ. So what we look for here is to see repeated new highs more than 100 and greater than new lows, and that was this latest buy signal we had from this indicator on August 15th, and we're still long that signal. So you can see I listed there the last 6 signals. 4 of them have been extremely profitable. 2 were stopped out, 1 for a profit, 1 not. And so this is a sort of a longer term indicator that's really been doing quite well. And in recent days, not shown on this chart right here, new highs have been numbering over 200 or 300 several times in the last week or so. So that's showing you that, underneath the surface, the small cap stocks are actually doing pretty well right now. So let's finish up by talking about VIX indicators. VIX is not something you can trade. You can only trade the futures or the options, but you can use VIX as to trade off of as a signal generator. So first of all, the trend of VIX is important. Should be trending opposite to the stock market. And then secondly, spike peaks in the VIX chart are buy signals. In other words, when people panic and they force VIX up and then it comes back down, that's a buy signal for the stock market. So just one other point here, sort of falls within the category of overbought does not mean sell. But if you get a low VIX for a long period of time. And in the past, we've had them last for a year. VIX just hanging down at low levels. And I guess by low, I would say less than 14 or something. VIX gets down to that level, that's not a sell signal. That's just an overbought condition. You don't really get the sell signal until VIX begins to rise. So here's the 1-year chart of VIX. And the B's are those spike peak buy signals. The red ones are positive. Now, we have a trading system that we built around those, and the signal lasts for 22 days. So in this case, we got a second signal within 22 days. So we don't trade that one. That's why I have that in orange. Now this one came along and it was actually a losing signal, even though it repeated within 22 days, but was followed by a winner, then a winner, then a winner. Then this last time when VIX first spiked up right at the end of July, it came back down. That was a spike peak buy signal, but then it went crazy. And of course, it went all the way to 65 in a sort of insane move on Monday, August 5th. It actually closed that day at 38. So that was the day we actually got the spike peak buy signal because it closed so far below its peak. So that is this buy signal right here. Came on August 5th. It'll last for 22 days. That goes through September 6th. So this buy signal is still in effect for another week or so. So the other thing I said you can do with VIX is, look at the trend. So we consider the trend of VIX by looking at the 200-day moving average and then trying to decide, not trying to decide, but determining where that is relative to other factors. So there's the 200-day moving average right there. And you can see that on this day, the 20-day moving average, which is this line, crossed above the 200-day, and VIX was already above. So when they're both above, that's a upward trending VIX. That's negative for stocks. So that gave us a sell signal right there, which looked really good when the next week unfolded. But that sell signal is actually still in effect. VIX has not come back down below the 200-day. Came close right there, but didn't. It's still hanging above. And 20 days way up here, so that's no help. So that sell signal, and we rolled positions, took some of those partial profits as I talked about earlier, but still that sell signal is technically still in effect. I mean, I wouldn't take a new position, I don't think, based on that, but the previous position was a sell signal and still is as far as the trend, as far as the trend goes. Anyway, this sort of just repeats that same bit of information. I did want to just point out that VIX was low for a fairly long time this year and last year, but again, there was not a problem until you just saw right there when it exploded. Then that's when you take defensive action, buy puts or what have you. So you can't trade VIX, as I said before, but you can trade VIX futures and VIX options, and the options are actually options on the futures. So we can use the futures for some market predicting ability as well. One is if we plot where the futures are trading, if there's an upward slope in the term structure as we go out in time, when that's like this, that's bullish for stocks. But occasionally this happens. And it happened really heavily in March of 2020, but it did just happen again this time, right while that decline was taking place, on specifically August 1st and 2nd and August 5th in the morning. It went away then after that, but usually when you get that negative thing, you get a pretty big correction in the market. We had one, it was so fast though, you had to really be acting on it, be looking for it. But in March of 2020, it persisted for a while, and there's some strategies you can make some pretty good money on that. In any case, here's where we are right now. So I took these prices at noon today because yesterday things were a little distorted by the fact that NVIDIA was reporting earnings after the close. So VIX is at noon today was at 1538. The front month futures, the September futures, they're trading at 1580. They're based on SPX options that expire in October. So September future is based on SPX options expiring in October. So if we take the price of the futures minus the price of VIX, we get a 42-cent premium. October is trading here. I'll come back to that in a minute. You can see that that's a big jump. Then actually the next two are lower, and then they all start to go higher again. So for the most part, this term structure is sloping upwards, with the exception of this, what I call election bump right there. These October options are based on SPX options expiring in the middle of November. In other words, after the election. These options are very expensive. It's not always the case that elections cause volatility, but I guess they're figuring this one will. And so traders are paying up for those options, and that inflates the value of October futures because it's measuring the implied volatility. It's measuring the implied volatility of those options, and so these futures are elevated. So we've been calling that the election bump, but you can see that all these futures are trading at a premium, and that's also bearish. It's if they go to a discount, that's when you start to worry. Now, the futures can be quoted on the CBOE futures website with a delayed quote, but you can also follow the 6 volatility indices that the CBOE publishes. There's a 1-day, which is useful for zero data expiration trading, and we're actually going to be doing a seminar on that right after Labor Day. Then there's the 9-day volatility index. There's VIX, which is a 30-day, then a 3-month, a 6-month, and 1 year. So if we look at these, you can see that they're all uniformly going upward in value. So the term structure is sloping upwards, and that's bullish. So that's good. It was negative there for a little while in August. It kind of hung around that negative area, but now that's dissipated. So the number one simple thing to look for is the relationship of the 2 front month futures, September and October. Right now, because October is so inflated, it's trading well above September. We would be worried if September went higher than October, which it did there in late August. In any case, this leads to another short-term sort of oversold condition that we got. And when the term structure inverts, which it did in all the CBOE volatility indices, and VIX went above the 3-month, when VIX comes back down below the 3-month, that's a short-term 1-week buy signal. And that happened in mid-August. So that's another simple thing you can watch for. If the VIX goes above the 3-month VIX, then you wait for it to come back below and buy the market for a 1-week trade. In any case, how's this all add up? So on the left side are all the indicators that we talked about, which were bullish. There's a VIX spike peak buy signal in place. We saw the McMillan volatility band buy signals on the S&P chart. The S&P chart, I don't have it all the way to the left side because it hasn't made a new high yet, but it's certainly looking like it, and it's definitely not a bearish chart. New highs versus new lows, we saw that was bullish. Breadth oscillator still hanging on to an overbought, thus bullish condition. We just looked at the construct, the term structure, and earlier we saw the equity-only put call ratio. So all those things are bullish. The only things that we have that are sort of still a little bit negative is the trend of VIX, which VIX has not closed back below its 200-day, and realized volatility. I didn't really talk about that, but realized volatility is still a little bit inflated. That's generally not good for stocks, but that's a lagging indicator. It takes a while for that to come back down to reality after getting all pumped up during that 9% decline and 9% rally. That made realized volatility go crazy. So right now we're looking at the S&P chart. It's slightly bullish. If you want to be kind of pessimistic, you could say it's neutral. But if it breaks out over 56.70, that's definitely going to be very bullish. And on the off chance it falls below 53.70, that's going to be bearish. So we trade all these signals. All of our newsletters cover these signals. our daily newsletters as well as the option strategists, and we do roll our positions when they get deeply in the money, which for S&P or for SPY options is 8 points. Just one other thing coming up, we're going to have a lot of seasonal patterns from September through January. These have been very good to us in the past, and the first one coming up is you sell the market the week after September option expiration. Now, these days there's a weekly expiration, so really you're talking about the monthly September 20th. In the last 34 years, that's had 28. You cover a week later, by the way. You've had 26 wins and 8 losses, and on average, the market drops about 1% during that time. So, you know, at current levels, that would be a 50-point drop in S&P. You know, you can make money on a 50-point drop. So I mentioned this is our URL. If you go there, we're offering a special on our top 3 newsletters, $99 for 1 month of each, of all 3, $99 total dollars to get the 3 different 1-month subscriptions. I would suggest you might want to take them consecutively rather than concurrently because there's a lot of information there. Also, the PDFs of this webinar are going to be available there. So the 3 newsletters are daily volume alerts, the daily strategist, and the option strategist. There are track records of them all on our website. The option strategist is in a 33rd year publication. We have a very detailed track record of that year by year on the website. And DVA, you know, we're looking for takeovers, but we're trading all these systems too. So if you look down here, you can see most of these trades are based on the various systems that we just talked about. And, you know, we keep a running P&L, of course, on that daily. So if that's our new website, wander around there, take a look at some stuff. There's, we also have a YouTube channel, a couple other newsletters. And meanwhile, I think we're just about reached our end point. If you want to email me, that's my email. If you're interested in our money management, there's a slightly different website to go to for that. I will tell you that our minimum account size is $100,000. So I guess I'll shoot it back to you, Anthony.
Thank you, Larry. As usual, that was incredibly informative information. Ladies and gentlemen, that was Mr. Lawrence McMillan of McMillan's Analysis Corporation. We refer to Larry as the E.F. Hutton of options traders here on Traders Corner because when Mr. McMillan is talking options, it's a real good idea to listen. I guarantee you that you will learn something. Keep up the great work, Larry. I was waiting all day to listen to your perspective on the current environment. Please come back and see us on Traders Corner.
Okay, will do. Thank you. Thanks for having me.
Yeah, thanks for being here. We appreciate it. Ladies and gentlemen, if you want to learn to trade options from the author of the Bible of Trading Options or just start receiving Larry's trades, he gave us his special offer and we really appreciate it. Today's summit has a wide diversity of trading strategies, and our next presenter is the founder of Shark Indicators and chief architect of Bloodhound and Blackbird. He has created innovative trading software that simplifies trade management without coding. With over 20 years of a combined experience in software development and trading, he has uniquely positioned Shark Indicators to empower retail traders. His primary mission is to provide tools that were once only accessible to large hedge funds, demonstrating his commitment to improving the trading landscape for all. Ladies and gentlemen, here to present Magic in Minutes, Discover Winning Trade Systems with the Power of Optimization is Mr. Jeremy Tang of Shark Indicators. Welcome back to Traders Corner, Jeremy.
Thank you, Anthony. It's always a pleasure to be here.
Thank you.
Yeah, today we're going to be talking about optimization and backtesting, but just to sort of get a feel for the audience and kind of where you guys are in terms of, just so I can custom tailor the presentation a little bit. How many of you guys have never heard or are not familiar with the NinjaTrader platform? Have any of you guys not heard of NinjaTrader before? Okay, and you could just put I guess you can put it into the questions. I think that's probably what I can see here, or the chat. Okay, looks like I don't get any answers here. So I figure pretty much everyone here is is familiar with NinjaTrader, that's great. That typically means you guys are a pretty sophisticated crowd. And we're going to talk about back testing and optimization. This is actually really exciting. This is a feature that our customers have been asking for years, and we are kind of on the cusp of a beta release. And so let's talk about optimization and what it is. Obviously, you guys are here because you're sophisticated traders, right? And the way I kind of look at it is like the bottom line is, when you're trading, you're basically trading against the next guy, right? It's trader versus trader. Some traders are thinking it's, the instrument's going to go up. Some are going to think it's going to go down. And really, the way to statistically give yourself the best chances of being right is to create a trade system and test it. That's what we call back testing. Optimization, however, is an entirely new world. And I'll just kind of summarize it and say it's the fastest way to find winning trade systems, because that's obviously kind of like, that's what we all want to do in the end. In order to get there though, right, I'm going to talk a little bit about back testing, just to give some background. Back testing, the old-fashioned way, if you say you've got a trade system, you've got some rules, and you've got a chart, right? You got some ideas, and really the only way to test to see, of course, if your system is viable is to go through, and if you say you don't have a computer involved, manually go through and mark all your trades off and tabulate the results into a large spreadsheet, and then figure out from there where you need to improve. And then, I mean, obviously that's a very time-consuming thing, but I mean, we have computers, right? And spoiler alert, we sell tools that do this sort of thing for you, or help you build your trade system so that you can back test it. So if you really think about it though, like, I think a lot of people don't really make that leap, right? Is if you want to use the computer to back test, you actually got to get the computer to first understand your trade system. And for it to understand your trade system, you have to describe it, in detail in terms of when to go long, when to go short. And in fact, it doesn't stop there. A lot of people maybe don't realize that a lot can happen when your positions are on, and you look at position sizing, you look at order management, and in fact, a lot of the more experienced traders will tell you that's actually the more important thing is how you manage those trades. So you got to worry kind of all those components, and then you got to figure out a way to describe that to the computer. And really, the only way to do that, if you don't have any software, is you need a full-blown auto trader to do that. You need to be able to describe again when the entries are, how those trades are going to be managed throughout the trade. And to do that, you basically got to be a coder, unless, and this is where we come in, unless you have tools like ours. And this is what we've been doing for the last better part of the decade. Actually, it's been about 12 years. We've been selling two major tools. We call it Bloodhound and Blackbird, and together those two flagship pieces of software, when you put together, can create fully blown automated trade systems that are yours, with your rules, your criteria, et cetera, et cetera. Now, once you've got that, you can now do what we call the back testing cycle, which is essentially taking your trading ideas, putting them into the software, performing a back test, analyzing those results, comparing it to maybe a previous back test that you've got, tweaking it, and then kind of doing that circle over and over again, potentially many, 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 many times, until you find a system that you like. So this is kind of where optimization comes in. And this is like really the exciting thing, because to be honest, this changes everything. Because what if you could automate that process? What if you could automate in such a way that you're not just back testing, a handful, like 10, maybe 20 systems, taking a full week to do it, and however long it takes you to do each one. Imagine you get the computer to automatically plug in different parameters, different variables, change it up, and analyze. We're talking thousands upon thousands of possible iterations, and then tell you what the best results are. And this this really opened up kind of, again, like I said, a whole new world of possibilities, because when you've got this, then you're able to very, very quickly come up with many winning trading strategies that worked very well historically. And that gives you a huge, huge leg up against the next guy. Imagine those people that do not have this kind of tool. You're competing against people that have this technology, this capability, right? And I'm talking, not necessarily the retail traders. I'm talking like the hedge funds, the ones that are well funded, have programmers. You're basically competing against entities in the market that have this capability. And so it stands to reason, if you're going to go into a gunfight, don't bring a knife. Go in best prepared with the best tools, and knowing already, statistically how your system is going to perform. And more importantly, get there quickly, right? Get to a point where you can do it quickly. That's what optimization allows you to do. So I'm going to give a real quick software demo, kind of how we accomplish this. If you just bear with me. By the way, you guys can see my screen, right? I should have asked that. You guys can see my screen okay? Okay, I'm not getting any feedback here. Can everybody see my screen? Let's see, how do I, Anthony, how do I actually look to see what the audience is seeing? I just want to make sure.
I could see what you have here looks like Ninja Trader.
Okay, chart.
Yeah.
Great. Okay, thank you. I just want to
You're
confirm, because I hate to go through the whole thing and then realize no one could see anything. Okay, so I've just got a plain old Ninja Trader chart up here, and I'm going to keep this example super, super simple. We've done many webinars in the past. Like I said, we've been around for quite a long time. Us demonstrating, building complicated systems and plugging lots of different nodes in and that sort of thing. Now this is our signal generator. We call it Bloodhound again, and I'm just going to create a very, very simple signal, just a simple crossover signal, because all I want to do is just demonstrate some capability with the optimizer. Okay, so to do this, I'm going to go in, and I am running beta software on my computer right now. So those of you that are already customers of ours, and you notice some slight changes or slight little differences, that's because it is a beta development build that I'm running on my computer here. And I'm just going to do a simple moving average cross, simplest system you could ever imagine, just to illustrate how these optimizations work. Okay, so I've just plugged in here a 10-100. Okay, and I've got on my chart here, I've got the SMA 10, and then the 100 is that long line there. And anytime we cross above or below we go short, and above we go long. Like I said, I'm not recommending this trading system by any means. I just want to show you how we can optimize this and how we can quickly find variations of this system that have great results. Okay, so and I'll just speak really briefly. Like this Bloodhound software is quite powerful. It would take us many hours to show kind of all the capabilities here. But you can put all sorts of conditions in there, and then you can add them together in a logic board. This is what we call a logic template. We call it. You can have multiple conditions. You can plug them in, and then you can compute some result. Really, it's endless in terms of the amount of ideas that you can express in this software. Okay, so what I'm going to do here is I'm going to open up the trading side of it, which is Blackbird. I'm just going to illustrate really quickly what I've got here. Okay, so I've actually pre-built this. I've called it the simple cross. I put it in as a signal, entry signal, and I've just basically instructed this to do a market entry with, and this will just remember this for the for what you're going to see next. But basically, I've got an ATR stop here, okay, and the ATR stop I've got between right now just a 1.5 ATR. Okay, that's very, very narrow potentially for this. And actually, maybe that's a question we want to ask, right? Is like, what is the, how wide should the stop be, and how volatile is this instrument? I'm on the ES right now as an example here on the 1 minute. And a great way to find that out is actually use these optimizations to figure out what the kind of the, what would produce the best result. Okay, so what I'm going to do here is I'm going to take this system here. Okay, so it goes long. It goes long when this crosses above this thin pink line, and it goes short when it crosses below. And it basically just has a long trailing stop. It just turns out that typically these moving average crossover systems are very plain Jane simple. Tend to do quite well when you have a long running. You're just kind of raking in the profits, right? So now I will also just quickly interject and say, look, trade systems are very personal. Okay, so this is just an example, just to be very to keep it simple, but that's the beauty of our software, is you can kind of create any sort of trade system that you like, and that's personal to you, using indicators that you like, using strategies and ideas and tactics that you like, right? So there you go. I've got it sort of built in here, and then I'm going to bring up in NinjaTrader the strategy analyzer window, and this is kind of where all the work is done in this window here. Okay, so I'm going to use our product. I'm going to switch it over to optimization, and then I'm going to select. Sorry, that's our strategy, right? That's exactly what I want. Blackbird is our software. Then I'm going to choose the file. Okay, and I've got it as the simple cross. That's what I saved it as. Okay, and then we've got this new window here. This is really cool. Now I click that button. I'm going to open up this new window here, and it basically maps. It has that strategy I just defined in Blackbird and Bloodhound, and I can pick and choose all sorts of little pieces in it where I can customize. And when I say customize, sorry, I'm going to expose them as parameters. And those parameters, the computer is going to go through and try all sorts of different possibilities with them, and then compute the how much money would have made in the end. Okay, so this is the entry signal here. Okay, remember I did say it was a 10-100 cross, and I'm going to take the fast period. I'm just going to rename that fast period so I know what it is. I'm going to take the slow period. Okay, and this will all make sense in just a second here. Right, and then I'm going to go to that stop loss, and you look at all these possible variables that we can basically tell the optimizer, I want to tweak these things. Like you could even do money management, like the maximum number of trades per day, maximum number of consecutive wins or losses in per session, that sort of thing. You can tweak all those. You can even test those, right, and optimize against that. That's what's really cool about this. But I'm going to go in, and I'm more interested right now in trying to figure out where, how wide that stop's got to be, right? So as I said before, this was a stop loss at a 1.5 ATR, right? That's the factor there. And what I'm just going to do is I'm going to take the stop loss factor. I want to play around with that factor and see kind of what kind of results can we get from it. I'm going to do this on the ES, and I'm just checking here. That one, because it is the intraday, and I don't want to spend many hours just sitting there waiting for the computer to calculate the results. But I'm just going to do it for the month of August here. Obviously, if you're doing this kind of seriously, you'd be using a lot more data than that. And then here I've got these parameters here. So this is a factor. Okay, so I'm going to try a couple things. I'm going to try the ATR stop between in 8. I'm going to widen that up. So in fact, I'll start like at 2. Okay, and then I'm going to go to 15. Okay, so if you look at that, that's basically telling the optimizer, look, try all possibilities, evaluate the system, calculate all those entries, and go through all my trades and see how they would have played out had my stop loss been a 2 ATR. Then try it again with a 3 ATR, then a 4 ATR, then a 5 ATR, et cetera, until it hits 15. Okay, that's basically what it's doing there. Now I'm going to do the same thing here with the fast period. Okay, I'm gonna restrict it though. I'm gonna put it from a 10, and just, you know, I'm not gonna, like, you know, if you have more time, of course, we would try a lot more possibilities here, but we don't want to take it too long here. But I'm gonna do the same thing with the slow period. I'm gonna test an SMA 50 to an SMA 100, and I want to try. I'm not gonna try every single individual one. I'm just gonna try every 10, right? Okay, so let me just click the button, get this going so that I can keep talking. It's gonna take a little while. I'm just gonna make sure everything else is in order here, and let's keep the best 20 here. Okay, and if I've done everything right here, okay. Actually, I think I have a 0 in there somewhere, so let's abort. Oh, no, we didn't. Did I put a 0 in there? No. Okay, she's going. Okay, so again, I did say this is beta software. We still have a little kinks to work out there. But basically, as you can see, it's calculating. It's actually what it's doing here. Okay, it's like I said, it's taking each ATR. It's going, you know, what if I had an ATR stop of 1, 2, 3, or sorry, 2, 3, 4, 5, 6, etc., etc., etc. But it's also manipulating the crossover in the entry. And it's basically saying, okay, let's try a 1050, then let's try a 2050, then a 3050, 4050, et cetera, right? And basically all those permutations, it's trying every single one. Okay, and as you can imagine, for the mathematicians in the room, you know, as you add more parameters, you know, exponentially those do grow. So you got to sort of pick and choose your parameters carefully, and you know, and be careful with the ranges, because you can, you know, I've got a really short example here of 336 some odd possibilities, but I mean, it's not unheard of to do thousands and thousands of them, right? And there is kind of a shortcut here, and I'll just mention it briefly, but you don't necessarily have to try every single one. That's what we call an exhaustive search. NinjaShare does have the capability to do what's called a genetic algorithm. Now, with a genetic algorithm, basically the way it works is it sort of randomly picks some values and tries it, and then alters them slightly, and then basically it will try to get at a reasonably good answer, maybe not the best one, but one that's reasonably good without exhaustively searching every single possible combination, which like could take extremely long. So like if you started, you know, having 3, 4, 5, 6, 7, 8 parameters, and each parameter you said, okay, you know, gave it like 10 possibilities, 20 possibilities, you know, very quickly you could be running so many iterations of this that it would take you longer than the Earth is gonna survive, you know, like until basically with today's computing power, maybe longer than the sun the sun will burn. So obviously that's not practical, right? So you do have to sort of put some constraints on it to make sure that you do arrive at some results. And in a moment here, we should see them coming up. So yeah, I did sort of allude to this. This is still beta software. This is something that we are on the cusp of releasing a beta. And so any of our customers, existing customers that do purchase, you'll have access to this beta. You just simply have to ask for it. And we have a Discord channel that we'll be putting the link to download it in. But as you can see, pretty neat, right? So it just ran through 336 iterations. Imagine trying to do that by hand, or even just pressing a button to backtest it 336 times. It would take you a long time. And it found some real good results here with some pretty good profit factors. And I would say even a reasonable number of trades, right? Like I've seen sometimes when I was doing my testing, I would see number of trades like upwards of several hundred, and you know, then you kind of ask yourself, that's not something that's going to be practical. I don't think so. You know, so now that you've got this, right, and we've got quite a few combinations here that seem to be that have pretty good results here. So like this one's saying, you know, a fairly wide stop here of 15. Okay, so I did mention that a lot of these, and this is something, as you're doing this, you start to learn the characteristics of your trade system, right? Some trade systems, like this really naive kind of SMA cross, those tend to do just really well when you're pretty wide with your stops. That's probably not ideal for a lot of people, right? But for some people that don't mind the app, don't have a good appetite for risk and don't mind it, I've heard that those can be quite profitable in terms of how they return, like how much they return. So as you can see, it had you traded with a 15 ATR stop with a 30.90, it seems here, right? And there's a couple other ones here. There's a 30, I think a 34. This is a 40.90, right? They're all pretty close, like a 20.90. I think the message I get from this is a wide stop tends to do quite well. It sort of also alludes to the fact that this is probably a very fairly volatile instrument. But you can see, like, what we optimized for, in other words, what we told the computer to search for was the best profit factor, and that's generally a good balance between what's the profit and I believe your profit versus your loss, right? So it's kind of saying here, as long as you can stomach $20,000 in losses, you'll gross 46. But here's actually a really good number to pay attention to. That's the max drawdown. That's kind of like what was the furthest cut deep into your account that it got before making profit, or something like that. I may be kind of jumbling that up just a little bit, but let's just take a look at the chart for example, and then you can sort of scroll back, right? And it's done all the hard work already. It's basically plotted all the trades there, and you can see it. You can see the results, and then you can you can analyze. Again, look at these numbers, right? And this is kind of all relative, and really this is sort of something that as you're doing this more and more, you'll start to get familiar with these different metrics, right? The Sharpe ratio, the drawdowns. I think we even have a equity chart here somewhere. Is that right? I might make a fool of myself here because I didn't go ahead and see this first. No, okay, yeah. So I'm basically saying, and maybe it's analysis. There we go. Okay, that's a pretty nice looking equity curve actually. And it seems to have kind of went up pretty high and then it just sort of went steady after that. So, if you look at that equity curve, that may or may not be ideal, right? If you think about it, it made most of its money in the first couple days, and then since then it's just sort of been putting along, right? And so these are all those things you can take into account. But this is like, imagine how sophisticated this analysis is, right? Having this information at your fingertips is extreme power when you think about it. Like you're analyzing your trade system to such a degree that I guarantee most retail traders it's not even in the realm of possibility for them, because like I said, the barrier to get to this point, to be able to do this kind of analysis in the first place, is so high, right? You either have tools like ours, or you're a developer, or you've got development staff that can basically program this stuff in and do the analysis for you. So that's really the power that we give to retail traders, is the ability to do this analysis in the first place, right? And when you've got that power behind you, I guarantee you, like, you will have the edge over all those people that do not, that are just simply shooting from the hip, right? So this is really what we've been working very hard to do, is again, give as much power to the retail trader as possible. And we're very proud of kind of where we're going with this. So let me continue here. Okay, so yeah, I just gave you a real quick preview there of our tools, and let me just, that's a little distracting, our tools and what's possible with optimization. That's coming down the pipeline really soon, and like I said, we are aiming for a beta release within the next couple of weeks here, probably shorter. So regardless, that'll be accessible to any of our customers that do purchase. Now, I did say, like, I only just barely touched the surface of what's possible with our tools. There's a lot to it. And so, yeah, there's a bit of a learning curve in terms of, like, using our software to build out the kind of trade system that you want to build. And so to that end, we have a ton of learning resources. We have just, I don't know, we have a tremendous amount of online documentation and video. I don't even know how many hours of videos, but we've been doing this for 10 years. And we've got video upon video. Like we've been working kind of on our website in terms of helping people search up, hey, how do I build a system like this? And they can, they can look it up and see it. And we also have unlimited email support. That's for customers or trial users alike. But this is awesome. We actually run a live workshop. This is free for any of you guys that are customers or just trying out the software. And basically, it's a live classroom, essentially, like a webinar. And it's run by Zach White. He's been doing this workshop for basically a decade, week after week, with the exceptions being maybe when he's sick on the on a rare vacation or there's a stat holiday or that sort of thing, right? But generally speaking, every week we run a Bloodhound and Blackbird workshop teaching you basically how to use the software, right? You go in, you ask your question, you're like, hey, how do I build, a system that does ABC? And then Zach will go in and show you live how to do it. It's really, really fantastic. Our customers love it. We also, as I mentioned, have a Discord community, and that's actually where we'll be announcing the beta for this this optimizer, this new feature that we've built into our software. So if you purchase the software, just simply go ask sales or support, hey, how do I get onto the Discord community? In fact, actually, there's a link from our website. I'll show you in a minute how to get there, and you can just join it. So finally, we do have private one-on-one training. So I will just quickly go into pricing because it just so happens that we are running a kind of our huge promotion for the year. We call it Shark Week. We do it only once a year. And if those of you that kind of been following our product, you probably realize we don't discount too often. The last few times that we've been on Traders Corner, we've kind of got like people, hey, where's your deal? Where's your, I mean, there wasn't any because, we were just, like I said, we don't discount too often. This week happens to be the exception because it just by coincidence, it is Shark Week. Last week we ran Shark Week and we're running this promotion till the end of the month. Normally it's $9.95 for these. I'll just kind of put the full prices up here. And when you think about it, like in our tools, right? They're there to design to help you build trade systems. And so, really, when you have our tools, that's kind of like, it's almost like the last piece of software you'll need to buy for trading in terms of, our tools will help you get there to find, and now especially with optimization, find the trade system that's right for you. Because we've always believed, we've been touting this for many years, is that like the best trade systems are the ones that are personal, because of the ones that you've designed, the ones that you tested, those are the ones that you're gonna trade, right? And absolutely, a lot of people get inspiration off the shelf or from vendor A or B or something they read or something on the internet. That's a great way to go, right? But in the end, you're going to personalize it. Almost guaranteed, you'll trade it slightly differently than even someone else. Even they described and they gave you all the signals and they said, go in here when this happens and this happens, and even manage it like this. Almost guaranteed, you'll still trade it differently than the person who told you how to do it, how to trade, right? It's just the nature of business. I remember years ago when I was first kind of learning how to trade. This is like before the age of webinars, folks. Like I'm talking like this is like when we still have classroom environments, and the instructor up the front said, look, if I had, and by the way, back then too, I think I paid about $30,000 in trading courses at that point. Well invested money. I made that money back in the markets. In the end, though, I did find, like, and I'm kind of rambling and diverging a little bit, because a lot of you might be like, wondering about my backstory, but I do tell everybody, that I'm a software developer. That's where my passion really is. But regardless, he stood up in the front of the classroom and said, if I gave 50 different signals out to everybody here, for 50 signals, and told everybody to trade exactly when to go in, I would get 50 different results. There were 50 of us in the class, and so his point being that there's so much that can happen, even if you hand feed someone your signals. But basically, okay, let me get back to where we are, the pricing. So we are running our discount. This is like basically our, I would say, Black Friday prices for Shark Week. And we're taking 500 off Blackbird, but most importantly, we're actually doing a discount for both products together for $14.95, and really that's almost like getting one of the products for free. And so that's going to run. Oh, and I should say, and that's going to run to the end of the month. And we do have 100% money back guarantee. This is something we've been doing for years. It's just it's because we stand by our product, and hopefully the idea is that you can sort of take the risk out of the purchase and try out our software, get it for a good price, and that's going to be available at sharkweeksale.com. So I just noticed I finished quite early. Didn't realize that'd be so fast, but so I'll go ahead and just put up our website real quick here. All right, and I will show you where that link is. So this is our website at sharkindicators.com, and you can see it's quite obvious. We have the sale there. You can just click that sale button. It'll take you right to the products right there. I do want to show you kind of where the support is. Okay, so under support, under documentation, and we've been working hard on this for years as well. Like there's two products, as I said. One's Bloodhound is the signal generator or the logic engine. Blackbird is the actual thing that the strategy that puts the orders on and manages it. And if you go to each one, we have a lot of quick start videos that sort of get you off to the races, right? And this one teaches you basically how to build trade systems using your ideas. Really neat stuff. And I did mention, again, the trading workshops. You can go here and to sign up. Actually, the sign up, I believe, comes when you purchase the software. I think sorry. You'll get links from the purchase, but there's also a link here to register as well. And I did mention that Discord community. You go to support community Discord, and that should take you right into the discussion, like basically ask you to invite yourself, and then you can, at that point, once you're in the community, you can ask to get into the beta channel, and that's where we'll be releasing the beta with the optimizations. I guess finally, if you guys want to try us out, click that free trial button. And yeah, I guess I do have a few minutes to answer questions, which is quite amazing. So, all right, yeah, go ahead, and I can see a couple. I see the questions coming in the questions panel, and thank you, Randy, for that. That's a very kind comment. He says he's very looking forward to the optimization. Believe me, it's been a long time coming. We've worked quite hard on it, and we can't wait to unleash that into the wild and get your feedback. Like I said, I think that's gonna really, it's a game changer. I think it's really gonna open up a lot of possibilities for traders. Okay, Eduardo did say this is only in NinjaTrader. Yes, it is. It is for NinjaTrader. I'll just say, just in the moment, it is NinjaTrader, not in TradingView. I would say not in the moment. It is because NinjaTrader is the most kind of like extensible platform. If you're not familiar with NinjaTrader, it's a great platform. It's really kind of got this niche for, I would say, the really hardcore people that want to tinker, and they really want, like the cool thing about it is you could download indicators from all sorts of developers out there, and there's some really fantastic stuff. Of course, we're one of them, right? And the reason why I would say it's really neat is because the API, if that makes sense to anybody, the API is really open, and so you can really create a lot of amazing tools with it. So you can really extend it and create some. I've seen some amazing stuff out there. Of course, we've been around for over a decade at this point. So, okay, let's see. Any other questions here? No, I think we're we're good, Anthony. We're finishing a little early, so I did rush through it a little bit, especially through the system building part. But yeah, I think we're good for today.
Thanks, Jeremy. Really appreciate it. What an incredible presentation. Ladies and gentlemen, good news. No more expensive programmers. Now you can create your own auto trader, experiment with new ideas and validate them with back testing. You can literally create your own automated robot in minutes, all with no coding required. Amazing. I have a few ideas I'd love to try out myself with your Blackbird to automate for Ninja Trader. Sounds amazing. Ladies and gentlemen, if you're looking to create and optimize your own trading system and trade management strategies without any coding necessary, Mr. Jeremy Tang of Shark Indicators has a solution for you. I know on his slides, he placed his Labor Day special offer in the chat box. Jeremy, if you also want to put it into the chat box, you could do that.
Sure. Yeah. I mean, if you can see my I'm in the chat box. You can go to Shark Week sale.
Okay.
Yeah.
Excellent.
And that should just forward you right to it. Let me just try it out.
All right. Thank you, Jeremy, for making our audience such a generous offer. Please come back and see us on Traders Corner.
Will do. Thank you very much for hosting us.
Yeah, thank you, man. Well, ladies and gentlemen, that brings us to our last two presenters of the day. Up next is a seasoned professional trader with over 14 years of experience in trading the markets. Over the years, he has tenaciously studied charts, strategy, and trade plan development. And since his own enrollment into NeuroStreet's coaching and training, he has found his way to consistent, profitable trading for several years now after facing a grueling 10 years of break-even anguish. He is a highly sought-after guest speaker for virtual events worldwide, tasked with educating and sharing his insights on how other traders can pull themselves out of the mire and into consistent, profitable trading with discipline, proper money management, and a greater focus on the big picture. Here to present Quit Your 9-to-5 and Scale a Day Trading Career in 90 days or less by following our trades live is Jim Simmons of NeuroStreet Trading Academy. Welcome back to Traders Corner, Jim.
Yeah, good to be here. Thank you. I appreciate it. I know we're running a little bit early here, so if you don't mind giving me just about a minute, I should be ready to go here in just about a minute. So
yeah, thank you. We appreciate you being able to start early.
Yep, just need about 1 or 2 minutes, should be good to go.
All right. All right, ladies and gentlemen, so if you need a tea or a coffee before NeuroStreet gets started, now might be a good time. We got 2 minutes.
You guys can see the screen okay?
Yes, I could see it pretty good there. And if the audience wants to chime in as well, that'd be good.
Perfect. All right.
Yep.
Good deal. All right, well, I think we should be good to go then. I think I'm all set now. If you guys are ready, and we can go ahead and kick this off.
Yeah, the audience said audio and video is good.
Cool. All right. Well, let's go ahead and get to it. I'm going to go ahead and minimize the chat box just so I can focus on the presentation here. But if you need anything, feel free to chime in. Of course, we'll have time to answer questions at the end. So let's go ahead and get started. Really, what we're looking at today is, the ability to scale income from trading. Obviously, that's what we're all here to do, and that's what we're going to talk about today. So, of course, before we dive into the content, we can't guarantee results, and products and services are for educational purposes. And there's risk in trading, so please understand that. Can't guarantee that you'll win every trade, obviously, though I wish I could. All right, so let's go ahead and dive into the meat of the presentation here. So how many of you are sick of bombing your prop firm evaluations? You're bleeding through them one after the next, and sure, they go on sale, and there's nice discounts and all that, and you keep buying these things, wishing and hoping that somehow the next time around is going to be different, right? It's a tough spot to be in. Maybe some of you here are getting funded, but you're losing your funded accounts, and you can't seem to keep that funded account. Every time you get a funded account, you end up right into a drawdown, and you can't seem to find your way out. Or maybe there's some little bit of maybe some impatience to ride out the drawdown or whatever the case might be, right? We've seen that before from a lot of our traders as well. Maybe some of you have a funded account, but you're just kind of riding the profitability line where maybe you make some money, you give it back, make some more money, give it back, right? That's a really, really tough spot to be in, and so what we focus on here at NeuroStreet, is we specialize in helping traders get funded and stay funded with prop firm companies. Now, a lot of you have been to other events, in the trading space, and you see these events and they say these things, but there's really no way to back that up, right? And so we like to do things differently, and we don't just say that we help traders get funded and stay funded. We actually do what we say we do, and there's evidence of that from our trading community. Just some examples of how much our traders have made since joining NeuroStreet, and 12,000, 1,000 here, 15,000, 3,000, 10,000, really all over the map. We have traders that make significant money as well, and some of them have been trading for a long time. There's another story that I like to share, which is that we had a trader who came to us, had started with Ninja and set up a brokerage account, and 2 weeks later lost the entire account. And unfortunately, this is pretty common in varying amounts across the board. And so this trader wrote out to us because he was so appreciative of what we're doing, because after joining NeuroStreet, this trader has withdrawn about 30,000 as of that point, since joining the program, since joining the trade room, since trading with the algos and so on. And so that is a powerful example of what happens with our traders. Now, everybody's timetable is different and everybody's situation is different, but ultimately, this trader is no different than anybody else. And if they can do it, so can you, right? So that's the idea. Well, at this point, usually you come to these events and you feel like, okay, here comes another sales pitch, right? So I like to do things a little bit differently for you. What we're going to do with our time starting out is we're going to look at some trade examples and some trade strategies. And by the way, all these results are real results from our trading. Okay, so these are real results. The trade strategy works. We're going to be looking at a strategy. We'll go through it together. I like to, knowing that time is hard to come by, and so based on that, I like to always share something as my way of saying thank you for tuning into what we're doing. Okay, so maybe at this point you're going, okay, this all sounds great so far, but I've seen this, been there, done that, got the t-shirt, right? Maybe you've been burned before. Maybe you went to a presentation, it looked amazing, so you bought it. Turns out it was garbage, and you're still looking for the answer. That is the case for, unfortunately, for most traders who come to events. Unfortunately, this is kind of the reality. So hopefully this can be a breath of fresh air for you here today. What we're going to look at is the VWAP touch and go strategy. Okay, so this is, as of the time of this clip, was at a 2.03 profit factor, steady, solid. Sure, it takes drawdowns just like anything else, but this is a great strategy and setup that you can add to your trade plans and get some really great trades. 108 trades, hitting about a 75% win rate, and numbers look really good. So here's how it works. So we're going to go through it. The idea of this trade is to trade VWAP as support and resistance. So if the market is above VWAP, we're going to trade VWAP with support. And the way that we enter the market is once we get a break of a lower high going long, or the break of a higher low going short. Rather than show you the video, I think just for the sake of time, I don't know that we have enough time to go through the video with a couple examples, but certainly you can see us trade this in our trade room together. So the VWAP touch and go. So what it is, it's a 5-minute chart, okay? And what you need is you need a daily VWAP. Now most platforms include a daily VWAP, and they're pretty easy to find. Even if your platform doesn't, odds are you can find a VWAP that you can use. So daily VWAP, you need a 0.3 standard deviation. Just kind of like any of the other bands, Bollingers or whatever, you can have standard deviations. 0.3 is the setting for the standard deviations. You need a 9-period and a 20-period exponential moving average. And the way that this works is, when the market moves back into VWAP and the EMAs are above the VWAP, and the market's of course above VWAP, we're waiting for the market to, retrace back into the VWAP. Once that happens, we're going to trade the breakout of the candle high that is touching the VWAP, and that's really about it. Stop is going to go below the swing point, and target is 1-to-1. There's only one other rule, which is if the market breaks the other side of the channel, don't trade it. So an example here would be this example here. We can see that the candle that is touching the VWAP channel has a little circle around it. Realizing that you can't see my mouse, and that's okay, but the candle that's touching is this long bearish candle here, and then we get an inside bar. So in this case, as soon as that inside bar is broken, we take the trade. It's really any candle high, as long as it's making lower highs, then and it's touched VWAP, not broken VWAP, but touched the VWAP channel, then we trade the break of the candle high coming out. The other way, we can see there's a bullish candle touching the VWAP channel, and all we do then is, once it touches VWAP, we're looking for a break of the higher low, and that's our entry. Stop goes above the high, target 1-to-1. It's pretty straightforward. And again, really, it's a simple trade. It's very, very effective, and we do quite well with it. Okay, so good stuff. How many of you here really wish that someone can show you how to fix your trading challenges, right? We talk about how we help traders get funded and stay funded, but ultimately that's the result that we're looking for. That's not necessarily step one. There's some challenges that we need to fix in order to achieve that goal, right? I think we can agree on that. So what kind of problems do we need to solve? Well, in working with thousands of traders around the world for over a decade, we've been able to identify what the major core issues that traders face. Now, there may be some that you're facing that you don't even know or realize that you're facing, and certainly we can help you, one, discover that, and two, fix it, right? So problem number one is money. Obviously, that's a big problem for many traders. You want to get paid. Problem number two, trade strategies, emotions. Trading can be an emotional game, confidence, okay, and then execution. These are the major problems that we look to help our traders solve because it's the main issue. So the reality is we can help you solve every one of these, and we can do it very soon, right now. If really, it's just a matter of, are you open to it? Are you really ready to solve the problems that are plaguing you as a trader? We know you want that. The question is, are you ready? And are you ready right now? Okay, so put yourself into that mindset that you're ready to make a change, assuming you need it, of course. But odds are, if you're here, you have some needs. You want to win, but you need to solve some problems in order to do it, right? We all have needs and wants. Usually that's what it comes down to for traders. So let's pause here for a second. We're going to go back in time, and we're going to go back to why we first started to trade in the first place. The reality is most of us, well, all of us, had a dream of making more money in less time. I haven't had anybody correct me on this one, but sorry, my throat's dry. So more money, less time. The reality for most traders is that they don't make money. They spend endless time trying to figure it out, and they spend a lot of money in the process. So how do we get back to the dream? The first thing is we have to sort of go back and visualize that is what we're after. Because if we don't know what we're chasing, then we're just running blind. We don't know where we're going to end up because we don't know what we're after in the first place. So the first place to start is go back to why we did this. If the goal is to pass an evaluation, to get funded, to stay funded, and to get paid, what's really the goal? It's not even to get paid. It's to get paid over and over and over and over again. That is the goal here. And it doesn't necessarily happen quickly. It happens when it's going to happen. But if we can get closer to that as our destination every day, that's the focus of what we need to do. And so that's what we're after. So let's go in and solve some problems. Problem number one, you want some of that prop firm money. Give me some of that sweet prop firm money, right? You want to stop failing evaluations. You want to stop losing your prop accounts. You want to scale your prop accounts, add more prop accounts, get paid, repeat, 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 right? What we need is prop firm training on risk management, on money management, on drawdown management, and on scaling and how to trade multiple accounts. Scaling in multiple accounts sounds like it's pretty straightforward and simple, but let's start with getting you paid on one account and get you paid over time, and then we start adding accounts as we go. Risk management is extremely important. Obviously, if you don't know how to manage risk, you don't know how to manage the money, that's going to be awfully hard to make money. But more important than that is understanding how to trade out of a drawdown. Because drawdowns happen to every trader across the globe. It doesn't matter how good they are, how long they've been trading. Every trader is going to face a drawdown because not every trade is a win. So how do you trade out of a drawdown? That's a bit of a loaded subject, but we do cover it, and we can identify and help you come up with a plan, because I assure you, if you don't have a plan with how to trade out of a drawdown, the market has a plan for you, and it involves taking your whole account. Okay, so have a drawdown plan, know what that plan is, and we can help you craft that plan. Problem number two, strategies. We want consistent profitability. And we want to know why are we losing? Why are we breaking even, for that matter? Whatever that case might be. Maybe you don't believe in yourself. Maybe you don't believe in your system. Maybe your system sucks. Maybe you need a new system. What we need is winning systems, but not just any winning system. Systems that are easy to learn, systems that are easy to trade, easy to follow, and always offer trades. Some of the best trading strategies that I've made the most money on are the simplest. Why? Because they're easy to identify, they're easy to follow, and you don't stress out. When it comes time to enter the trade, you go, yep, that's a trade. Take the trade. Stop overthinking it. Stop trading from a place of fear. If your strategy is setting up, the market is offering you your opportunity to make money. Take it. So we have multiple winning strategies. I think in futures we trade about 4 different strategies that all average about 70% win rates, give or take, but right around 70%, and that's at about 1-to-1 risk reward. Okay, so if you're doing the math, 1-to-1 risk reward, if you're over 66% win rate, you're doing great. Okay, so we've got great setups there that we can help you with. On the stock side, if you're day trading stocks, we have a trade room that day trades stocks as well, and our win rate there is right about 74% on the stocks trade. A little bit less than 1-to-1 on those trades though, so just so you are aware, those are more like scalp trades. Okay. Problem number 3, emotions. You want to solve the negative emotions, right? And the reality with emotions is you can't have the good without the bad. With every emotion, there's highs and lows. There's opposites of that emotion, right? And so what we need is to understand how to manage those emotions, the highs and the lows, and we can help you learn to manage that. Even said it in the trade room this morning, we took a trade, and we spent some time going over this. We took a trade, and it was a stop out, and it was a decent trade. I knew it was a little more aggressive, and I mentioned that to everybody and said this one might be a little bit aggressive. It's not the cleanest setup, but it's there, and we'll take it. And so we took the trade, got stopped out, and so be it. We got stopped out, so that's fine. We can't let that affect us too much, because the very next trade could be a winning trade, and that next trade came along about relatively quick time frame after that. So we took the next trade, and then the next trade went almost to target, came back and stopped us out of break even. We moved our stops. So at this point, a lot of traders can get upset, they can get frustrated, they got stopped out, and then the trade almost went to target, but then it didn't. and they start to derail a little bit. They go, see, this always happens. I get into a trade and then it stops out, and I get in the next one and I should have taken profit and I didn't take profit, and I should have, and they feel like crap. So what happens next? The train comes off the rails and they start taking trades that they shouldn't take. How do I know this? We see it all the time. So from one side of the perspective, if we flip to one side of the coin, the one side of the coin is we did our job, we took our trades, we managed our risk appropriately, and we're only down one trade, and the very next trade could be a winner, which, by the way, it was. Spoiler. So you can choose to let that stuff affect you, or you can choose to trade like a professional trader. Professional traders don't worry about one loss. They don't worry about the fact that, oh man, it almost went to target, but then it didn't, and then oh my gosh. They don't let that stuff affect them, and it shouldn't affect you. If you're letting it affect you, we can help you learn to focus on what is causing those issues and fix them. We can help you balance the highs and the lows. You don't want to get too, just as you don't want to get upset over a stop, you don't want to get too excited when you take a win, because the next one could be a stop and you give it right back. And there again, a lot of traders can get upset over that. So what do? We focus on the execution. There are only really two things that we can control in the markets, and that is our entry on the execution and our preparation for the trading day and for that trade for that matter. If we focus on the execution and we focus on our preparation, everything else works together. Everything else works. We can't control what the market does today. We can't control what it does tomorrow. We can control what it does on Sunday, because it's, it doesn't open until later, and then Labor Day and so on. We can control what it does on Saturday because it's not open, okay? But the point is, we can't control the market. We can control our entry, our risk management, money management, and how we prepare for the day, and that's it. So focus on the execution. Stop worrying about what the market's doing. Focus on a positive mindset. Positive mindset is not going to make you a winning trader. Wait, what? I thought you said focus on the positive mindset. Yes, you need it in order to be a winning trader. But that alone is not going to make you a winning trader. I hate to break it to you, right? Well, I'm just going to think positively and it always works out. No, I'm sorry, it doesn't work that way in trading, okay? You need a positive mindset. Focus on that. Don't let the markets get under your skin. There's something that we go over pretty regularly, we talk about, and I like to share this, is when it's time to trade, you are a technician. When you're not trading, you're the engineer, right? The engineer's job is to design and implement strategy, plans, so on. They are the ones that craft the plan. The technician is the one who is executing the plan. They're pushing the right buttons at the right time, doing what the plan tells them to do. If they deviate from that plan, that's not going to work. That is your job as a trader. You have a dual purpose. When you're not trading, you're an engineer. You're designing your plan. You're crafting your plan. You're going back, reviewing charts, doing back tests, figuring out what works and what doesn't, figuring out your emotional plan. How do you manage your emotions, right? But when it comes time to trade, you need to know it's time to go. I'm just executing. And look, if it doesn't work out that day, you can even chuckle to yourself and say, hey, man, that engineer, I don't know what they were thinking today. This is terrible. But your job is not to question it. Your job is to execute. Okay, so that'll help you. So there you go, engineer versus technician. Problem number 4 is confidence. You want improved confidence. You want to have confidence in the trades before you enter them. You want to have confidence in the trades while you're in them. And you want to have confidence in your ability to execute. What you need is you need to follow someone else's trades. You need to, in order to learn something, the best way to learn is to learn it and then see it done, because seeing is believing. And if you can see it done first, isn't that how everything works? If you're going to go into any industry, they want you to see it first. Make sure you understand the process. How does it work? So on. Then after you've seen it enough, then they have you execute while someone is watching over your shoulder. Then you get to do it on your own, right? It's the same type of thing in trading. How should you know how to trade a certain strategy until you've seen it done? Sure, you could learn on your own, but wouldn't it be better to see it done by a pro first? So stop second guessing your trades and follow our trades. We've got dozens of different setups. We trade about 4 of them in the room on 3 to 4 different markets every day in futures, which I assume many of you are futures traders. So what this does is it eliminates second guessing. It eliminates fear of missing out, because if we're not trading, you're not. And if we're not trading, what are you missing? You're not missing anything. Nobody's trading because the markets are garbage. And you can keep trading, but you're going to have coin flip trades, and we don't take coin flip trades. It eliminates revenge trading, because if you have money on the table for the day, you don't have to keep trading, because you don't have to worry about it. And if it's the end of the day and we're down, which happens, obviously, it does happen, you need to be able to just let it go and focus on the next day, right? Eliminates self-sabotage, right? You don't have to worry about sabotaging your trading, because you're following somebody else, and in this case, they're the engineer, you're just the technician, and if they get it wrong, you get to go, well, that engineer, whoa boy. All right, so problem number 5, execution. Problem number 5, execution. You want flawless execution. Maybe you know your plan, but you still deviate. You know what that is? That's lack of discipline. It's lack of trust. Remember, when you're trading as a technician, your job is to trust the engineer. That the engine, and that, by the way, that's you too. So, but you want disciplined decisions. What you need is rules. Anyone who trades without rules is trading blind, because even if you have rules written down, odds are you're probably going to break the rules at some point. You're probably going to break the rules, right? You might make a mistake, maybe not intentionally, but you might break the rules. If you don't have your plan written out, you will absolutely break the rules, because there's nothing holding you accountable to your plan. We have strategy cheat sheets available on about a dozen different setups in the market. All the rules are broken down before, during, after the trade, all of it, and exactly where to get in, where to put your stops, where to put targets, what the market conditions are. We've got it all written down. Over a dozen setups, all the rules are broken down. Okay, so that's what we bring to the table for you as well. So we've solved some problems here. We've talked about it at least. So let's answer some questions now. We'll move into the next part. The questions are typically going to be, what's your program? Does it work? How does it work? Will it work for me? What does it cost? What's our promise in the whole thing? How do I get started? And so on. Okay, so we're going to go through these now. Question number 1, does it work? Well, hopefully by now you've identified that it works. But here's some more examples. So we have a trader, passed a funded account, $300,000 account, only 11 days in the gap room for funded account, different trader. And then this trader saying, I'm so excited, they got their first funded account, and Lance, solid, great training, gap program's worth every penny. And I believe that obviously as well. I'm biased, of course. So, but what do our traders say? Well, we have over 1,300 reviews. This was taken a little while ago, so I suppose there's more now. But our traders like us. And the reason is because we do what we say we're going to do. We help our traders, and we've got their back. If you need something, you can reach us, mostly by email. And we do meetings occasionally as well as needed, but mostly by email. But our support team is really quick, very responsive. We're going to help you. More importantly, we're helping them on the side of trading, and that's why we get great reviews. Question 2, how does it work? So let's go over the curriculum. We have on-demand curriculum, meaning you can watch videos anytime you want. We've got intro courses for new traders. We've got foundations courses, and we've got strategy courses. Those are all on demand. So we've kind of got like beginner, intermediate, and then we start to get into some of the advanced stuff. We have a mastery level smart money concepts course that's going to teach you market structure and wave analysis like you've never understood it before. Very, very powerful stuff. And then liquidity. If you want to understand why the market moves the way that it does, or why it stops moving for that matter, you ever get into a trade and it's going and going and going, and then all of a sudden it just stops. And you wonder, what the heck just happened? This will help you understand that, okay? To a very, very strong level. Now, there's still going to be some anomalies, but you will understand why the market moves the way that it does. And if you could assume, that's a very powerful thing to have in your arsenal when you're trading, obviously, the understanding of how the market moves and why. So that is what we cover in the on-demand courses. All of these courses are available now, of course, and then the smart money and liquidity courses are mastery level. Now, another thing that is important to mention is that all of these rules for the smart money and liquidity, they are 100% rules-based. For those of you that may have been part of other education or trade rooms or something, there's some good stuff out there. But the biggest problem that I have out there is when you see a trader take a trade, it could be an educator, it could be anybody, and you watch them take a trade and you go, how did you know to get into that trade? Or how did you know to do this or that? And they say, well, I just felt it in my gut. And you go, wow, what did you have for breakfast? Because I really need to have that too, apparently, because your gut is really telling you something there. Look, it's not our prerogative to trade off of gut or feel, because every day is different. And what you're doing is you're relying on your emotions to tell you when to trade. It's just not going to work. And until you have millions of hours of screen time, you're not going to have that gut. They know what they know without knowing that they know it. And we can't assume that other traders are going to be able to replicate that. So we need rules. We need to know exactly when to do what we're doing. It's not enough to say, well, this looks like a pullback. Well, based on what? You need to have all the rules written out and on how to do that. So we've got that covered for you. Okay, everything's rules based. No guesswork. When it's time to trade, it's time to trade. We don't want to be second guessing what we're doing. As far as the curriculum, what we teach is all the foundations of trading: structure, multi-time frame analysis, liquidity and volume, order flow, price action, supply and demand, money management, trade management, and of course, discipline and psychology, which I would argue is the most important factor out of all of them. So moving on, live trade room. We have 2 live trade rooms, one for stocks, one for futures, and then we have 2 VIP virtual strategy classes that are done live as well. So let's go into, will it work for me? What's involved here? On-demand learning, as we talked about, you've got intro and foundations as needed. Think of this like your encyclopedia. You're not going to read the encyclopedia, but if you need to refer to something, it's there. That's what they're there for. Mastery level smart money course, that's about 11 videos. Take you about a week to get through that. Mastery liquidity course, 12 videos. Again, take you about a week to get through that. What are the trade room hours? Futures is 8:55 to 11:30 Eastern time. Oops, stocks is 8:30 to 11 Eastern time, Monday through Thursday for the trade rooms. Futures is most active 10 to 11:30, and stocks is most active 8:30 to 10. Those are kind of the sweet spots. So if you want to do both, you can do both. You come into stocks 8:30 to 10, you go over to futures 10 to 11:30. Cool. Then we have VIP classes, which is live class virtual. Obviously, it's done through a Zoom class. Futures, 1 p.m. on Wednesday. It's about 90 minutes or so. And then the curriculum takes about 20 weeks, probably a little bit more than that, about 20 weeks to get through the curriculum. We do have all of the sessions recorded as well, multiple rounds of it. So you could come live and you could watch videos. It's up to you on how you want to do that. If you're not able to attend live, we've got them recorded. Stocks, 1 p.m. on Monday. It's about 90 minutes as well. It's about 11 to 12 weeks on that. Earn while you learn. So this is a crazy idea that, again, we talk about follow our trades. You don't have to know everything to be able to trade with us. Isn't that a breath of fresh air? So you don't have to wait 20 weeks, 12 weeks, anything even close to that to start trading with us. Come into the trade room, trade with us. We have lots of traders that get funded while they're learning. It happens a lot. And some of them even, go through the funded account process and start building up their accounts as well. So you could certainly do that. Just come in, copy our trades. We've got solid trades. So does this sound like what you're looking for? What do you guys think? Sound like what you're looking for? You say, I was really looking for something like this. So we've got you covered. So what's included? You get intro courses. So we're going to be, we talked about all asset classes. It's intro courses for newbies. Foundations courses, in case you want to go back and brush up on the foundations, or maybe you want to, maybe you want to go through and research some stuff. Strategy courses, price action smart money course, on market and structure mapping. Again, that's mastery level. And then liquidity and levels course, again, mastery level. And then multiple live trade rooms, futures, stocks, loads of value. I mean, the reality is, you know, some outfits might charge separately for all this stuff, and we just bundle it all together. Okay, obviously you're not going to pay anywhere near that, by the way. Private community. We've got chat rooms on Discord and TickBlaze, which is our new trading platform, coming very, very soon. And it's also going to have a community where you can go in and share. There's also peer-to-peer indicator sharing and algo sharing, and it's amazing. It's all coming together. It's new and it's coming. Pre-built workspaces and strategy templates. We've got, you know, if we've got them, we'll give them to you. We've got stuff built out for Ninja, Trade Ideas, TC2000, TradingView. Yeah, if we've got it, we'll give it to you. White glove onboarding and support. If you need help, reach out to us. We want to help you, really. So we've got your back. Instructor trade plan and strategy review. Also trade review. This is something that I'm very, very happy to be able to offer. If you need help with something, reach out. We want to help you. So if you look at a trade and you go, did I do this right? Or did I miss something? You know, this was a great trade, it worked, but was it correct? And this other trade didn't work. Did I do something wrong? Whatever the case, send it to us. We'll review it. If you want us to look at your trade plan, we can do that for you as well. Strategy cheat sheets. Again, we've got about a dozen of them. They're yours as part of the program, and you get access to all the rules on exactly how to do it so that you have materials that you can study and go to the charts and practice. Crypto. If you ever wanted to learn about crypto, we've got an entire course built out for you there. And so we will give you access to that as well. Weekly inner circle strategy class. This is going to be on, you know, like we talked about the foundations. There's sort of 3 pillars to this. Foundations is pillar 1, advanced concepts pillar 2. This is going to be the money management, staying funded, all the prop firm training stuff, also you know, market chart mapping on structure and supply and demand and order blocks, liquidity, all of that stuff. Anchored VWAP training, all of that stuff's in there. And then trade strategies. There's a bunch of different trade strategies that we teach. So 3 different pillars, and we go through these in sequential order, and that's what we teach. Stocks, again, same concept, foundations, advanced, and trade strategy. Total bonuses. So all of the bonuses, this is all kind of the extra stuff that we include in there, being able to teach it live, getting the cheat sheets. This is all kind of extra stuff, and we're proud to be able to offer that as part of the package. So what about cost? What is this going to cost me, right? That's the next question here. So total value, if you were to buy this stuff separately, you're going to pay a lot of money. We've had traders come to us that have spent well over this, and it's kind of mind-boggling, but it is what it is. So we're not going to charge you that. Pricing is $19.90. You pay that once, and then it renews annually at $295. So if a year is enough for you, then you go with that. If it's not, then you renew for $295. Most traders are going to want to continue with us because, you know, because they like it and they, you know, they want to keep going. So yeah, let me pop the questions out just to make sure if there's any questions or comments that came in. There's a strategy, trade for the middle line only. Yeah, the VWAP, yeah, so VWAP is only 1 deviation. You don't need all 5 lines. So like the middle line is the VWAP, and then there's deviations 1, 2, and 3, which would have, you know, additional lines. You don't need all that. We just use 1 deviation. So to answer your question there. Cool, so that is the pricing. As far as our commitment to you, our commitment is pretty simple. If it doesn't work for you, we'll give you your money back. For us, it's not about the money. It's about helping traders succeed, and we believe that we do that, and we believe that you're going to believe that we do that. And so, what we'll do is, assuming if you come into the trade room and you complete your education and you participate in class and you complete your instructor calls and you reach out for help, if you do those things, we're telling you you're going to love it and you're going to do very, very well. Now, I can't guarantee success, but what I can tell you is that we've got your back, we can help you, and you know, if you decide to join and you do all these things and it still doesn't work for you, we'll give you your money back in full. Not only that, we'll give you a $500 coupon that you can spend anywhere with our companies, just as a way of saying, hey, sorry we wasted your time. So, so that's our commitment to you. There's the link to get started. Just want to go ahead and click on that link, and that'll help you get up and running, and you'll be good to go. I'm going to go ahead and I can't really type that, so maybe if the moderator wants to maybe go ahead and throw that in the chat box, that would be fantastic. For some reason, I'm not able to type in here. Weird. Maybe I have to do it in chat. Oh, there we go. Yeah. What questions do you guys have? We got time for questions. There's no rush. We've got plenty of time here. So, is there any questions I can answer? What are your thoughts? You know, feedback, anything of the sort. We're happy to review that. Products / where are we at? Gap 1990. There we go. So there's the link for you. So you've got it. Yeah, I like to keep things, you know, pretty short and sweet. You know, go through it. There's no sense in dragging things out. I think we get to what we're doing here. If you like what we're doing, come and join us. I think, you know, we've got hundreds of traders with us every day and thousands in the program, and a lot of traders doing exceptionally well with this, and certainly getting better. So yeah, good stuff. Cool. Yeah, I don't really. Oh, how long do you? Let's see. How long do you offer the refund for? You know, I would think if you go a year before you ask the refund, we're probably going to ask you, hey, what took you so long? You know, we're probably going to ask you what's going on. But you want to give it 2 to 3 months, right, before you start going, it's not for me. You really want to give it a good chance, because we strongly believe that it is going to work for you. So within reason, right? I mean, we're pretty reasonable people. We're not here to gouge anybody or, you know, take money and run, but we'll help you. If it's not a fit, it's not a fit. We'll work with you on that. So yeah, there's no set timetable on that. Just the expectations are that you put the effort in, obviously. So yeah, good question. What else? Anybody got anything else? Good to go? Cool. Well, I think in the to follow in the footsteps of the person before me, I think we might be good. Link's not working. Let me check it. Check it out. Let me go there as well and see what's up. Apparently that browser doesn't want to work today. Hang on. Yeah, don't just open the link. There we go. That's good. Connection is not private. Weird. Yeah, let me pull up another link since we've got a little bit of time. Let me go ahead and pull it up, and we'll get you a better link, I suppose. Sorry about that, guys. I don't know why that's not working. I will get that for you in just a moment. Logging in. Don't forget to, by the way, obviously Monday's a holiday, so probably not going to be trading, and back on Tuesday. Be ready for some, you know, a little bit of maybe some chaos tomorrow. Who knows? It's the day before the holiday weekend. Sometimes get a little crazy. Here we go. So gap program. Weird. I don't know why that's not working. All right, let me copy it again just to be sure. Maybe I typed something wrong. And I'm going to paste it again. There it is. Let's try that link. Yep, that one works. I must have had a typo. That's weird. Yeah, try that link, see if that one works. It should work. Hopefully. Yep, okay, cool. 9 and 20 as opposed to the others. 9 and 20 is kind of a common, you know, kind of common EMAs that a lot of traders use. You could opt to go with something else if you think there's something else that really works for you. The idea of using the EMAs is to show that there's momentum, because this is, the VWAP trade. You want to be trading with the direction of the market. And so a lot of these VWAP trades are going to be deep pullbacks on the short time frame, or maybe even a higher time frame. But that helps make sure that the momentum of the market is with you. What you don't want necessarily is where the market goes through VWAP, comes right back to it, and then you're trying to trade off of the VWAP, because that could be a sticky situation where you're just getting into where like they're just running liquidity or just faking you out, So good questions. Cool deal. Anything else? I think we got everything. So cool. So I'll go ahead and turn this back over to Traders Corner, and appreciate you guys hanging out and being part of this. If I can help you out with anything, I'm going to type my email in here as well, excuse me. And feel free to reach out if you need anything. It's just jim@neurostreet.com, and you can reach out anytime. So other than that, I think we're good to go. So thanks for having me. Have a great weekend. Be safe, and we'll see you around next week on Tuesday.
Thank you, Jim. Those setups and strategies look great. Ladies and gentlemen, if you're interested in avoiding all the common pitfalls that traders fall into and want to learn how to stop failing prop firm evals once and for all, and finally achieve consistent results, then Jim Simmons and his team at NeuroStreet Trading Academy have a solution for you. Jim's placed that offer in the chat box. Ladies and gentlemen, that was Mr. Jim Simmons of NeuroStreet Trading Academy. Thank you so much for sharing this incredible opportunity and making such a generous offer today to our audience, Jim. Great presentation, and please come back and see us at Traders Corner.
Awesome. Thanks for having us. Take care, everybody. Cheers.
Cheers. Well, ladies and gentlemen, we are down to our last presenter, and I hope everyone is listening closely, because he is a graduate of Syracuse University and has been trading the financial markets for the past 12 years. He wears several hats over at Right Line Trading. He is a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader, the ultimate edge for traders, is Mr. Rory Powers of Right Line Trading. Welcome to Traders Corner, Rory.
Oh, thank you, Anthony. I really appreciate that great introduction. Thank you so much for having me today.
You're most welcome. Thanks for being here.
Oh, thank you again. And thanks everybody else out there for spending this pre-Labor Day. We're headed into the Labor Day weekend where we can all exhale. And, the good Lord himself rested on the seventh day. And this is a holiday for the Americans and Canadians, the first Monday of September, that we can exhale and get the barbecue going. So I'm pumped up for the long weekend that we're headed into. And thanks again for sharing your day here and your time with me today. I've got a really great presentation today. I'm going to be talking about the AI Auto Trader. And if you've seen any of my presentations in the past, make sure you stick around, because the progression of the optimization process is really incredible. I've got some new information. I've got an extremely enticing Labor Day special offer. So please stick around. I'm going to cut it short. I know it's been a long day packed with great information. But I'm going to try to get through this as quickly as possible. I like to refer to the AI Auto Trader as trading on steroids. We've got these automated bots. And if you don't know it, I'm here to tell you, we are in the midst of an AI revolution. A lot of people equate it to the invention of the automobile. It's huge. In fact, I think we're just scratching the surface of the full capabilities of this AI technology. And I'm going to be showing you some bots on steroids. They're pumped up with AI technology. So stick around. I know it's been a long day, but I've got some great information for you. I want to get the CFTC real quickly out of the way. The good Lord knows we don't want the alphabets of the federal government knocking on our door down here. So I just want to mention that I am not a licensed financial advisor. If you're not familiar with the risks associated with trading, please consult with a licensed financial advisor. With that being said, let's get right into it. First, I always feel a little cheesy, when I show a testimonial, and I don't know why, because when I go to Amazon or one of those sites, I always want to see what other people who bought the product, what their experience has been. And I put a lot of weight into it. I want to know how they're doing with it. So, I'm starting to change my views, but if I had to pick one testimonial, it's definitely Marcy. Marcy, I'm not going to play the video because it's been a long day, but I will shorten it a little bit. And I wish I could play the video because she's just so genuine. She's a very spiritual woman, very motivated and hungry to learn. And I think those are some of the keys to her success. But she came with no experience in futures trading or prop trading for that matter. She bought the AI Auto Trader a few months ago. And today in the YouTube live stream, this is a system in full transparency that we trade in front of the world every morning at 9:30 on YouTube. But today marked a great achievement for Marcy. She got her 15th funded account. So she's had about 60 evaluations that she's taken. Out of those 60, she now has 15 PA accounts. So somebody with very little to no experience in trading or prop trading, with the help of these AI bots and these tools that we've provided her, and as well as our community of traders, man, do we have just a really great community that all help one another through their trading journey. But I want to say congratulations to Marcy, and I just wanted to tell you a little bit about the success that a complete newbie, somebody who is green, had within the first 60 days of trading this AI Auto Trader. So Marcy, congratulations again. Here at Right Line Trading, listen, it's our mission. I like to throw in the military. Mark Miller, the owner of Right Line Trading, is a U.S. Army vet. And I have a ton of respect for anybody who served this military, for served this country. But enough about that. Our mission here at Right Line Trading is to develop innovative trading strategies that provide our members and ourselves, because we're all traders here, with an edge when they trade the market. And the edge is that our indicators help predict the future direction of price, right? That's the valuable information. If we only knew the winning lottery numbers the night before the drawing, we'd all be millionaires. Well, it's very similar. If you can guess the right way in the market, and you've got some money to invest, then the sky is the limit. And that's really the exciting part of trading. But our mission is to develop indicators and strategies that help predict the future direction of price. Also to define risk so we can get in and out of the trades at the most ideal times, at the most ideal prices. Along the way, it's been quite a journey. I've been with Right Line Trading. This will be my 11th year, and I think in total, Right Line Trading's been around for about 13 or 14 years. But along the way, we've built a community of traders that's very deep. And the skill level and experience level there's a tremendous variety. I see some people here today that, have been with us forever. Bob is one of them. He's as good as an expert trader at this point. So we have right up there with professional traders all the way to newbie traders. And one thing that we all share in common is we have an unquenchable desire to succeed at trading. And being part of our community is very valuable. So I just want to take just a quick moment to recognize the members of our team. We have an extremely educated, experienced, and I'd like to think handsome team. First, I want to introduce our traders. I think something that, that distinguishes us from some of our competitors is that we trade the market on the right edge of the chart. We're not Monday morning quarterbacks. You know, how many emails have you received in your inbox about all the money somebody made yesterday or how great they did last year? But when it comes down to what happened today, right now, you never see it. You know, so it makes you wonder, huh? You know, you scratch your head, can I really believe it? So I think that's one of the main things that distinguishes us. We've got a couple of great futures traders in Craig Emery, David Cush. The Cush is our prop trader, runs our prop trading program. Mr. David Wise, I call him Charlie Hustle, the Pete Rose of options trading. 90% win rate. Relies solely on the technicals, no emotions. Great professional traders behind the desks. We've got Brock Miller. He's our college student. He's getting his degree in computer science. Charles Sider has his master's from UCLA. He's a computer engineer. Sergio Luque Rodriguez is also a master's degree in computer science from FIU down here in Miami. And then the owner of Right Line Trading, and I've been around, Right Line when Mark Sachs, who was the founder, was a brilliant guy, and he left us a foundation. Look, he was probably one of the smartest people that I've ever met in my life. He built these indicators that this system that I'm going to be showing you leverages that are all based on mathematical modeling. He was a professor at Thomas Jefferson University. He's a member of the Honor Society, went to the University of Pennsylvania. But, I always think of a handoff. If you've ever seen a relay race, like on the Olympics, they have the 4x100 relay. And the first guy takes off and starts running. And it's crucial how they hand that baton off to the next guy. Well, Mark Sachs handed that baton off to Mr. Mark Miller. And it just so happens that Mark Miller has his MBA from Cal State. Not only is a U.S. Army vet, which I mentioned, but his experience lies in robotics and automation engineering. So talk about the perfect handoff. It was perfect. All things work together for the good. So Mark Miller leads the team. He has brought, let me tell you, what distinguishes us. I mentioned that we trade the system on the right edge of the chart. But I think even more important are those values, those core military values of honesty, transparency, integrity. He brings that to the forefront, and it's instilled in every department here at Right Line Trading. So that's who we are. And I always like to just introduce myself, just so you know, who's this guy talking in the background. My name's Rory Powers. I'm a graduate of Syracuse University. Anthony did a beautiful introduction. I just want to tell you a little more detail about myself personally. I think, the biggest blessing in my life is my family. God blessed me with a beautiful wife. She's a Haitian American. She's a registered nurse and a half marathon runner. I mean, this girl can run, man. She runs like the wind. It's a miracle I caught up to her. But anyway, we had two beautiful children, a 5-year-old and an 18-month-old, and we recently went to Fort Myers Beach. This is a couple of weeks old, this picture. And the other passion of mine is saltwater fishing. I live right down by the Florida Keys. And this Labor Day, I'm hoping and praying, because it's mini season, lobster season down here, where this is a few months out of the year we can harvest the lobster. So I'm hoping to get some lobsters this weekend. We took a recent trip, Mark Miller, myself, and Sergio Odell Luque. and we caught a beautiful grouper, about a 15, 20-pound red grouper, a tilefish, some yellowtail snapper. Just had a great day. So not only do we have a great working relationship, but we also have a great friendship, which I think is very important. So the genesis of the AI auto trader, and listen, I've had the privilege of speaking to so many of you. Gene, my Haitian sensation friend, I see you. And we all share something in common. I shouldn't say all of us, because I have spoken to a very small percentage that are just, genetically gifted, and they're natural born traders. They don't let the common pitfalls, it doesn't affect them. So what I'm getting at is our trading journey is not like the market. It's not a straight road up to the sky. Your account's going to grow to the moon. Unfortunately, in between that, there's a lot of potholes and speed bumps, a lot of frustrations and disappointments. I can't tell you. Listen, I'm terrible at two things. Number one, the second worst thing I'm bad at is trading. The only thing that I'm worse at trading at is dancing. I just cannot dance. Okay, but enough. I'm trying to have fun. But I'm a horrible trader. And the reason I say that is because I've proven it time and time again. The definition of insanity, we all know it. It's doing the same thing time and time again and expecting different results. It's insanity. I can't tell you how many times that I've gone to sleep at night talking to myself that I quit trading, that's it. That's the last account I'm going to blow. And this just isn't for me. Listen, there's a lot of presentations that came before me, and I've tried a lot of those trading options and different types of future strategies. And I've come to the conclusion that I'm a terrible trader. It's just, I saw a presentation on Traders Corner. A gentleman by the name of Christopher McMillan was talking about inherent personality traits that we all share as humans. And there's about 10 or a dozen personality traits. There's more, but the core ones, there's about 10 or 12 of them. And, we all have a certain percentage of a number of them blended into us that make us as unique individuals. But I think it's important to know that if you're a terrible trader like me, it's not your fault, okay? I hate to blame it on my old man, but it's in my genes. I have these anxieties, and they call them psychological issues, emotional issues. You think of sitting on some psychiatrist's couch with your feet propped up on a pillow and telling her about your life's problems. It's a little different in trading. What it is, emotional problems in trading is, you might do what I do. You might squeeze your stop too tight. You see your P&L run up to $200, $300, $500, and holy moly, you can't move that stop up, or I can't move that stop up quick enough because I'm so nervous that it's going to come back and I'm going to lose those profits. But in essence, what I've done is I've smothered the trade. It's not going to be a smooth ride up, a straight escalator to the moon. There's going to be some peaks and valleys, and it's going to come back a little while it matures. And my biggest pitfall is I don't give the trade the room to mature, and that's based on the emotional pitfalls, the emotional problems that I have in my trading. And I've spoken to a lot of you that shared, something very similar. Some of us, won't let the trade mature because they'll jump out of a trade that's giving them heat. You take a little heat, you start squirming in your chair a little bit, and you bail out, only to see that trade continue up into the direction that you held the position. These are, emotional issues that are just ingrained into our genes, and there's very little that we could do about it. There are a few of us. I mentioned David Wise with the 90% win rate. I liken him to I don't know if you've ever flown on an airplane and you're at 20 or 30,000 feet, and all of a sudden you come into these terrible air pockets and there's just horrible turbulence, and the plane starts bouncing up and down, and you're gripping your chair, you're ripping your armrests off because you could swear that this is going to be the last day of your life. And then you hear the pilot's voice come on, and this is like David Wise when he's trading. David Wise is getting all kinds of heat. The market's flying up and down, and the pilot comes on, and he wants to welcome you to Delta Airlines and thank you. If you look to your left, you'll see the beautiful city of Gatlinburg, Tennessee. And he's calm and cool as a cucumber. And he doesn't even see the turbulence. He says it might be a little bumpy, but things will smooth out in just a few minutes. And he's calm, and there's no anxiety there. Well, that's kind of what you need to have to be a good trader. You have to be able to channel all of that outside noise and put those emotions in check and put yourself into a zone. And then, if you're able to do that, which very few of us are, you're going to be a great trader. So this was the genesis of the AI Auto Trader, and let me tell you, I'm really so grateful and honored to be part of such a great team, because it's been our team's commitment to bring this to an end. And how are we doing it? Let me show you. This is going to really blow your mind. I'm going to skip through this slide. The two things that we've narrowed it down to that create trading success is, number one, we have to have the proper tool set, regardless of any goal that you have that you want to accomplish. And I heard Jim touch on it. You have to have the proper tools to get the job done. With trading, it's a competition. We're competing against the other retail traders. So ideally, we want to have a tool set that's more powerful than the next guy. I heard Jeremy say you don't want to bring a knife to a gunfight. I always think of, David and Goliath. David brought that slingshot and he defeated the giant. But let me tell you, if you're going to battle against other retail traders and it's your money on the line, I think that you'll agree with me that you want to have something more sophisticated, more powerful, and technologically more advanced than the guy that you're competing against. Of course you do. And ideally, because I'm a terrible trader, and I've spoke to some of you who've shared in my frustrations, ideally we want software that can automatically get us in and out at times that are at the most opportune moments. And that's what we're bringing forward today. I like to do a little foundation here. The AI Auto Trader is a fully automated trading system that runs on the NinjaTrader 8 platform. Once the strategies are enabled, it's very simple. You check a little box and it's enabled. Once they're enabled, the system will execute and manage the positions for you. There's no more doing complex calculations or overthinking or hesitating or wondering where to put your stop. All of that is out the window now. All of those calculations that you have to do split second are all being done by AI technology. AI technology, and I'm going to get into a little bit of the minutia here today and show you exactly how we've integrated AI into this system in just a few moments. But really what the outcome is you're going to see results that are becoming more and more efficient. As the system accumulates more and more data, it gets more and more powerful. We also have, for our prop traders, we like to call them our custom prop trading templates. We have templates that are good for both getting past the evaluation and sustaining a funded account with the PA account. So stick around. I've got some really great stuff for you. First, I want to touch bases on a few of our top performing strategies. it's important to know that we have a very well diversified portfolio of strategies. We look at a variety of different instruments. In fact, we've got all of the futures index equities covered. What I mean by that is the ES, the S&P 500, the RTY, the Russell, the NASDAQ, and the Dow. So those are the futures index equities. We've also added energy and precious metals with crude oil and gold. So the system really has a finger on the pulse of the market. So the first strategy that I'm going to highlight is a strategy that we trade on the E-mini or the S&P 500. We run it on a few different data series, a few different bar types. The first one is going to be the ES that runs on a 5-minute. Now, the goal of this system is to trade in the direction of the trend that the institutions are creating. And I know it's kind of become a catchphrase to trade in the direction of big institutional money. How do we do it? Without going into too much depth, we look at a number of different things. We look at the market internals. We look at a disparity between uptick and downtick. We look at moving averages and a really complex neural net, which is a multi-time frame assessment of trend that we leverage in order to execute our trades. Momentum is also a key feature. So from July 1st to August 22nd, the ES on the 5-minute, and I want to mention that this is not a back test, okay? This is actual trades taken on a live market. This is trading one E-mini contract from July 1st to August 22nd. So figure about 45 days. That strategy was up $2,919. $2,919. I always like to bring over my actual trade performance on my control center. So you know it's not smoke and mirrors and a bunch of hot air. This is the actual P&L right off of my NinjaTrader on the ES 5-minute. One of the reasons why we have a tremendous amount of success is our risk to reward ratio. As futures traders, I think we all can agree that if your risk to reward ratio isn't leaned in your favor, you're going to have a win rate that's close to impossible to sustain. With this particular strategy, on the average, over the course of a month and a half, our average losing trade is $118. So we're risking very little. Our average winning trade, and this is based on 79 trades. This isn't a strategy that's going to trade every 5 seconds and have you chewing your nails off. This is 80 trades over a month and a half. It's 2 or 3 trades per day on this strategy. But the average winning trade is $648. So our risk to reward on this is pretty close to 6-to-1. It's just under 6-to-1. Now, I've taken trading myself discretionary. I've been able to pull off a few winners, and I'm feeling great. And I'm up, $400 or $500. I got a few winners under my belt, and I'm thinking today's the day. Today's my day. I'm in the zone. Only to pull in on my very next trade a loser and have it wipe out all of those profits that I have blood, sweat, and tears to pull into the boat. And it all got wiped out in one trade. Well, that's not the case here. We're not going to win all of our trades. In fact, we're going to pull in quite a few losers. But guess what? When we're winning 6-to-1 more than we're losing, you could do the math. It's going to lead to an equity curve, just like the one that you see on my chart here today. Let's go to number 2. Number 2 is the E-mini on a 6-unit Renko. One of our new strategies leverages a 6-unit Renko. It's a little faster than a 5-minute. From August 1st to the 22nd, it made $3,575. The next strategy that I want to highlight, which is really turning into a pretty consistent strategy, is this Dow Diamond. The Dow, the YM, is trading a 10 range bar. And, it's important to know because I know the Dow just recently, it went to all-time highs, the Dow did. And there was, the institutions, they do what's called sector rotation. And having strategies running on all of these index equities, when these equity firms or large equity funds when they transfer their equity from one asset class to another, our system picks up on it. And that's why the Dow just in the last few months is kind of caught on fire. So the Dow Diamond, trading that 10 range bar from July 15th to August 22nd, is up $3,328, trading just one contract. Okay, one mini contract, not a micro, a mini on a live market. And the average loser, you can see right here, is $105. Our stop was it's $100 plus our commission. So all of these results that I'm showing you today already have the commissions deducted from them. But the point that I wanted to make, which is really so crucial, is that our average winner is $100 plus commissions. But our average winner is 3 times higher, than our average loser. Okay, and that's really one of the main secrets to our success. I'm going to go into the functionality of the strategies in just a moment, and we've come up with some very clever ways to manage the positions. Not only is important where we get in, but sometimes more importantly is how you get out of the trade. How do you manage the position once you're in it? And I'm going to talk about how we get out of these trades and lock in profits if they don't go all the way to our pretty ambitious profit targets. Next up is the golden nugget. Gold's been on a tear also, like the Dow. As gold is at the all-time highs. And we've got some really great strategies that will automatically trade gold. That system, that strategy leverages a 15 range bar. And from August 1st to August 21st, trading just one contract, that one was up $3,450. $3,450. Just like the other strategies, it has a 6-to-1 risk to reward ratio. I think it's risking 15 to make 90 or 100. So it's got a really great risk to reward, and we have a great way to manage these positions. Oh, no. Someone said no sound. Let me check my audio. Can you hear? Am I talk? Let me ask you. Are you able to hear my voice? Oh, thank you. Oh, thank God. Okay. One of our audience members said that he sees the slide, but there's no sound. I said, oh, my Lord. Okay, great. Thank you so much for answering me. I feel a lot better right now. Derek said, only when you speak. Okay, let's keep speaking. So the gold is up $3,450 in that same time period from August. This one is the month of August 1st to August 21st. So, when I show these results, and I also want to touch, I know the prop trading is, and I just want to mention that this is a system that you could trade a live account or you could trade a prop account, okay? Or you could trade a sim account if you want to trade sim. For our prop traders, we have, as I mentioned earlier, we have these custom templates that are designed in one trade to get you over the hump of passing an evaluation. Just to show you the spirit of a one-day pass, I've got a 45-second video that I'm going to show you, maybe a 30-second video. Don't get nervous. It's very brief. But I think it really shows let me go to YouTube. It shows the spirit of the one-day pass template, okay? I'm going to play this video just to set up the video. It's going to show Mark. It's taken from our YouTube live stream, and he's trading using his prop accounts And if you trade prop accounts, they have what's called a trade copier. And of course, the main benefit of a prop account is you're not risking your own capital. So the prop firms allow you to trade multiple accounts. And in order to trade multiple accounts very easily, they have a tool called a trade copier. The trade copier allows you to take a trade on one account, and it's going to copy it across all of your prop accounts if you'd like. So on this trade that I'm about to show you, Mark is going to take a trade using one of the one-day pass templates that are specifically designed to pass the evaluation in one trade. We time optimize our most powerful strategies at the most profitable times of the day to scale up and trade the maximum number of contracts to go the minimum number of ticks in order to pass the evaluation. So let's let the video play. It's a 30-second video. The green cross comes in. That signifies the conditions have been met. It jumps into this trade with 10 contracts on the NASDAQ between 10:30 and 11 in the morning, which is our prime time for this strategy. And he needs 62 ticks, trading 10 contracts to hit the $3,000 profit goal. He's trading $50,000 prop accounts. In that trade, he does it in very short order. On 6 accounts, he was able to jump the hurdle and get 6 evaluations funded on one trade very quickly. Statistically, our top strategies are very close to 50%. Worst case scenario, let's call it 33%, and it's somewhere in between 33 and 50 for almost all of these one-day passes. If you do the math, if you're getting an 80% discount on a prop account, and you buy 3 of them, statistically 1 out of those 3 is going to give you a funded account. Okay. The cost for a $50,000 account right now is about $33. So I always use the number $100. If you throw $100 out, you get 3 evaluations. At the end of the day, you're going to have a funded account. And the key word that I said just now was at the end of the day. You're not going to be in this long-term, drawn-out battle where you're on a seesaw going up and down, and you're stressing it. It's going to get the job done very quickly and very efficiently. So a perfect example is we have one-day pass on black gold that very recently was way over a 50% win rate, profitable rate. From July 15th to August 15th, it was up over $7,000, well over 50% as its profitable rate. So let me get into how we're able to accomplish and achieve these results, because really they are quite remarkable. And I'm going to show my workspace in just a minute and show you what the system did today. But before I do that, I want to just give you an understanding of what's going on behind the scenes. Listen, the knock on automated strategies, if you've ever purchased an automated strategy, then you know from firsthand experience that when market conditions change, they're not consistent. They just don't do well. They might do good for a few weeks or a few months, but unless you're continuously optimizing the inputs and continuously running testing and back testing and using every tool imaginable to mankind and continuously optimizing the inputs, sooner or later they're going to go stale. Listen, we're trading in a very news-driven market. When Jerome Powell, when he comes out and he's going to do his minutes and they're going to be released at 2 p.m, we know historically before that report comes out, we're going to get chopped to death if we trade. So why would we want to trade during that time when the market's just going sideways? It's insanity to try to pull money out of the market then. Listen, the market can go, my point is the market can go from ranging very choppy market to a market that's of a tear, a trending market in the drop of a dime. and the drop of a news report. And the economic news throughout the week comes out on a daily basis. So what the main reason why, the secret sauce of what's been the turning point for right line trading has been the integration of artificial intelligence. And we're using it in a number of different ways. One of the first ways I want to mention is what we just released last week, which is our pattern recognition. The pattern recognition, the market, the charts are very geometrical and there's symmetry to them. That's, you could see the Fibonacci levels. There's definite symmetry. Well, there's also candlestick patterns that repeat themselves. And when you see them, usually right after a certain candlestick pattern, there's a reaction. The market will either continue up or to reverse. For example, a bullish engulfing candle. You get a bullish engulfing candle, the bulls are in charge, and boom, the market takes off to the upside. Or a bearish engulfing candle, vice versa. A shooting star, a hammer, an inverted hammer. These candlestick patterns continuously happen throughout the trading session. Well, we've developed a closed loop self-learning system that learns the reaction when these formations happen, and it learns from data, historical data, of what to do when these formations appear. And we released it just this past week, and I'm going to show you some numbers on it in just a moment. The second integration, this is showing you inside the strategy parameters. We've actually coded into it the different candlestick patterns that we can use for our exits. If you're in a long trade and all of a sudden you get a big bearish engulfing candle, well, you want to get the heck out of there as quickly as possible. And that's what this system will do for you. If it doesn't go the full excursion, let me back up for just a minute. I was showing how our risk to reward ratio is 6 or 9 to 1. But a lot of people say, well, what if it doesn't go all the way? Well, if it doesn't go all the way, we have some very sophisticated ways to manage and exit these trades. One of them being this candlestick pattern recognition. If we're in a long trade, if our profit target's 200 and the trade goes 120 and we get this big bearish engulfing candle, and the system knows, hey, when this happens, it's going to reverse on us, it's going to immediately get you out of that trade and lock in as much profits as possible. And vice versa for a bullish engulfing candle. So that's one of the ways that we also manage our positions. The second thing that I want to talk about, the other artificial integration that you've probably heard me talk about in the past, is each one of our bots runs in tandem with a drone. A drone is kind of like what it sounds like, okay? It kind of hovers above and takes a big snapshot of the market environment. And what it does is it takes trades in tandem with the bot. So the bot and the drone both execute the same trades, but the drone has a big, huge stop and a big, huge profit target, and it's hovering above and it's reading the average true range of the current market environment. Now, the bot and the drone will share a database that's housed on your computer. We've got some great coders. Let me tell you, I give Sergio a lot of credit on that. The database is stored on your computer, and the drone is going to give information to the bot. Okay, it's going to do two things now. The first thing is it's going to tell them the average true range. The drone is going to tell the bot how much heat it took on the trade before it got to the full favorable excursion, the MFE. The MAE is our maximum adverse excursion, and I don't want to get into the minutia. Let's just keep it simple and say it's going to tell the bot where to put the profit target and the stop where it's going to make the most money. And you're going to have the highest output, the most efficient equity curve that goes up in our favor. The second way we're using that technology is we're integrating what we call our dynamically adjusting trading sessions. And I want to go I want to drop my slide deck just for a quick second here and show you something. The pattern recognition, this is a good example here. And when I drop let me drop my slide deck, and I want to discuss the pattern. I want to discuss the dynamically changing trading session hours, because it's really mind-blowing. What this is, let me explain it first, is this AI closed loop system, like I said earlier, it could take a tremendous amount of data. I mean, like months and months of data, and it could tell you over, let's say 6 months, but we don't really need to go back that far, but let's say a few months back, and it will tell you on the half hour of every day how that strategy performed over a 2-month or a 6-month period. And you would be amazed that consistently there's certain hours out of the day that these instruments outperform other times of the day consistently. I'm talking with incredible consistency. So we ran one of our strategies through this closed loop system, and it gives us an output. On the bottom left here, window number 1 of the trading session hours, it found from 4:30 a.m. in the morning, trading the NASDAQ. This is a NASDAQ strategy. From 4:30 a.m. to 8 a.m., it made $6,960 in profit over a few months. So the system will automatically, in the bot, the drone is going to run 23 hours a day, and it's going to find the trading sessions to feed to the bot and your live account to trade only the times it makes money. That's it. The times it gets killed, the times it loses, the times it's inconsistent will be automatically, dynamically, while you're trading, eliminated out of your trading session hours. Trading session number 2 happened to be from 10:30 a.m. to 11:30 a.m. We found that the NASDAQ between 10:30 and 11:30 is very consistent. It made $2,800 during that trading session window. And number 3, just coming in just a little bit lower than window number 2, was from 12 noon to 1:30. It made $2,475. So if I drop out of this and go to my workspace, and let's open up, and this is the workspace here. The chart templates come just like the chart you see on the top right. And you can see today's top performing strategies right here. But we have a system that's leveraging this AI technology and simultaneously trading 6 instruments, and it's able to put up numbers like this day after day after day. Okay? I only wish that I could actually trade like that. It's impossible. I just can't do it. But this system can. So if I go to my strategy parameters, and I'm not going to get deep into the minutia on this, but I just want to show you on an illustration what I'm talking about, because it's really incredible stuff. Let me bring my slide. Let me see if I can figure this out. Let me go back one slide. Oh, no, actually, I don't need that. What I wanted to bring up and put it right here is this pattern recognition results for August. You could see we let it run wide open, a number of different hours. And trading all the hours, it was up about $6,000 from the 1st to the 29th. But now if we look at the analysis of it, and what I mean by the analysis is if we break it down by the half hour of the day, NinjaTrader has a very powerful trade performance metric where you could pull up a trade performance and look at a strategy over the course of a month or 2 months or 6 months and be able to see by the half hour how it performs. So what this is going to do, this automation that I briefly described today, is if I open up the parameters of the strategy, you can see within the parameters, we've coded in the ability for it to add in up to 3 trading session hours. And what it's going to do dynamically, automatically, with no user input. Okay. People get nervous when they see this. They're like, oh my God, I'm going to have to put in all these times. It's done automatically, and it's based on extremely accurate data. In fact, it's almost 100% accurate. So this would dynamically, in this example, it would put in this trading session from 8:30 to 9 on top. And then it might put in this second trading session and put it in from 10 to 1 o'clock. It might weed this out, I don't know, but it would calculate the top 3 ways to split this. It would probably split it right here with these 2 from 10 to 11, and then take this last one as our third trading hour and make it from 11:30 to 2 o'clock. So this is going to automatically, based on 30 or 60 days of historical data, we can go back even further, dynamically change to the trading hours that it did the best. So, you know, if you look at what that means, if you look at the trading hours, if I was to minimize this and you look at the gross profit and you put the top 3 or 4 windows up top and it excluded the rest of them, well, now that $8,000, that $6,000 that you made, it's going to eliminate all of not all of the losers, but a tremendous number of those losing trades. It's going to eliminate them. And as important as it is to pull in winners, it's more important to get rid of the losers. And that was forefront in our minds when we integrated, when we developed this new integration into this trading system. We want to eliminate as much of the losing trades as humanly possible. And this new AI integration is going to put us leaps and bounds ahead of our competition when it comes to that. So that's the new integration. That new component will be released a week from Friday, not this Friday, but a week from this Friday. It will be released. So right now is a great time to come on board. I'm going to show you my Labor Day special offer, and I'll try to answer a question or two, but I know I'm running short on time, and I don't want to disrespect Traders Corner. So let's do this, because I'm going to do my offer in just a minute. If you do have a question or you want to learn more about the system, please type your name and your phone number in the chat box. I assure you, if I don't get to your call today, I will give you a call tomorrow. But please, nobody else can see it but me and the gentleman at Traders Corner, Anthony. And he seems like a very nice, honest guy. If you put your name and number in the chat, I promise I will give you a call. So the Labor Day weekend special, here we go. And listen, we're coming out on our most powerful update. And it's important to know that if you do come aboard, all future updates are included for free on the AI Auto Trader. So I want to say that the system comes with unlimited VIP support. Don't worry about the installation. Don't worry about ongoing support. We have support, and I've got to give credit where credit is due here. If I pull up Trustpilot and you look at the reviews here, about 100 reviews, people just rave about the AI Auto Trader and our customer support. Just 5-star review after 5-star review. So it's important to know that we're not just going to deliver the system and wish you well. We're going to hold your hand, and we're going to set it up for you. We're going to follow up with you if you have any questions or need any ongoing support. We've got a very talented team that's going to hold your hand. And I also wanted to include for the Labor Day special, normally our prop trading component is an add-on. However, for this special that we're going to run through Monday, we're going to include it as a free add-on. All of the one-day pass templates for all the instruments will be included. The PA templates, the customized templates for PA accounts. Once you get funding, our strategy changes a little. We become much more conservative because we want to sustain our funding. So all of those custom prop trading templates will be included in this Labor Day special offer. You also receive the masterclass modules 1 and 2, where we go into each one of the indicators, each one of the conditions that have to be met in order to execute a trade. And in module number 2, it's a little more advanced. If you want to build your own automated strategy, you could do it using any time frame and a number, a plethora of different conditions in order to execute a trade. And I also want to mention, if you come aboard, even if you don't come aboard, you got to come check us out on YouTube. I'm telling you, you haven't seen anything like this before. And we do it at, it's not a magic show. We trade the system live on YouTube each morning from 9:30 to 11:30. You could find it if you go to our YouTube channel. On YouTube, it's a little tricky to find, so I want to show it to you real quick. If you go to our YouTube channel on YouTube, if you go to YouTube and go to our channel, it's Right Line Trading. There's going to be little sections here: home, videos, shorts, live. First, I want you to know if you subscribe to our channel, you'll automatically get a notification of when we go live. If you don't, you could just come to this live tab and you'll see the one that's live, and you just click into it and you'll see the system trade on a live market. So the special offer, which is going to be good through Monday at midnight, I call the special offer, it's our Traders Corner Labor Day special offer. I call it the Full Monty. I call it the Full Monty because it's all inclusive. It covers everything. The full AI trading system. It includes the discretionary chart templates that provide absolutely beautiful signals to trade on a discretionary basis. It includes the automated strategy templates. And I emphasize these all come in templates. They're all pre-formatted. In fact, it comes with an entire workspace. We've developed a tool that, you've never seen anything like this. It's a tool that we've developed that installs the AI component onto your computer and builds your entire workspace in the click of a mouse in 30 seconds. It's really quite unique. So we're very customer service friendly. So we're also going to include, as I mentioned earlier, all of the prop trading templates. You'll have access to the YouTube live streams. And man, do we have a beautiful Discord chat group. We have it in it comes in 3 sizes. We refer to the monthly as the small, the lifetime as the large, and of course the annual as the medium. So the small, the monthly, normally is $7.99 a month. With the coupon code SAVE$200, it's going to bring the monthly cost down to $5.99 a month. If you want to go for the annual, it's a much better value. You could trade the entire year with us with the full system for $23.99, which breaks down to just $200 a month. $200 a month, you've got the most powerful AI system out there for the entire year. For the lifetime access, this is the one. This is the one that's really the best value. And if you do have the means, this has the most bang for your buck. We're running a 50% off sale for Labor Day. Not only on this system, but all of our systems for Labor Day. 50% off lifetime sales, Labor Day special. The sale ends Monday night. The system normally sells for just under $6,000. This weekend only $29.99. And listen, you're getting in at a great time. You're getting in right before the biggest update we've ever released, which is coming next Friday. So it's perfect timing, $29.99. Listen, from time to time, I always get a question, and I will call you, Carlos. I will call you, Harry. I always get a question as to some historical trade performance. And I always like to allude to our Discord community of traders. Listen, it's not a cheap system, and I understand that. And it's hard to put a value on something like this. But let me just show you in our Discord chat some of the results that some of our members are getting. Some of our members, Simon is a perfect example. Day after day, you'll see results. Let me go to the daily results channel with P&Ls like this, or Limit Up got this the other day. Thousands of dollars per day that these traders are making trading this system. So, you know, I know that you won't be disappointed. You know, if you did the $5.99 a month or even the $29.99 for the lifetime, if you have the ability to make 5 or 10,000 in a single trading session, you won't be disappointed. A lot of the webinars I do, they say, well, how does it look on a back test, on a longer time frame? We have a professional trader who's a member of our community named Robert. Robert, I won't say which company he's with, but he's with another company and he purchased our software. And he happens to be a professional at optimizing these strategy templates. So you'll also have the benefit of gaining access to his personalized templates, which are professionally done in a very unique way. But this is a test that he ran over from January 1st to this month of August 15th, I believe it goes back. And you can see that beautiful equity curve, about $40,000 on the NQ. He did another one on gold for about $22,000. Just a beautiful, very little drawdown, about $2,300 in total drawdown, but it made over $21,000 or $22,000 from January 1st to August 3rd. So even on a little bit of a longer time frame, you'll find that these strategies deliver. Simon made $16,000 last week, trading just one day over 7 prop accounts. Today, the worst trader in the world, even the worst dancer in the world, was able to pull off 1,390 in my Apex accounts. So this is a system that's delivering results. So I want to end up with just one last message. I want to wish everybody really a blessed Labor Day weekend. I know that we work all year long, even if you don't have a job, you know, a technical, a quote unquote working job. Maybe you're caring for somebody that's ill, you know, or that you're a mother or a father or a parent. Listen, my hope is this weekend you're able to spend some quality time with the people that you care about the most. It's time to exhale, and we'll get going on Tuesday. And I come with a message of hope today. If your trading journey has been filled with potholes, speed bumps, if it's been as miserable as mine and you've blown out a dozen trading accounts and you talk to yourself at night, we have potentially a game changer in your trading trajectory. And my phone number is right here. If you leave your name and number in the chat box or you call the number, I'm answering the phones over the whole Labor Day weekend. So my hope is that you'll join me tomorrow on YouTube Live at 9:30, and ultimately that you'll come aboard for Labor Day weekend. Thank you very much for your time. And Anthony, I'm going to turn it back over to you.
Thank you so much, Rory. Those strategies look amazing. Congratulations to you and your team over at Right Line Trading on developing such a sophisticated system. Ladies and gentlemen, if you struggle with human error, over trading, inconsistent results, and blowing out your proper live accounts, that would be me, and probably a lot of us, then Mr. Rory Powers over Right Line Trading has a solution for you. It's called the AI Auto Trader. You can learn more by clicking on the link in the chat box. Thanks again, Rory, for making such a generous offer for our audience.
Thank you for having us, Anthony. We really appreciate Traders Corner. Thank you.
Oh, we appreciate you being here as well.
Thank
Well,
you.
ladies and gentlemen, that concludes our online trading summit. The staff at Traders Corner wants to thank you all for joining us today. It's been an informational packed event, and we hope you all enjoy the long Labor Day weekend. The replay will be on our YouTube, and let me put that into our chat here. Hold on one second. Let me double check this link. Okay. All right, so I put the link into our YouTube in case you want to rewatch it and catch some of those deals. So yeah, thanks again. You know, the YouTube will be it's in the chat there, and you can rewatch and get information and everything and learn some things too. Traders, thanks for spending your day with us, and have a blessed, profitable week, month, and year. So long.